Yes, sir. Now the next topic is trail balance. Yes, sir. Why you need to attend my class? First thing, why you need to attend my class? What is the reason why you need to attend my class? So within the less time, within very less time, I will conceptually cover all the topics what is there in this. Conceptually cover each and every line what is there in this. First thing. Second thing, and what are the questions asked in the exam and where the students are committing the mistake. If you attend my class or if you are watching this video, sure shot I will cover those areas where students are going through the mistakes and how to have the free hand on the exam. See, there are certain questions. When you are tackling those questions, those type of questions previously at least you have to solve once. Then only you can able to solve. Otherwise, these are not that easy to solve at the first instant in the exam. So, what are all the previously asked questions in the exam, and conceptually I will cover what is this trail balance and all these things, right? Right. Yes, sir. Come, sir. Yes, sir. What is this accounting, sir? Sir, what is this accounting? Sir, accounting, sir, first thing I am not asking you to mug up. First thing, the definition what I am covering is given by AICPA, American Institute of Certified Public Accountants, and the same definition is followed by our ICI in our materials. I am not asking you to mug up, but to tell about trail balance, I want this definition of accounting, right? Yes, sir. Now, what is this accounting, sir? Accounting is an art of recording. Accounting is an art of recording, classifying. Accounting is an art of recording, classifying, summarizing of what, sir? Accounting is an art of recording, classifying, summarizing of what? Financial transactions and events. What, sir? Accounting is an art of recording, classifying, summarizing of what? Financial transactions and events which are in terms of money. Which are in terms of money. Yes, sir. Now, accounting is an art of recording, classifying, summarizing of what? Financial transactions and events which are in terms of money. And that recording, classifying, summarizing have to be done in the way I like, or it should be done in a systematic manner. It should be done in a systematic manner. In a systematic manner. So, accounting is an art of recording, classifying, summarizing of financial transactions and events which are in terms of money in a systematic manner. And for what purpose, sir? To interrupt the results. What, sir? To interrupt the results. Sir, why you are covering this? Yes, sir. Wait, sir. Now, accounting is an art of recording. This recording is done in a book called journal. This classification is done in a book called ledger. Journal and ledger are known as books of accounts. Those two only known as books of accounts. Now, accounting is an art of recording. First record, sir. Where, sir? In a book called journal. And then those transactions what you have recorded, classify it, sir. Where I need to classify? In a book called ledger. Sir, why there is one more book? If journal is there, what is the need of one more book called ledger? Sir, if I am asking a question like what is the sales for the total period, or what is the purchases for the total period, or how much is your salaries expense, or how much is your total wage expense, or how much is your insurance expense, or what is the total of particular interest expense. If I need to answer the questions like what is the total of your sales, what is the total of your purchase, what is the total of your salaries, and what is the total of your wages, and what is the total of your other expenses and other income, with the help of journal, I am not in a position to answer these questions. Yes, then what is the use of this journal? Sir, in the journal law, what I am doing? which account need to be debited, which account need to be credited. In journal, I am just recording and I am telling to the whole world which account is debited and which account is credited. But with the help of journal, I am not in a position to answer the questions like what is the total of your sales, what is the total of your purchase, what is the total of salary expense, and what is the total of other expenses, and what is the total of other income. Now, to answer these questions, there is one more book, that book is known as ledger. To answer these questions, there is one more book, with that book is known as ledger. What is meant by ledger, sir? Ledger is a principal book in which all the accounts of the concern is present. What, sir? What is this ledger? Ledger is a principal book in which all the accounts of the concern is present. Oh, so this is a book and it is a principal book, and in this book law all the accounts of the concern is present. What is an account, sir? What is this account, sir? An account is a summary of all the transactions relating to a particular head or item. What, sir? An account is a summary of all the transactions relating to a particular head or item. Salary account. What is meant by account? An account of summary. Summary of what? All the transactions relating to that salary. The summary of all the transactions relating to sales. The summary of all the transactions relating to purchase. What is your cash purchase? What is your credit purchase? All these things I can verify from this account. Now, what is this ledger? Ledger comprising of all the accounts of the concern. Oh. Now, what is the use of this ledger? To determine the balance. What, sir? To determine the balance. Now, with the help of ledger, I determine the balances of accounts. What, sir? With the help of this ledger, I determine the balances of the ledgers. Matlab, what is the total of sales for the period? What is the total of purchases for the period? What is the total of salary expenses? All this total incomes, expense and other items, all these things I am having in my hand. What is the totals? Okay, sir. Now, I am an accountant, sir. Yes, sir, I am an accountant. Yes, sir. My MD or my CFO or my CEO, whoever it may be, finance head, called me and asked, please tell the total of debtors balance. Please tell me total of debtors balance, or please tell me total of what is the balance which is due from Mr. Ram. Okay, sir. Now, what happened in a medium average organizations? Do you know how many ledgers are there? Bare minimum you will have some 2000, more than 2000 ledgers, sir. You will have more than 2000 ledgers. Matlab, more than 2000 accounts in the ledger. More than 2000 accounts in the ledger. Now, I started in the morning. Where is that Ram account, Ram account, Ram account, Ram account, Ram account? So far I didn't find. Are you getting, sir? Okay, sir. Now, I want what is the total sales. I am searching where is that sales account, where is that sales account, where is that sales account. I want total of purchase. I am searching where is that purchase account, where is that purchase account, where is that purchase account in my ledgers. So, do one thing, sir. Prepare one statement. What, sir? Prepare one statement. In that statement lo show everything. Matlab, my sales total is this much. My purchase total is this much. My capital balances as of now this much. My liability balances as of now this much. My asset balances as of now this much. That statement is nothing but trail balance. Why it is naming it as trail balance? First of all, this balance, this statement comprising of what? Balances that is taken from where? Ledger. Okay. What is this balance? A statement which comprising of balances of all the accounts which is opened at the ledger. Now, this is okay. Then why it is called as trail? Finally, I will prepare one balance sheet. What is meant by balance sheet? A sheet which comprising of balances of my assets and balances of my liabilities. Before going to that stage, to know my arithmetic accuracy, whether that double entry system is followed properly or not, every debit has the corresponding credit or not, whether this is prepared as per the double entry system or not. To know what, sir? Arithmetic accuracy. To know what, sir? Arithmetic accuracy. What I am preparing, sir? I am preparing trail balance. Now, for every debit I gave one credit, and with that equal amount I gave. Double entry system of bookkeeping means the total of debits must be equal to total of credits. What, sir? The total of debits must be equal to total of credits. If the total of debit is not equivalent to the total of credit, then somewhere you have committed mistake. But if your total of debits is equivalent to total of credit, means it does not mean it is free from mistakes or omissions or errors. Sir, what you are talking? Wait, I will tell. Sir, error of principle is there. If you commit one error of principle, but still your trail balance will agree. Sir, error of omission is there. Sir, if you completely omit to record one transaction, still your trail balance will tally, but that is not the correct trail balance. Are you getting, sir? Just because your trail balance is agreed, you are not in a position to tell what I have did is correct, right? But if your trail balance is tallied, means there is a reasonable assurance that what you have done is correct in the form of journal and in the form of ledger posting. Are you getting, sir? Now, what is this trail balance? A trail balance is a statement. This is not account. This is not as per your double entry system of bookkeeping. What is that account and all? And this is what, sir? This is purely one statement which is prepared after your ledger to know what and all the balances in a statement. What is the total of sales? What is the total of purchase? Instead of verifying ledgers instead of verifying that accounts, better have that total balance in a statement. And the total of debits must be equal to total of credits. If your total of debits is not matching to your total of credits, then your trail balance, what you have did in the form of your journal and what you have done in the form of ledger, somewhere you have committed your arithmetic accuracy. Trail balance is prepared in order to check your arithmetic accuracy of double entry system of bookkeeping. Are you getting, sir? Yes, sir. Now, sir, why this trail balance? What is the use of this trail balance? Sir, I need to prepare trading account as a part of my final accounts. I need to prepare profit and loss account in the form of final accounts, and I need to prepare one balance sheet. This trail balance helpful to prepare financial statements. Sir, how my trail balance help to prepare financial statements? Trail balance comprising of what, sir? Trail balance comprising of your assets, liabilities, expense, income, capital. Trail balance consists of your assets, your liabilities, your expense, your income and your capital. Okay, sir. Asset will always have which balance, sir? Debit balance. Liability will always have which balance, sir? Credit balance. Expense will always have which balance, sir? Debit balance. Income will always have which balance, sir? Credit balance. Capital will always have which balance, sir? Credit balance. Now, once you are having your trail balance in your hand, this trail balance consists of what? Your assets, your liabilities, your expense and your income and your capital. All your assets will come and sit in your where? Balance sheet lo assets side. All your liabilities will come and sit in where? Balance sheet lo liabilities side. All your expenses, whether it is a direct expense or indirect expense, Direct expense will come and sit in where? Trading account. Direct expense in relation to purchase. Indirect expenses in relation to purchase. Now all indirect expense like interest, all these things will come and sit in where? Your P&L account. Your P&L account, here it is your trading account. And incomes, your sales will come and sit in your trading account, and your other incomes will come and sit in your P&L account. Capital will come and take place in your balance sheet lo liability, as it is an internal liability. Are you getting, sir? Now with this, the help of your trail balance is acting as a bridge in between what and what? Ledgers and your final accounts. Are you getting, sir? Trail balance is not prepared for the period ended. It is prepared as at a particular date. The balance is what it is showing as at a particular date. Sir, in other words, as per the traditional approach, personal accounts will be there in the trail balance, real accounts will be there in the trail balance, nominal accounts will be there in the trail balance, right? Yes, sir. Personal account once again might have debit balance, or it might also have credit balance. If a personal account is having a debit balance, means it is nothing but asset will come and sit in your balance sheet lo asset side. Sir, if a personal account is having credit balance, means in the balance sheet lo it will come and sit in your liabilities side. It is come and sit in your liabilities side. Real account is nothing but asset accounts. Asset accounts will always have debit balance. It will come and sit in your balance sheet lo asset side. Nominal accounts is nothing but expenses and incomes and losses account. Now once again, some part will go to trading and indirect will come and sit in your P&L. Are you getting, sir? Now for what purpose you are preparing your trail balance? To know the arithmetic accuracy, whatever you done in your journal and whatever you done in your ledger is correct or not. If the trail balance is tallied, then it is a reasonable assurance that whatever you have done is correct. This is all about your trail balance. Now it is a statement which showing what, sir? Your assets, your totals, and it is answering so many questions like the total of sales, the total of purchase, the total of capital, and what is the capital balance as on the end of this period, and the assets and the liability balance at the end of the period, right? Right. Now this trail balance can be prepared in journal format, or it can also be prepared in ledger format, but not required from exam point of view. Journal form is nothing but give one serial number, give the name of the account, ledger folio, debit, credit, right? Right. Give your serial number 1, name of the account, ledger folio, it is having debit balance, take to the debit. One more account, name of the account, ledger folio, it is showing credit balance, means show that is a credit balance, right? Right. Next. No, sir. Ledger point of view. Ledger means it is similar to that of your ledger account. So debit balances will have this side, credit balances will have this side, and your trail balance will be tallied. Are you getting, sir? Now the trail balance what you have prepared, maybe it may be in the journal format or in the ledger format. Okay, sir. Yeah, now I will go into one problem. Yes, sir. Now, yeah, this is a past examination question, sir. Yeah. One of your clients, Mr. Singhania, has asked you to finalize his accounts for the year ended 31st March 2022. Till date, he himself has recorded the transactions in the books of accounts. As a basis for audit, Mr. Singhania furnished you with the following statement. Okay, sir. Yes, sir. First of all, the total of debit and total of credit is tallied. Don't come to a conclusion what he has done is correct. Just go and check whether the assets are having debit balance or not, liabilities are having credit or not, expenses are having debit balance or not, incomes are having credit balance or not, capital is having credit balance or not. Okay sir, go and check. What is the Singania's capital? Means as on this date, the total balance is showing 1556. What sir? As on today, the balance in the Singania's capital is how much? 1556. Capital account will always show credit balance. Here also it is showing credit balance. Okay sir, correct. Singania's drawings. The drawings which is not adjusted with the capital account, so far drawings will always have debit balance, and it is showing 564, and it is also have debit balance, and it is also showing debit balance, nothing wrong in that. Next, what is this Singania's drawings? This Singania drawings, that amount is not so far adjusted with what? Capital. In other words, as on the today, what? As on the date I prepared my trail balance, the total of the drawings is this much, which is not adjusted to the capital account. Next, leasehold premises is nothing but my asset. Asset will always have debit balance. Here also it is showing debit. Yes. Sales will always have credit balance. Here also it is showing credit balance. Correct. Yes. Now, due from customers means amount is due from them. For us it is, for that Mr. Singania, it is asset due from customers. So, due from customers is asset to Mr. Singania. It is showing credit balance. It should show a debit balance of 530. They are showing on the credit side. You have to write 530. Sir, everyone will write this 530, sir. But you need to tell in the notes below. Due from customers is the asset. What sir? Due from customers is the asset, and it should have debit balance, but in the given problem it is showing credit, which is wrong. Now I am taking it on the debit side. That note you have to mention, sir. Just plainly taking that credit to debit will not fetch you marks, right? Yet that's the thing what you are supposed to write in the notes. Next one, purchases. What is the total of your purchases, sir? Purchase is an expense. Purchase should have debit balance 1259. Here also it is showing debit balance. Next, purchase returns, sir. So purchase returns should have credit balance, sir. Purchase will always have debit balance. Purchase returns will always have credit balance. Are you getting? It is showing on the debit side. So this amount you need to write on the credit side. When I purchased the goods, entry purchases account debit to creditor. When I am returning those goods, he is no more a creditor for me. Unnecessarily I credited that creditor. Now cancel that liability, debit that creditor, creditor account to debit. Conceptually speaking, you are supposed to cancel purchases, right? Purchase, reduce your expense or some asset which is decreasing. But instead, I want to know the record of the purchase returns. I want to know the track of this purchase returns. Use purchase returns account. So, if you are writing purchase returns account, then I will check whether what is the quantum of purchase returns is there throughout the year. If there is a large number of purchase returns is there or quantum wise amount is also high, then I need to have to look over what is this purchase returns and why these purchase returns are taking place quite often. Is it a genuine reason or something the other reasons are there? I need to go through as a management. So better when these goods were returning, conceptually speaking, creditor account debit to purchase, fine, that ends the matter. But don't credit your purchase, credit your purchase returns, and at the time of finalization, closing entries, I will show what will happen to this purchase returns account, right? Right. Purchases will have debit. Purchase returns is nothing but the cancellation of the purchase what you have debited earlier. Now it should show the credit balance, but unnecessarily they are showing on the debit, show it on the credit 264. Next, loan from bank. Yes sir, it is a liability. Liability will always have credit balance, and here also it is showing credit, fine. Trade payables, sir, it is a creditor, it is a liability. Now I purchased some goods from the creditors and trade payables, and it is a liability. Liability have to show credit balance, but here they are showing what? debit balance. Are you getting? You should be able to tell whether it is an asset or liability or income or expense. Then only you can able to tell if it is asset means debit balance, liability means credit. Trade payables is what? Trade payable is a liability, will always have which balance? Credit balance. But what they are showing on the debit, take to the credit 528. Next. Trade expense, sir. It is an expense. Expense will always have debit balance. Here also they are showing debit balance. Nothing wrong. Next. Cash at bank is an asset. Here also it is an asset. Asset will always show debit balance. Here also they are showing debit balance. Bills payable. Bills payable is a liability and it is showing a liability, but they are showing on the debit side. Wrong. Liability will always have credit balance. Here it is mistakenly they are bringing into the debit side. You need to show it on the credit side. Next. Salaries and wages are the expense. Expense will always have debit balance. Here also it is showing debit balance. Correct. Next. Inventory. This is the opening inventory and inventory is an asset. Asset will always have the debit balance, but here it is showing credit. Wrong. Bring to the debit side. 264. 264. Next. Rent and rates. It is nothing but what, sir? My expense. Expense will always have debit balance. Here it is showing debit. Correct. Sales will always have credit balance. Sales returns will have debit balance. Thus this 98 will come and sit on the debit side. Are you getting, sir? Same logic will apply here also. So the entry for sales or credit sales, debtor account to debit to sales. I increased my debtor and I also increased my sales. But when you are returning these goods, then you are supposed to be reduce the debtor. He is no more a debtor once he is returning the goods, and you are supposed to reduce your sales also. Now conceptually speaking, the entry sales account to debit to debtor account. Sales account debit to debtor account. But instead of debiting sales, to have the track of your sales returns, write sales returns account to debit to debtors account. Now the sales returns have to have debit balance, but here it is showing credit. Bring to the debit side. Right? Now the closing inventory will be always on the, if it is on adjustments, means not to be adjusted on the trail balance. If they are asking adjusted trail balance, then only you are supposed to be adjust this closing stock in your trail balance. But if they are asking just trail balance, means this adjustment relating to the closing stock will not be required. Sir, what is this closing stock, sir? Sir, I purchased the goods. I am not maintaining any account for the closing stock. I purchased. Closing stock will be valued on the physical verification. I am not maintaining an account for closing stock in my books of accounts. What I am doing, sir? I will physically count and I will bring what is the value. When this is done after preparation of trail balance, I will physically go and I will count what is the total of my closing stock, and that total of my closing stock I will bring to my books after preparation of my trail balance. The same thing can also be done before preparation of trail balance. In that case, I need to total my closing stock and I need to recognize this asset, closing stock asset account debit to this closing stock is there in my purchases. Where, sir? This closing stock is there in my purchase. The moment I purchased, I am writing one entry, purchases account debit to cash. If not even a single unit is sold, the entire quantum will go and sit in my closing stock. Now purchases low, closing stock is there in my purchase only. Entry closing stock account debit to reduce your purchase expense, closing stock to purchase. If you are passing this entry closing stock to purchase, then you are opening one ledger account for closing stock. With the help of the ledger account, the closing stock will come and sit in your trail balance and your purchases will have reduced purchase. But closing stock is not there in the trail balance, means this entry you are not at passed. Now also you don't pass for the preparation of trail balance. Are you get? If they are asking adjusted trail balance, now you are supposed to show the closing stock. But the question, they are not asking you to prepare adjusted trail balance. They are asking you to prepare trail balance. Closing stock will not come and sit in your trail balance. When the closing stock will come and sit in your trail balance, means when you are passing one entry, that closing stock to purchases. If you are passing this entry before preparation of trail balance, then this entry will come in. I will teach in the inventory chapter lo periodic system and perpetual system of inventory. If you are maintaining perpetual system of inventory, then you will maintain one account for your stocks, but you are following periodic system, then you are not maintaining any accounts for your inventory. You need to verify physically, you need to count, and that counted figure you are supposed to bring that into your books of accounts. There is a time gap between your preparation of trail balance and your counting of your closing inventory, all these things. That is the reason that closing inventory is not form part of your trail balance, it is form part of your adjustments. I hope you got the clarity. Now, if you total all these things, your trail balance will get tallied. I will show the answer. Yes, sir. Capital credit balance, capital credit, drawings debit, and then your asset, that leasehold debit, and then sales credit, and due from, there it is in the credit side, bring it to the debit, and you are supposed to write that same thing. Due from customers is an asset, so due from customers is an asset, so its balance will be debit balance. Next, purchase returns. Purchase returns account is always show credit balance because goods are going out. Balance in the creditor account is a liability, so its balance should have credit balance. So sales returns bring into the debit side. Next, bills payable, throw it on the liability side. So it is there on the debit side, throw it on the liability side. No other things. Purchases will have debit, purchase returns it is showing on the debit, throw it on the credit side, right? Next, loan from bank is also fine. Due from customers it is there on the debit, yes, in the problem it is there on credit, bring to the debit side. Next, loan from bank liability, fine. Next, trade payables 528 liability, trade expenses fine, cash at bank, bills payable, yes, salary and wages, inventory is an asset, bring to the debit side, asset 264, and rent and rates asset. Even if you check the total of the trail balance before that, before this adjustments are, before this correcting is also the same amount, after correcting is also the same amount. Compensating errors, what sir? Because of one error, other errors is compensated. Now the trail balance is tallied. Are you getting, sir? Now this is the due from customers as on today. What is the due amount from my customers? Up to this date, my sales comes to 2750. So as on today, the total of sales comes to 2750. So the trail balance is prepaid as on. So as on today, the trail purchases is this much, purchase returns is this much, loan from bank is this much. So I can happily see in a paper what happened during the year, instead of going to the ledgers and verifying what happened. In a piece of paper, easily I can see and I can tell what is my sales and what is my purchase, what is my loans are there, what is the still outstanding liabilities, still assets, what is the assets were there. This is how it works. Next, yes sir, sales returns will always have debit balance and throw it on the debit side. They have credit, they have given on the credit side, bring into the inventory opening is an asset, they are showing bills payable is a liability. Just I said no, whatever you are shifting, no, under make point you are supposed to tell why I have shifted, because this is supposed to have this balance, but wrongfully they are given this balance. That is the reason I am converting it to this balance. Then enough. Yes sir, come. Yes sir. Next discussion is what is this closing stock and what is the accounting treatment for this closing stock, and how this closing stock affecting your trail balance, sir. Okay sir. Yes sir. Sir, what is this closing stock, sir? This closing stock is nothing but unsold inventory. Sir, unsold goods is known as nothing but closing stock. Yes sir, unsold inventory. Sir, in your books of accounts lo, you are not opening one account called what sir? Closing stock account. You are not opening one account called closing stock account. You are opening purchases account when you are purchasing. You are opening sales account when you are selling. You are open one purchase account when you are purchasing, and you are opening sales account when you are selling. But in your books of accounts lo, you are not opening one account called as what, sir? Closing stock. This closing stock at the end of the year or at the end of the particular period, now you need to count physically. You need to count 1, 2, 3, 4, 5, 6 physically you need to count, and you need to tell what is the value of closing stock. Are you getting, sir? Value of closing stock or value of stock as on end of the period or end of the year. Sir, if I am opening one account for closing stock, then in my books closing stock might have some balance, sir. But I am not opening one account for closing stock in the working year. Now in the throughout the year I am opening purchase account, I am opening sales account, but I am not opening one account known as closing stock account. Okay, sir. Now, sir, I prepared trail balance. Yes, sir, I prepared trail balance before inventory taking is taken place. What, sir? Inventory taking. The process of counting your inventory, the process of valuing your inventory physically is known as inventory taking. Sir, trail balance is prepared before inventory taking and trail balance might be prepared after inventory taking. Imagine trail balance is prepared after inventory taking. When, sir? After inventory taking. Then the entry, sir. Sir, entry, sir. Closing stock is my asset. Asset balance increasing. Debit your asset closing stock account to debit. 2. Your purchases is decreasing. Decrease your purchases account. What is the entry, sir? Closing stock account debit to purchases account. Now you are opening one account for closing stock. That closing stock you need to write 2 purchases by balance carried down to balance brought down. Now your closing stock will come and sit in your trail balance when your trail balance is prepared after inventory taking is done. But if you are preparing your trail balance before taking the inventory taking, it will take lot of time, sir. Even your auditor has to come and auditor has to tell the procedure and auditor has to sit in times when the inventory taking is going on. So many legal consequences will be there in relating to inventory taking. So I can't wait until that inventory taking is taking place. Preferably I used to prepare my trail balance before that inventory taking is conducted. Yes, sir. Now your closing stock is there in your purchase account. Where, sir? In your accounts low. Imagine I purchased 100 units. What is the entry I am writing? Purchases account debit to cash or creditor. I sold some 80 units. What is the entry you are writing? Cash or debtor account debit to sales account. The balance 20 units is there in your purchases, but that 20 units is nothing but my closing stock. Meaning to say, my closing stock is there in where, sir? In my purchases account. Are you getting, sir? When I purchased these goods, I am writing one entry purchases account debit to either cash or creditor. When I am selling this, I am writing one entry debtor account debit to sales. The balance left, the 20 units is there in my purchases. Meaning to say, when I am preparing what? My trail balance before inventory taking is conducted. Now the trail balance low, you will not have closing stock. Why? Closing stock account is not open. Then where is the closing stock? Closing stock there in purchase account. Are you getting, sir? Now in that trail balance low, you will have closing stock? No, sir. You will have purchases. In that purchases only, you will have what? Closing stock. Are you getting, sir? But if you are preparing one trail balance after inventory taking is conducted, in that trail balance low, the closing stock is not there in purchases, the closing stock is there in the closing stock account. Are you getting, sir? Your purchase account is after reducing your closing stock, the balance only will be there in the purchase account. Are you getting, sir? Yes, sir. Now, when you have adjusted your closing stock in your purchases, that purchase is typically known as adjusted purchase. What, sir? After adjusting of your closing stock and opening stock in your purchase, that purchase account is adjusted purchase. And the closing stock will be the accounting treatment for trail balance. It will not come on closing stock credit side. All this I will teach in the final accounts. For the time being, what is the position of closing? What is the position of your closing stock in your trail balance? When it will appear in your trail balance? When it will not appear in your trail balance? When your trail balance is prepared after inventory taking is conducted, then your trail balance low closing stock will come. Why? You are passing one entry for closing stock. What is that? Closing stock account debit to purchases. Now, like similar to any other account, closing stock also having one account, closing stock account, asset account increasing, closing stock to purchases, reducing entry, closing stock account debit to purchases. In your closing stock account, it is showing debit balance. Purchase low, you are writing by closing stock in your purchase account. No, sir, I am preparing my trail balance before inventory taking is conducted. Then in your trail balance low, you will not have what, sir? Closing stock. Are you getting, sir? Then that purchases only you will include what? Closing stock will be there in your purchases. Now, imagine they are asking you to prepare trail balance. Adjustments low, they are telling you closing stock information. Then will your closing stock will be need pop up? I mean, it is your form part of your trail balance? No, sir. Why? Because it is there in your adjustments. Next, sir, they are provided with extract or information. What, sir? They are provided with the extracts or information. In that extracts or information low, they are telling your purchases is how much, they are telling your sales is how much, they are telling your opening stock is how much, they are telling your closing stock is how much, they are telling your debtors as how much, they are telling your creditors as how much. Is this your account wise balances or these are the extracts, sir? These are the extracts. Come to the problem, sir. I will show this problem. Yes, sir. Imagine, just look at the problem number 3, sir. In your problem number 3 low, imagine, take the problem number 2, you are having the totals, sir. In problem number 2 low, you are having totals. Yes. Come to the problem number 3. Did they total their balances? No, sir. If they are not totaling their balances, then this closing stock, what is there here? Where is this? This closing stock, what is there here? It is not adjusted with what? In this purchases. Imagine if the totals were there, if the totals were there in the form of a trail balance, then no doubt this stock is adjusted with the purchases. Are you getting, sir? If it is there in an information, like if it is there like an extract, then this closing stock is not adjusted against purchase. If it is there like what, sir? Like the totals were there, if it is there like a totals this side and this side, no doubt this closing stock is adjusted in the purchases. Now tell me, sir, this 3,80,000 is included in this 34 or it is not there in 34? It is there in the 34. How you know, sir? These are not totals were given. If totals were given and the trail balance agreed, if totals were given, then I can tell this as what? This stock is not included there. This stock is reduced from your purchases. But now this stock is not reduced from your purchase. Purchase includes this closing stock. Are you getting, sir? Once again, sir, if they are asking you to prepare trail balance and they have given balances were extracted, extracts were given, sir, if their total, sir, if this is a total, then no doubt your closing stock is adjusted from your purchases. In your purchases of 36 lakhs low, the 3,80,000 is not there. If they are not giving as a total, sir, then no doubt this is not adjusted in your purchases. Means in your this 3,80,000 were still there in your purchases. Now they are asking you to prepare trail balance, sir. Sundry debtor will form part of your assets and take on the asset side. Sundry creditor liability, sir, take on the credit side and take on the debit side. This is on the take on the debit side and this take on credit side. Life insurance premium. What is this life insurance premium, sir? Can I call this life insurance premium on this what, sir? Drawings. This life insurance premium can be treated as drawings, or it can also be treated as what? Employee life insurance premium. Employee life insurance premium. If it is an employee life insurance premium, then that is the expense of the entity. If it is the drawings, sir, if it is life insurance premium of the proprietor, then it is drawings. Preferably treat it as drawings. Now take it on the debit side. Next, motor vehicles, assets, sir. Take it on the assets means debit side. Electricity charges, take it on the debit side. Opening stock, take it on the debit side. Purchases, expense, take it on the debit side, total. Sales, take it on the income side, 36 lakhs. Income means credit side. Take it on the credit side. Trade expense, take it on debit side. Return outward, what is this return outward? Purchase returns, take it on the credit side. Purchase will have debit balance, purchase returns will have credit balance. Next, return inwards, what is this return inwards, sir? Sales returns, take it on the debit side. Next, 10% loan from Mukund, take it on the credit side. Interest on Mukund's loan, take it on expense side, debit side. Lighting, take it on debit side. Capital, take it on the credit side. Land and building, take it on the debit side, asset. Furniture and fittings, take it on the debit side, asset. Bad debts written off, loss, sir, take it on the debit side. Rent from letting off vacant land, income, sir, take it on the credit side. Drawings, take it on debit side, 40. Cash in hand, take it on debit side. Closing stock, how much is your closing stock, sir? 3,80,000. But don't take in your either debit side or credit side. Generally, this closing stock is given an adjustments. Don't take in where, sir? In your trail balance. If you want to take in your trail balance means reduce this 3,80,000 from your purchase. Then show your purchase as how much? 30,20,000. Then show your closing stock in your trail balance. Once again, this 30,80,000, if you want this 3,80,000, if you want to show it as closing stock means now take this on asset side and less this 3,80,000 from where? 34 lakhs and show your 30,20,000 as your purchase expense. But don't do that. Take purchase expense as 34 lakhs and don't consider this in your trail balance. Next one, sir. Apprenticeship premium, this is a income, sir. Take it on the credit side and legal expenses, take it on the debit side. Sir, what is meant by return outward, sir? Return outward, sir. Goods are going out. When these goods are going out, sir? Purchase returns. Purchase returns. Purchase returns will have credit balance. Return inward. Return inward means sales returns, sir. Return inward means sales returns, sir. Sales returns means what, sir? It will have which balance? Debit balance. Yes, sir. Check this problem. Sundry debtors, yes, debit side. Yes, sir. Sundry creditors, yes, credit side. Liability, life insurance premium. Assume this life insurance premium paid on employee's life. Treat it as expense and throw it on the debit side expense. Purchases, expense 34 lakhs. Sales, income, credit balance. Expense will always have debit balance. Income will always have credit balance. Next, this is expense, debit balance. This is income, credit balance. Trade expense, debit balance. Expense will always have debit balance. Throw it on the debit side. Yes, sir. Purchase outwards. What is this? Return outwards means what, sir? Purchase returns will always have which balance? Credit balance. Return inwards means what, sir? Sales returns. Return inwards means what, sir? Sales returns will always have which balance? Debit balance. Debit balance, credit balance. Loan from Mukund, liability will always have credit balance. Yes, credit. Interest, expense, take it on the debit side. Lighting, expense, take it on the debit side. Next, capital will always have credit balance, take it on the credit side. Motor vehicle asset, debit side. Next, electricity charges, debit. Stock, opening stock, debit. Next, land and building, asset, asset will always have debit balance, debit. Next, furniture and fittings will always have which balance? Debit balance. Furniture and fittings, debit, take it on the debit side. Next, bad debts written off, loss, take it on the debit side, loss will have debit balance. Next, rent, rent from letting off vacant land, income, take it on the credit side, and we consider on the credit side. Next, drawings, debit side, cash in hand 75, asset, debit side. Next, apprenticeship premium, income 20,000, credit, and legal expenses 6,000, debit. This is your answer, how it is appears. Next, sir, what about this life insurance premium? Sir, if you want to take this life insurance premium on the life of the proprietor, then consider this as drawings and add this to your drawings account. Drawings 40 is there, add this and consider your drawings at 68. I assume that the life insurance premium paid is on life of the proprietor. No sir, I don't want to take that assumption. Then take life insurance premium paid on the employees. Now it is a business expense. Take it as business expense. In our problem law, in our ICI suggested answer, they consider this as life insurance premium paid on what sir? On the life of the employees, hence business expense. Don't add to where sir? Add to your drawings account. Right? This is your answer. Yes sir. Apprentice premium, that is income sir. Like something like any, you are telling any new thing, apprentice premium, you are learning some work, and for that as an apprentice, article assistance is there, no? All that article assistance is to be called as apprentice, whether they are learning their work. In that apprentice learning your work law, you are earning some income for that. Like article stipend is there, similar sort of thing. Next, lighting, yes sir, lighting is expense, lights, yes, expense, expense will always have debit balance. Interest, interest is also debit expense. Next, loan, loan is a liability, liability will always have credit balance. Yes sir. Let's begin to the final accounts of non-manufacturing entities. Final accounts of non-manufacturing entities. What is this non-manufacturing entities, sir? Sir, if I involved in the production activity, what I involved in this, sir? Production activity. Or I involved in the manufacturing activity. Then for that manufacturing entities, they will prepare one manufacturing account. They will prepare one manufacturing account. For others non-manufacturing entities, these entities will prepare one trading account, one profit and loss account, one balance sheet. Sir, if you are a manufacturing concern, no doubt you will prepare trading, no doubt you will prepare balance sheet, no doubt you will prepare profit and loss account. But in addition to this, you will also prepare one manufacturing account. What is this manufacturing account? In the next class, I will cover when you are covering final accounts of manufacturing entities. But as this is final accounts of non-manufacturing entities, now this trading account, profit and loss account, balance sheet is my subject matter of discussion. As I am a non-manufacturing entities, as part of final accounts, I need to prepare one trading account, I need to prepare one balance sheet, I need to prepare one, I need to prepare one trading, I need to prepare one profit and loss account, I need to prepare one balance sheet. Sir, financial results, what? Financial results will be measured in terms of financial performance, financial position. This financial position which tells is known as your balance sheet. This financial performance can be done in trading account and P&L account. The net result of trading account will be either gross profit or gross loss. The net result of P&L account may be net profit or net loss. Sir, I started with the journal and then ledger and then trail balance. In this trail balance, so I am having balances of all the accounts. Now, the next step is a trading account. The next step is a profit and loss account. The next step is balance sheet. Now, after trail balance, I will prepare one trading account. I will prepare one profit and loss account. I will prepare one balance sheet. Sir, balance sheet is not an account, sir. This is a position statement which tells your balance of your all assets, balance of your all liabilities, balance of all your liabilities, balances of all your assets. Trading account and P&L account is a nominal account in nature. Trading account is a nominal account in nature. The format is to opening stock, to purchases, to direct expenses, by sales, by closing stock. The net result is to gross profit. Now, in this direct expenses law, you will have direct expense in relation to purchase of goods. What, sir? Direct expense in relation to purchase of goods. Example, wages. Those expenses which are directly incurred to bring the material into your location, to bring the goods into your location. Wages incurred. Okay, wages incurred. Next, octroi, freight inward, carriage inward, cartage. Now, these direct expenses which are incurred in relation to your purchase, direct expenses which are incurred to bring your finished goods or to bring your inventory into your present location of what? Sale. Present location of sale. Is your direct expense? Yes, sir, direct expense. What? Wages, octroi, factory. Wages, octroi, freight inward, carriage inward, cartage. All these things will comes under what? Direct expense. Now, opening stock, purchases, direct expense, gross profit, sales, closing stock. Now, closing entries. What, sir? Closing entries. Sir, what is this closing entries? Closing entries, sir. Close your what? Opening stock. Close your what? Purchases. Close your what? Wages. Close your what? Direct expense. Close your what? Sales. Close your closing stock and transfers to where? Trading account. Opening stock is the asset having debit balance. Now close means you have to credit that and debit trading account. This is known as closing entry. Trading account to debit to what? Opening stock. Trading account to debit to purchases. Trading account debit to wages. What, sir? Wages. Trading account debit to wages. To freight inward. To carriage inward. To octroi. What is this? Trading account debit to opening stock, purchases, wages, freight inward, carriage inward, octroi. Transfers from which account to which account? From trading to all these. Sir, what is the closing entry for purchase returns? Sir, in your trail balance, if purchase returns are still appearing, means the closing entry is not passed. Now you pass that closing entry. What is the closing entry? Purchase returns will always have which balance? Credit balance. Now debit purchase returns account to debit. Purchase will always have debit balance. Credit your purchase. Sales returns will always have which balance? Credit balance. Now debit your sales and credit your sales returns account. Sales returns account. Very good. Next. Sir, the end result is gross profit. Actually, this will be transferred to your P&L account. In your trading account lo, you will write trading account lo you will write to opening stock, to purchase, to direct expense, by sales, by closing stock. By sales, by closing stock. Now the gross profit will be transferred to your P&L account. Which account? P&L account. If the trading account is having credit balance, means credit side is more, debit side is less, this account is having profit entry. Trading account to debit to P&L account. If the trading account is having debit balance, means to cancel that, credit your trading account, debit your P&L account. P&L account debit to trading account. This is for what? Gross profit. This is for what? Gross loss. Everyone, next sir. Once this trading account is completed, now you are supposed to be draw one more account which is known as profit and loss account. Profit and loss account. Profit and loss account lo, if it is gross profit, means by trading account. By trading account. By indirect income. What is that indirect income? Like discount received, bad debts recovered, like profit on sale of asset, profit on sale of asset, interest received, dividend, interest income, dividend income, all your other incomes will come and sit in where? Profit and loss account. This side you will have expense. You will have with what? To net profit will be transferred to where? Capital. Net profit will be transferred to where, sir? Capital. Now, in your P&L account lo, if the credit side is more, means you are having profit. Credit side, this is a nominal account. Credit side you will credit with what? All your incomes. All incomes. Debit side, all expense. If your incomes is more, expense is less, now you end up with what? Profit. What is that profit? It will be transferred to capital account. Net profit. What is the closing entry for P&L account? If credit side is more, the P&L account is showing credit balance. Now, debit that P&L account to cancel. Credit your capital account. Now if P&L is showing debit balance, now capital account to debit to P&L account. P&L account debit to capital, capital account debit to P&L. This is for what? Net profit. This is for what? Net loss. Now come to some practically how these things will work, sir. Sir, this is your trail balance. Trail balance consists of asset, liability, income, expense, capital, drawings. Assets will always show debit balance. It will go and sit in balance sheet asset side. Liabilities will always show credit balance. It will go and sit in liabilities side of balance sheet. Incomes will always have credit balance. It will come and sit in your income side of either your what? Trading account or P&L account. Expense will have debit balance. It will come and sit in where? Either trading account or P&L account debit side. Capital is a internal liability, will have credit balance, balance sheet low, liability side. Drawings will be adjusted from the capital by way of reduction. Less drawings means when you are having trail balance in your hand, all asset accounts will always have debit balance. Will go and sit in where? Balance sheet assets. All liability will have credit balance. Will go and sit in where? Balance sheet liability. All expense will have which balance? Debit balance. If it is direct expense, trading lo debit. Indirect, P&L lo debit. Next. Now all your nominal accounts which are appearing in where? Trail balance will get closed. And transfers to either trading or P&L. All your assets account and liabilities account will be balanced and carry forward to the next period with the help of balance sheet. If it is a nominal account, will close and transfers to trading or P&L, either income or expense. Neither income nor expense, then it will be asset or liability, will be carry forward balanced and will be carry forward to balance sheet. And nominal account closed and transfers to trading or P&L account. Now come to the closing stock adjustment. Sir, closing stock is already form part of trail balance. It is already appearing in a trail balance. Means I passed one entry, adjusting entry, closing stock account to debit to purchases. If in my closing trail balance low, if closing stock is there, means I passed this entry, closing stock account debit to purchase account. In my trail balance low, closing stock will come and sit. Now you will not have what? Trading account low, you will not have buy closing stock. Why? Because this is already reduced from where? From purchases. Why we are actually taking closing stock on the credit side, as it is not a nominal account, but why you are taking? No sir, this is nothing but cancelling your closing stock in the purchases. What? Cancelling your closing stock in the purchases. Example. To purchases, how many units? 10. Buy sales, how many units? 8. Can I compare this 10 with 8? No. Why? Matching principle. Now I am having option number 1 to reduce that 2 here or to take the 2 here. Instead of reducing from purchases, buy closing stock, take that 2. Purchases debit side 10, closing stock if you are taking on the credit side, ultimately you will have debit impact only for 8 units. Compare this 8 with this 8. Are you getting? This is what your matching principle is all about. Now what happens, sir? This closing stock is there in the trail balance. Don't take to the credit of what? Trading, because already purchases were reduced with the help of one entry. What is that entry? closing stock account debit to purchases. With the help of that entry, closing stock account debit to purchases, already my purchases were reduced. You are not supposed to take this closing stock on the credit side of trading. Better take this closing stock on the asset side of what? Balance sheet. No, sir. This closing stock is there in the adjustments. If adjustments lo they are giving closing stock means that is not adjusted with what? Purchases. This is not adjusted with purchases. Now you adjust this closing stock with the purchases. Then what is the entry? Right. Closing stock account debit to trading account, because already purchase was closed and transfers to where? Trading. Now buy closing stock, immediately bring this closing stock to where? Balance sheet lo asset. Closing stock. Sir, two things. When this closing stock is already adjusted with what? Purchases. Then this closing stock will be appeared in your trail balance. Now that closing stock will sit in where? In your balance sheet. It will not appear in your trading account. Now closing stock is not appearing in where? Trail balance. As adjustments, closing stock is there. Now it will have two impacts. One is on the credit side of trading. One more impact on the balance sheet asset side closing stock. I hope you got the clarity relating to this closing stock adjustment. Almost every problem will have this adjustment. Sometimes they will provide with adjusted purchase. Adjusted purchase means opening stock plus purchases less closing stock. What? Opening stock plus purchase less closing stock. This is what? Adjusted purchase. If adjusted purchase is there, where? In your trail balance, and closing stock also there in your trail balance, will you take? No, directly take this adjusted purchase to where? To trading account debit side. Now opening stock also don't consider. Opening stock also don't consider. Are you getting? Next. Adjustments lo first one, sir. Expense related adjustment, that is outstanding, prepaid. Income related adjustment, accrued but not received. Accrued but not received. Received in advance. Capital related adjustments, interest on capital, interest on drawings. One more adjustment is stock loss due to abnormal loss because of fire or theft, whatever it may be the reason. Stock loss. One more adjustment is your provision. Provisions like provision for bad debts or provision for discount on debtors. Provision for bad debts or provision for discount on debtors. If I cover all these things, then nothing is there. You will become pro in these adjustments and all this stuff. I hope you got clarity. What is this trading? Trading account is open to know the gross profit. P&L is open to know the net profit. So close all your closing entries. Now closing entries for indirect expense. Indirect expense. So expense will have debit balance. To close, credit that indirect expense. Debit your P&L entry. P&L account to debit to indirect expense. Indirect expense. Now come to the indirect incomes. So closing entry. So incomes will have credit balance. To close, debit that. Indirect income to P&L account. Indirect income to P&L account. These are closing entries. Next. Come to the Yes, sir. So these are all the adjustment part where we are going through this adjustment part. First one, outstanding expenses, sir, means expenses incurred but not paid. What outstanding expenses means? Expenses incurred but not paid. In other words, expenses payable. Now there are two issues. Now expense payable is appearing in trail balance, where expense payable is appearing in trail balance, not in adjustment. Or expense payable is appearing in adjustments. Expense payable is appearing in adjustments, not in trail balance. This is expense payable is appearing in trail balance. This is expense payable is appearing in adjustment, not in trail balance. One more, both the places it is there. Very rare scenario, sir. Both the places means adjustment lo it is there and trail balance lo also it is there. I will cover, please see. Sir, wages expenses outstanding. What, sir? Wages expenses outstanding. For that you wrote one entry. Wages is the expenses. Wages is the expenses. Wages account to debit to outstanding wages. Wages account debit to outstanding wages account. This is the liability. What, sir? This is the liability. This is a representative personal account. How outstanding wages is the representative personal account? It is representing that persons to whom you are payable this wages. This is the nominal account expense. You already wrote this entry in your books of accounts. You opened one ledger account for outstanding wages. Outstanding wages lo you wrote by wages. To balance carried down. This is not a nominal account. To close this account and transfers to trading. This is what? A representative personal account. Wages is what? Nominal account. Wages is what, sir? Nominal account entry. Wages account debit to outstanding wages. Wages account lo to outstanding. Outstanding wages lo by wages. To balance carried down. By balance brought down. This is what, sir? Liability. Will be shown in where? Balance sheet. First of all, have you opened one account for outstanding wages or not? Yes, sir. I opened one account for outstanding wages. That is the reason it is appearing in where? Trail balance. Directly bring and throw it in the liability side of balance sheet. Nothing. No, sir. It is there in the adjustments. Adjustments lo they are telling wages outstanding 2000 or wages outstanding for 2 months per month 1000 or wages payable, whatever the name it may be. Are you getting, sir? Yes, sir. No doubt in that. Outstanding wages ki wages it is, whatever it may be. Very good, sir. Now, already some wages is there in your trail balance. Yes, sir. Obviously, some wages will be there. Now, when you are presenting trading account to the existing wages key, add this outstanding wages and bring to the outer column total amount. And this outstanding wages what they have provided, take to the balance sheet lo, liability side lo, outstanding wages. Balance sheet, liability side, outstanding wages. Balance sheet. Outstanding wages. How much? Sir, what you are babbering? No, sir. Very meaningful I am babbering. What I am telling means, sir, when this outstanding wages, it is not accounting. If something is given in the adjustments, means here, if something is given in the adjustment, if something is given in the adjustment means accounting is not done so far. Now you do the accounting. What is this accounting? Debit aspect and credit aspect. Now you give. What is the entry actually? wages account debit to outstanding wages. Now I am not in academically, I can't go back and open the wages account and to outstanding wages and to bring that balance. Instead of doing all this stuff, open your trading account to wages, what is given in already trial balance, add outstanding wages, outer column low balance amount. Are you getting, sir, what I am telling? Everyone? Next, sir, trail balance lo wages is there, outstanding wages is there, outstanding wages is a liability. Adjustment lo 1 month wage is outstanding means in this above entry lo, in this above outstanding wages lo, this is not included. What? This is not included. Now you include means what is the entry? Same entry. Wages to outstanding. Now this for example comes to 1000. Now add this 1000 to the wages. Sir, whatever this outstanding wages already accounted, now you don't do anything. Now what I am supposed to do? Open trading to wages, the given in the trail balance, add what is given in the adjustments. Immediately come to the balance sheet, outstanding wages, what is given in the trail balance, add this outstanding, total will be taken in the balance sheet or liability side. Are you getting, sir? Everyone? This is the outstanding expense, sir. In a nutshell, if I want to tell, adjustments lo, if they are telling anything relating to outstanding wages means or outstanding expense, anything relating to outstanding expense, go to the respective expense in the respective account, maybe it may be trading or P&L, to that expense, add expense given in where? Adjustments. That expense given in the adjustment is a liability not paid, go to the balance sheet and write on the liability side, wages payable. This is the first adjustment number 1. Based upon this adjustment only, in the adjustments if they are giving wages payable, salary payable, insurance payable means the amount payable will be added to the expense in the P&L because that is the expense accrual concept. Even though you are not paid, you are supposed to be account as per accrual concept what you have incurred. Now that the payable liability is there, immediately go to your balance sheet. In the balance sheet low, write on the liability side to whatever the liability side low, what is the liability? Wages payable, salary payable, whatever it may be. Next. Next one, sir. Expenses paid in advance. Sir, if you paid any expenses in advance and that is there in the adjustment. Imagine trail balance loan it is there. Imagine trail balance loan it is there. For example, sir, I paid salary in advance. Salary in advance to cash or bank. This is the representative personal account. It represents to whom the salary is paid in advance, to cash or bank. Now I will open one account. What is that account? Salary paid in advance account I will open. In that salary paid in advance account low, I will write to cash, by balance carried down, to balance brought down. This will come and sit in the trail balance. From trail balance, it will go and sit in balance sheet lo asset side. Balance sheet lo asset side. Are you getting? Everyone? Sir, trail balance lo salary is there. Salary paid in advance is there. Now what I am supposed to do? This salary will go and sit in P&L lo debit side. P&L lo debit side. This salary paid in advance will go and sit in balance sheet lo asset side. Balance sheet lo asset side. This is what your trail balance. Sir, unfortunately, trail balance lo salary is there. Adjustment lo salary paid in advance. Salary paid in advance is there. What, sir? Salary paid in advance is there. Sir, are you getting what I am discussing? Expense oriented adjustment, income oriented adjustment, capital oriented adjustments, and stock and provisions. Next, adjustment lo salary paid in advance is there means what happened actually? Salary paid in advance is not accounted. What? This is not accounted. If something is there in adjustments means accounted or not accounted? Not accounted. But when you paid salary, cash is gone. So you credited cash. So pakka you credited cash. But debit is given to whom? Instead of debit is given to salary paid in advance, you debited salary. That is the assumption you are always supposed to take. Anything expense paid in advance is there in the adjustment means when you paid this expense paid in advance, you debited the expense account which you are not supposed to do. Now, in your P&L account lo, to salary less salary paid in advance, less outer column lo amount, salary paid in advance. Immediately come to the balance sheet. Asset side, where, sir? Asset side, salary paid in advance. Are you getting, sir? Next. Sir, when you are preparing your balance sheet, you are supposed to take your assets this side, liabilities this side. Example, sir. Salary paid in advance is there in trail balance. Salary paid in advance is there in adjustments. If it is there in trail balance, directly take to where? Balance sheet lo assets. Salary paid in advance. Sir, if it is there in adjustment, then no doubt it will take in the asset side of balance sheet, and in P&L lo less from the salary, outer column lo show the salary expense. Sir, it is there in both. Wait, it is there in trail balance and it is also there in what? Adjustments. Means this is not accounted, not accounted. Now what I am supposed to do? Salary 1 lakh. Salary paid in advance 10,000. Adjustments low. Salary paid in advance, one more 2,000 they are telling. Means for this 2,000 ki accounting is not done. When you paid this 2,000, you debited the salary account which you are not supposed to do. Come to the P&L. To salary 1 lakh less salary paid in advance 2,000. Show 98,000 in the outer column. Show how much? 98,000 in the outer column. Very good, sir. Come to the balance sheet. Asset side. Salary paid in advance. Already 10,000 is there in the trail balance. That 10 plus 2. Total how much? 10 plus 2. 12,000. In your balance sheet assets. Sir, what is the entry for this when you paid? Salary paid in advance to cash only I wrote, that is the reason it is came in your trail balance as a ledger account. Salary how much? 1 lakh. But this also include a salary paid in advance 2,000. Means when you paid that salary, you debited the salary account. So can you tell the adjusting entry for this? Salary paid in advance account debit, because that is the asset. Salary paid in advance account debit, that is the asset you are supposed to debit. Credit will be given to whom, sir? Credit will be given to whom? To salary. Why? Unnecessarily you increase the expenses. How much? 2000, 2000. This is the accounting entry. Adjusting entry or accounting entry, but no one is asking you to pass this entry. They are asking you to how you will adjust in your books of accounts in the trading of P&L balance sheet. Academically, I will not write this entry. What I will do? Practically, I am supposed to write this entry, but academically, I will not write this entry unless they are asking your closing or adjusting entry. What I will do? I will directly go to salary. Now, it is credited, no. Salary will have debit balance, less this 2000. This is debited, no. Asset, no. Balance sheet, I add. Now, this 98, balance sheet lo 12. This is how it works. This is nothing but what, sir? Expense related adjustment. Done. How many adjustments are there? I said expense related adjustment, incomes related adjustment, capital related adjustment, stock related adjustment, provisions. 5. Come to the bad debts. Bad debts I will discuss in provisions, then better come for incomes. Sir, continuing with where we have left in the adjustments, I already said adjustments in relation to expense is covered. Adjustments in relation to income. Now I want to cover adjustment in relation to income. Okay, sir. Adjustment in relation to income are of two types. First one, accrued income. Adjustment in relation to expense over, sir, income. Accrued income. Accrued income. Income received in advance. Income received in advance. If it is accrued income, what, sir? If it is accrued income, or income received in advance. Come to accrued income. This one. Okay, come to accrued income. I am discussing about accrued income. Accrued income. First one, therein trail balance, therein adjustment, means it is not there in trail balance, or not there in trail balance, not there in trail balance. Third one is both. Both means what? There in trail balance as well as there in adjustments. What is this? Let's see. Sir, what is the income for accrued income as per accrual concept? What concept? As per accrual concept, even though you are not receiving, but if you are earning for this period, that is known as accrued income. I earn it for this period. Example, sir, interest income is there. What? Interest income is there. What is the entry for this accrued income, sir? Entry, journal entry. Accrued income is my asset. Accrued income account to debit. Accrued income account to debit to income account. What is this accrued income account debit to income account, sir? Rent is there or interest is there? Sir, interest is there. I need to receive this interest for a period of 12 months. But I received only for a period of 10 months. But time lapsed, time expired for 12 months. I need to receive for 12 months, but I received only for a period of 10 months. What about the 2 months, sir? Accrued, yes, sir, accrued. How you know accrued? Time elapsed, accrued, but not received. Okay. Accrued, but not received. Yes, sir, accrued but not received. How much accrued but not received? Example, some 2000. How much, sir? 2000. What is the entry? Accrued income account to debit 2000 to income account 2000. Accrued income account debit to income account. I already passed this entry. If I prepared one trial balance, now accrued income also will appear in my trial balance. How you know, sir? Because I opened one account in the ledger. Income account also will be appearing in your trial balance. Yes, sir. Now tell me, sir, this accrued income is included in your income or not included? Included. How you know? I passed one entry. Are you getting? Now what I am supposed to do? Directly take this income in where? P and L. Directly take this accrued income in where? Balance sheet lo asset side. Right? Yes, sir. Thank you. Next. Are you getting? Sir, accrued income. What is this accrued income? Income accrued but not received. What is the meaning of this term accrued income? Income accrued but not received. Right? In this law, first one there in trail balance. Second one, sir, B. This one I am talking. Not there in where? Trail balance. In other words, it is there in adjustments. Trail balance lo accrued income is there. Trail balance lo income is there. Accrued income is not there. Trail balance lo income is there, but accrued income is not there. Adjustments lo there. What? Accrued income. How much? Some X amount, like some 2000 or 1000. Now tell me, sir, accounting is done, accounting is not done. If it is there in adjustments, means accounting is not done. Means in this income law, this accrued income is included or not included? Not included. Now what you are supposed to do? When you are preparing your P and L, by income, add this accrued income. Outer column you will get what? That total income. Balance sheet lo asset side accrued income. Show that accrued income. So what is the difference between earlier case and this case? Earlier case lo, in the trail balance lo accrued income is there. Directly I take in the balance sheet. This is also directly I consider in the P and L. But this case lo what happened? The amount what is there here, to that I added this, and outer column lo I shown the amount, and this adjusted in what is that accrued income, balance sheet lo asset side I considered asset side. Are you getting? Now to the third scenario. What is this third case? Both. What is this both means? Sir, trail balance lo accrued income is there. Accrued income. Income is also there. Adjustment lo, where sir? Adjustments lo accrued income is there. Sir, here also accrued income is there. Here also income is there. Here also accrued income is there. Now what is this? This accrued income is there. What is there in adjustments? This accrued income what is there in adjustments is not accounted. Means when you are preparing your P and L, this income add that accrued income there in adjustments. This is not accounted. Accrued income. Balance sheet lo this accrued income plus this accrued income total will show it as asset. Accrued income there in trail balance plus accrued income there in adjustments. Outer column lo you need to present that what is the asset for you in the form of accrued income. Next. Next one, sir. Next one, income related adjustments is A is done, B. What is that B? This we completed, sir. I am referring this B. Are you getting? What is this B? Income received in advance. Once again, 3. Income received in advance. First one, therein trail balance. Second one, therein adjustments. Third one, both. Sir, if that income received in advance therein trail balance means already one entry is passed. What is that entry? Cash account debit. When you are receiving that cash account debit to income received in advance. Income received in advance. This entry is already passed. When you are preparing what? Trail balance. Income is there. Income received in advance is also there. Means in your trail balance flow, income received in advance is there means. What is that meaning? Means already accounting is done. Cash is coming in. This is the liability. Now what you are supposed to do? Take this income into P and L. Take this into balance sheet lo liabilities side. Income received in advance. Take this into balance sheet lo liability side. Income received in advance. Come to the second one. There in adjustments. Sir, if it is there in adjustments means what is that meaning? There in adjustments means what is that meaning, sir? If it is there in adjustment means trail balance lo you are having only income. Income received in advance is not there in trail balance. Income received in advance is not there in trail balance. Adjustments lo it is there. Income received in advance. If adjustments it is there in income received in advance means when you are receiving the cash, you are supposed to write one entry. Why? Physical cash has to be matched with the cash with the what? Books of accounts. So you are supposed to write one entry when you are receiving that cash. You are debiting cash. Credit is not received to income received in advance. Credit is given to income. Unnecessarily you credited income, but which you are not supposed to be credit your income. Because of that, this is more. Now when you are preparing your P&L account or trading by income less income received in advance, outer column show the net income. Balance sheet lo show this as liability, income received in advance. Show it as income received in advance. Once again, in trail balance flow it is not there, only it is there in adjustments means it is income received in advance means already you received some amount in the form of cash for the next period. No doubt you are supposed to debit cash because cash is coming means you are supposed to write one entry because cash, physical cash balance have to be matched with what? With the cash balance as per your books. Now entry cash account to debit to income you wrote, but you are supposed to write cash account debit to what? Cash account debit to income received in advance. But you wrote cash account debit to income only. How you know? Because income received in advance is not there here. If I wrote cash account debit to income received in advance, then income received in advance might appear in the trail balance, not recorded. Now what happened? Profit and loss account lo income less income received in advance. You will get correct income as per your accrual concept. Balance sheet lo show this as liability. Next. Next, sir, what is the next one, sir? Both. What is this both, sir? Income received in advance, therein both what? This is trail balance. Trail balance లో income is there. Trail balance లో income is there. Along with the trail balance income, you are also having what? Income received in advance. Income received in advance. Adjustments లో you are having income received in advance. Means for this income received in advance, you have credited income received in advance account only. But that income received in advance, what is there an adjustment? For that you have credited your income account. Now what you are supposed to do? When you are preparing P&L, by income in trail balance less income received in advance, what is there in the adjustments, you will get the net income. When you are preparing balance sheet, liability side, income received in advance, what is there in trail balance, add income received in advance, what is there in adjustments, outer column will show the net amount. This is what your income received in advance under three circumstances. It is there in trail balance, it is not adjustment, it is there in trail balance means already accounting is done, directly throw that figures into that respective places. There in adjustments means when you received that, you credited what? Income instead of received in advance. Both means both is there. So for that adjustments what is there, you need to provide accounting. I hope you got the clarity for this. Yes sir. Next adjustment is relating to bad debts. So a good debts which are converting into bad is known as bad debts, means a amount which is irrecoverable from the debtor. An amount which is irrecoverable is known as bad debts. This is the loss, this is the nominal account. This is the nominal account, this is the loss. An amount which is not recoverable from the debtor is known as bad debts. Okay. There in trail balance, there in adjustments but not there in where? Trail balance. Whenever it is there in adjustments means my reference is to tell not there in trail balance, there in adjustments only. Third one is what? Both. Third one is both. There in trail balance. What is this there in trail balance? So what is the entry for this bad debts? Bad debts is a loss, nominal account, debit all expense and losses. Bad debts account to debit to debtor balance is decreasing, your asset debtor balance is decreasing. Entry bad debts account debit to debtor. If I prepared one trail balance, bad debts is appearing in my trail balance and debtors also appearing in my trail balance. If bad debts is there in my trail balance means an entry is already passed, and in this debtor amount low, that bad debts amount is reduced from the debtor amount. Now what you are supposed to do? Take this into P&L as loss, take this amount directly to the balance sheet assets. Next one. What is that next one? There in adjustments means trail balance low, debtor is there. Adjustments low, bad debts is there. Where it is there, sir? Adjustments. Trail balance low, what is there? Debtors is there. Okay, sir. Now what happens, sir? The entry is not passed. How you know? If you pass this entry, so called bad debts account debit to debtors, then that bad debts account will appear in where? That bad debts account will appear in your trail balance, but that is not there here. Then what you are supposed to do? Sir, now pass that entry bad debts account debit to debtor. But in academic exams lo, they will not ask you to pass this entry. What you are supposed to do? P&L account lo write 2 bad debts. డెటార్ అకౌంట్ లో, ఇన్ దిస్ డెటార్ అకౌంట్ లో బ్యాడ్ డెట్స్ అమౌంట్ ఇస్ ఇంక్లూడెడ్ నాట్ ఇంక్లూడెడ్? ఇంక్లూడెడ్. హౌ యూ నో దట్ ఎంట్రీ is not passed? What is that entry? Bad debts to debtor. Debtor is not reduced. Now when you prepare your balance sheet, debtor balance in where? Trail balance less bad debts. Outer column లో balance amount. Outer column లో balance amount. I hope you got the clarity. But third case is yet both. What is this both? Means it is there in both trail balance and as well as adjustments. Trail balance లో bad debts 10,000 is there. Debtors 2 lakhs is there. Adjustments లో additional bad debts to be written off, additional bad debts, further bad debts, anything is same. What, sir? Additional bad debts to be written off, further bad debts to be written off, bad debts, anything is same. How much? Some 5,000. Some 5,000. Okay. Means this 10,000 what is there in the trail balance account entry is passed bad debts to debtors. That 10,000 is not there in where? Not there in your debtors. But that additional bad debts is there. What is that additional bad debts? How much? That additional bad debts of 5,000, for this an accounting entry is not passed. What is that accounting entry? Bad debts account debit to debtor. Means this bad debts is a loss, will have to be taken to P&L. Now when you are preparing your P&L, two bad debts, 10,000 there in trail balance, add additional bad debts that is there in your adjustments 5,000, directly take 15,000 to the P&L. Balance sheet లో in the 2 lakhs లో already this 10,000 is reduced, but in the 2 lakhs లో this 5,000 is not reduced. How you know? An entry is not passed. That is the reason that is there in the adjustments. Debtor 2 lakh less bad debts there in where? Adjustments, means additional bad debts. How much? 5,000. So it under the outer column 1,95,000. If someone asks what is the entry for bad debts? Bad debts account debit to debtor. What is the adjustment entry for bad debts? Same only, bad debts account debit to debtor. Next, expense over, income over, bad debts over. Bad debts is nothing but loss related adjustments. Bad debt is a loss related adjustment. Next, capital, stock, provision. Once these three done, nothing is there. Capital లో you are having adjustment in the form of interest on capital, interest on drawings. Sir, if interest on capital, interest on drawings, they have provided in the form of a percentage, 10%, 5%, whatever it may be. Example I am taking like this. Capital balance is how much? 1 lakh. Opening capital. Interest at the rate of how much? 10%. Now interest amount how much? 10,000. Now is this interest is there in where? Trail balance, there in adjustment, there in both. I don't think explanation is required because ample of examples I have covered. Easily you can tell. Interest on capital is what? Income or expense? It is an expense to the partnership. I mean it is expense to the sole proprietor. Okay sir, this is the expense to the sole proprietor, and that interest on capital is there in the trail balance. If it is there in the trail balance means entry is passed. What is that entry? Interest on capital account debit to capital account. It is cash will not paid immediately. It will be settled at the end of the period. Any settlements between capital, and that is owner and business. It will not be settled immediately, it will be settled at the end of the period. Now what is the entry for interest on capital? Interest on capital is a expense and I need to pay to the owner liability, interest on capital account debit to capital. Now that interest on capital is there in trail balance. Now what you are supposed to do? Directly debit that interest on capital to P&L, directly take that capital balance to the outer column of balance sheet liability side. Sir, if that is there in the adjustment means, now you are supposed to be calculate that interest at a rate percentage on the opening capital there in the trail balance. Now this interest on capital has to be shown in the P&L and this interest on capital need to be added to where? Capital in the balance sheet. If it is both means ample of examples I covered. Both means what? It will be said in the form of a percentage means that amount, already some amount is there in where? Trail balance, add this both and take to where? P&L, add this both low, something is already accounted that is there in the trail balance, which is there in the adjustment is not accounted, that alone added to where? Capital. I don't think here it is how they will not ask like this in this, but only in bad debts that will be more number of chances they are asking, like trail balance low they will give bad debts, additionally they will give bad debts. For that only from the starting onwards I tuned your mind to think in those lines from expense and income onwards, right. Similarly interest on drawings also. So what is the entry for interest on capital? Interest on capital is the expense to capital is the liability, add that capital, increase that capital balance. Why? Because that interest is payable to whom? Owner. Now come to the interest on drawings. Interest on drawings. What is this interest on drawings, sir? This interest on drawings is the income. What is this? It is an income. Sir, how to need to do that accounting for income? This last time capital balance is increased. Now capital balance is decreased. Capital account to debit to interest on drawings. Show this interest on drawings in where? In P&L account. If it is there in adjustments means what you are supposed to do? You are supposed to be less your capital balance by writing what? Interest on drawings. Take this interest on drawings to where? Into P&L credit side. If interest on drawings is there in trail balance means don't do anything, directly take this capital balance to the balance sheet liability side, directly take this interest on drawings to the P&L income side. But this interest on drawings is there in the adjustments means what you are supposed to do? Calculate interest on drawings. Drawings will be there in your trail balance on a percentage calculate. You are getting amounts of 500, 1000 or 1500, 2000 you are having amount. It is accounted or not accounted? Not accounted. How you know? That is the reason it is there in where? Adjustments. Okay, it is not accounted. It is not this accounting adjustment is not given so far. Now what you are supposed to do? Now you are supposed to be less your capital because of interest on drawings in where? In the balance sheet. Take this interest on drawings into where? P&L income side. Enough. More than enough. Are you getting? Capital adjustment is done. Next, stock adjustment. Stock adjustment. Yes, sir. This stock related adjustment is nothing but stock adjustment. What is the stock adjustment, sir? Stock adjustment. First one. Inventory should be valued at lower of cost or NRV, whichever is less. Inventory should be valued at lower of cost or NRV, whichever is less. Okay, sir. Inventory should be valued at lower of cost or NRV, whichever is less. Okay. What is this NRV, sir? Net realizable value. and this line is taken from AS2 accounting standard 2 valuation of inventory. From that accounting standard I am taking this line. NRV they defined, but forget about all those things. For the time being, take it as market value. But NRV is not a market value. For our convenience, for foundation level, this is more than enough. Sir, in some problems they will tell cost of inventory, in other words cost of closing stock they mean. They will give you 2,40,000. They will give you market value 2,50,000. Now inventory should be valued at 2,40,000 or 2,50,000? 2,40,000 only. You need to value the inventory at 2,40,000 only. Inventory should be valued at lower of cost or net realizable value, whichever is less. This inventory you need to value at 2,40,000 only. Next one. Cost of inventory comes to how much? 2,40,000. Market price 2,20,000. Now the closing stock should be shown in the trading account flow. By closing stock how much? 2,20,000. Balance sheet inventory should be shown at what? 2,20,000 only. What are you getting? Inventory should be valued at lower of cost or NRV, whichever is less. When it is there, market price 2,20,000 means trading account flow by closing stock you need to take only 2,20,000. Balance sheet flow asset you need to take closing stock as 2,20,000 only. Next. Next one, sir. Sir, if you remember my closing stock in trail balance, I already covered. If you remember, what if this closing stock is there in trail balance? If this closing stock is there in trail balance means already entry is passed. What is that entry? Closing stock account debit to purchases. Directly take this closing stock into where? Balance sheet asset side. But if this closing stock is not there in the trail balance, if this closing stock is given in the adjustments, means that entry is not passed. This closing stock is included in the purchases. Now this closing stock is included in the purchases. Now prepare one trading. Trading lo 2 purchases. In the 2 purchases lo this closing stock included. Now write buy closing stock in where? In trading account lo. Are you getting, sir? In this case, if the closing stock is already appeared in where? Trail balance, don't take this closing stock into trading account. Why? Because already purchase excess is reduced. An entry is passed closing stock account debit to purchases. But this closing stock is there in the adjustments means what is the entry you are supposed to write? Closing stock account debit to purchases. That entry is not recorded. Now record this closing stock into where? Trading account lo by closing stock. If it is there in the adjustments, take this into the balance sheet. Which value to take? Either it should be lower of cost or market price. Next. Next one, sir. Loss of stock, abnormal loss. Maybe it may be fire or maybe by theft, whatever it may be. Loss of stock. This is a normal, it is not a normal loss, sir. This is the abnormal loss. If it is an abnormal loss and this abnormal loss is given in where? This abnormal loss is given in adjustments. Now what is the entry for this abnormal loss, sir? Abnormal loss account to debit to purchases. Because of this abnormal loss, your purchases should reduce. Abnormal loss account to debit to purchases. If this entry is already recorded, what this entry is already recorded? If this entry is already recorded, then abnormal loss will appear in your trail balance. Then take this abnormal loss directly to the debit side of P&L. Sir, if this entry is not recorded, abnormal loss is there in the adjustments. If abnormal loss is there in the adjustments means now you write that entry. What is that? Abnormal loss to purchases, but already purchase account is closed and transfers to which account? Trading. Now purchase account is closed and transfers to trading account. Now instead of reducing from the purchase, write credit side of trading account by abnormal loss. Take this abnormal loss to where? P&L account lo debit side to abnormal loss. P&L account lo debit side to abnormal loss. Sir, if it is there in trail balance, directly take to where? P&L. If it is there in adjustments, first take in where? Credit side of where? Trading, and then take to the P&L. Are you getting? Why sir credit side? Because it is included in the purchases. Now credit this side and debit side. Sir, some insurance compensation is given. If insurance compensation is given means, now open abnormal loss account. So what is the entry? Abnormal loss account debit to purchases 2. Abnormal loss account debit to purchases. If you receive some compensation, now entry cash or bank account debit to abnormal loss by cash or bank. Balance amount will be transferred to where? P&L account. Balance amount will be transferred to where, sir? Here it is 10,000. You received only some 8,000. Balance amount will be transferred to which account? Entry profit and loss account debit to abnormal loss. Directly in this P&L lo write the abnormal loss. Here take the cost. Here take the cost. Here take the net loss. Take the net loss. Or in other words, you can also take what? P&L lo this actual cost of loss, credit side compensation. But better take this only. Don't take that this. Better take directly take this loss into the P&L account. They will not ask this extent. Sir, what I am telling, whenever they are giving abnormal loss in the adjustments means, first credit side of the trading lo take the cost. Debit side of P&L lo take the net loss. What is net loss? The net loss is loss compensation. The net loss is 2,000. That 2,000 only you are supposed to take here. But in some author books lo they have defined in they have did like take the cost on the debit side of P&L. First take here credit and then bring that same cost to debit side of P&L and buy compensation how much? 8,000. Insurance compensation 8. The net loss will be accounted as 2,000 on the debit side. Not required. Better take directly net loss only here. Right? This is what? Stock related adjustment. I think everything is done from here. Stock is done, interest on capital is done, everything is done, bad debts is done. The only leftover portion is provision. Once that provision related adjustment is done, all adjustments is completed, I will move the problems. Provision. What is this provision, sir? This provision is covered under AS 29 in accounting standard AS 29, but not required that level of provision discussion here. Provision means an amount set aside from the profit and loss account, means any provision will be taken from the P&L entry profit and loss account to debit to provision for bad and doubtful debts, profit and loss account debit to provision for discount on debtors, provision for discount on debtors, profit and loss account debit to any provision will be taken from where, sir? Profit and loss account. What is this provision, sir? Keeping some money aside in the form of future loss, future known loss where the amount is not known. Year 1 lo I created one provision for bad debts. Profit and loss account to debit to provision for bad debts. Now this bad debts will sit in the trail balance. This provision is not any outside liability. This amount I will reduce from my debtors, closing debtors. Year 2. Actual there are some bad debts. Now I will write one entry bad debts account debit to debtor account, but this bad debts I will not transfer to P&L. I will adjust from this provision. I will adjust from this provision on the balance debtors, I will create, on the balance debtors, I will create provision. I will create provision on what? After reducing this actual bad debts from the debtors, I will create a provision on the closing debtors. Now example, I created provision in year 1 entry. P&L account to debit 2. Provision for bad and doubtful debts. Provision for bad debts, how much? 10,000, 10,000. This year lo no bad debts. Year 2 lo there are bad debts. How much? Some 8,000. Entry. Bad debts account to debit to debtors. This is year 2. Bad debts account debit to debtors. How much? 8,000, 8,000. But this bad debts will be transferred to P&L, but this bad debts will not be transferred to P&L. This will be adjusted against the provision created in the last year. Entry. Provision for bad debts. Provision for bad debts. 2. Bad debts. How much? 8,000, 8,000. Now provision account lo you will have a balance of 2,000. Now on the closing debtors lo, how much provision? Imagine closing debtors comes to 1 lakh. You required a provision of 10%. Means provision required is 10,000. But already balance in the provision account is 2,000. Create only provision to the extent of 8,000. Entry. P&L account debit to provision account. Are you getting? One more example. Year 1 bad debts 10,000. Transfer N1 bad debts to P&L. They are asking you to create provision. This provision is for future bad debts at the rate of 10% on closing debtors. On closing debtors apply 10%. Next year any bad debts is there, adjust with this debtors. Adjust with this. What is the provision is there? Provision that adjust with that provision. Are you getting? We are having one problem on this. I will explain what will happen exactly. Yes, yes, I covered. No, see. Wait, I'll tell. Sir, debtor balance in which? Where? In the trail balance. Debtor balance in the trail balance. Less bad debts given in where? Bad debts given in adjustments. Less what is the provision what you have created? Current year provision. Provision for bad debts. I am talking about current year provision. On the balance amount, create provision for discount on debtors. Debtor in the trail balance less bad debts given in the adjustments, that is not reduced from the debtors, now reduce. Provision for bad debts, you are creating any provision in the current period, that provision, reduce that provision, and on the balance create provision for discount on debtors at the rate of what? Whatever the percent given in the problem. Right? Right. Sir, that one example problem last class I covered on this provision and debtors, and one more problem will be there in our CRDs. So one problem will be there exclusively on this. I will cover extensively, then you will get the command over this. Moving to one more problem in final accounts. Yes, sir. Moving to problem number 6. Yes, sir. So they are asking you to prepare final accounts. Yeah. And they have provided with the trail balance. Yes. Capital account will have credit balance. From trail balance, take this capital account to where? Balance sheet lo liabilities side. Opening inventory, take this opening inventory to the trading account lo to opening inventory. So any item which is there in the trail balance, now if any item which is there in trail balance will appear only once in either P&L or either in trading or either in balance sheet asset side or liability side. Right? Right. Next, Discount. If a discount is having debit balance means it is a discount allowed. Discount allowed will sit in P and L debit side. Discount allowed will come and sit in P and L debit side, and discount which is having credit balance means this is a discount received. What, sir? Discount received. This discount received will come and sit in where? P and L credit side. This is on P and L debit. This is on P and L credit. Next. Advertising is an expense will come and sit in P and L debit side. Next. Goodwill is the asset, intangible asset will come and sit in balance sheet asset side. Commission which is having credit balance. So commission which is having credit balance is an income will come and sit in P and L credit side. Import duty, sir, this either this import duty is paid on bringing this raw material or bringing this finished goods or bringing the asset. If that import duty is paid on bringing the asset, it will be capitalized and added to the cost of building or cost of the asset what you have bring. But it is import duty which is paid on what, sir? Raw material or FG. How you know, sir? It is raw material or FG. Sir, they are not telling like it is added to machinery and all this stuff. Means this import duty is paid on what? Either purchase, matlab this import duty what you have paid on bringing the inventory. Now what you are supposed to do? This import duty is a direct expense, expense incurred to bring inventory into present location and condition, take to the trading account. 500. Upright duty, direct expense, take to the trading account. Wages, so wages direct expense, take to where, sir? Trading. Next. Duty and clearing charges. What is this? The duty and clearing charges is this duty and clearing charges which is paid to clear that port duty charges, sir, to clear your inventory, to clear your goods what you have purchased, to clear you need to pay some clearing charges and duty, all that stuff. Expense which is incurred to bring the inventory into present location and condition, direct expense, trading or debit. Carriage inward, trading or debit. Returns having debit balance means that is sales returns. Having credit balance means that is purchase returns, and this is sales returns. Now go to your trading account and let's from where, sir? From respective purchases and sales. If returns having credit balance, that is purchase returns, reduce from where? Purchases. Returns having debit balance, that is sales returns, reduce from where? Sales. Salary, P and L item. Plant and machinery, bring to the asset side of balance sheet. Purchases and sales. Purchase is how much, sir? 2,62,700. And sales will have which balance, sir? Credit balance, and take to the trading account lo credit side. Next. Water and gas, take to the trading account. This water and gas used for what? For the production purpose or bringing the raw material purpose, direct expense to bring that whatever that inventory into present location and condition, gas and water, trading lo debit. Next. Office rent. Office rent will come and sit in where? P and L debit side. How much? 1,500. Next. Bills receivable, debit balance, asset. Bills payable will have credit balance, liability. Right? Next. Cash and bank. 6,685. It is nothing but debit asset side. Next. Furniture is also asset. Balance sheet lo asset side. And then trade receivables 18,000 asset, trade payable liability. Next. Taxes. This taxes is not that proprietary taxes what he has paid. This taxes is like that municipal taxes, house taxes, property taxes which is payable by the business to the what? To the local government and all local authorities and all. Now it is no doubt business expense, take to the P and L. Printing and stationery, P and L debit. Drawings, reduce from your capital, reduce from your capital. Next. Journal expense, P and L debit. Insurance, P and L debit 420. Interest, P and L debit 700. This is what we have seen in the trail balance. Next. Sir, always start with your problem from the adjustment. I already covered what is meant by adjustment. Accounting is not done so far Now you do accounting. That is the reason every item in the adjustment will have two. One is debit aspect, one is credit aspect. Means every item in the adjustment will come and sit in two places. Okay. Closing stock is valued at how much? 39,800. Means so far accounting for closing stock is not done. Now you do the accounting. Means this 39,800 is there in where? In purchases lo it is there. Where, sir? In purchases lo it is there. Where is that purchases? Yes, purchase and sales 2,62,700. In this 2,62,700 lo, what is there? This closing stock is already there. Now you pass one entry. What is that entry? Closing stock account debit. Actually speaking, the correct entry is closing stock account debit to purchases. But you pass the entry, already purchase is closed and went to trading. Better you start that recognizing this closing stock by way of reduction from the purchase in the trading instead of reducing, show on the credit side. Instead of reducing from the purchase, show on the credit side. Trading low by closing stock. No doubt this closing stock is asset. Balance sheet low, show it as asset. The very first treatment, open trading, write by closing stock 39,800, open balance sheet low closing stock 39,800. Next. Outstanding wages, how much? 200. Accounting is done or not done? How you know? When it is given in adjustments means accounting is not done. What is the entry for outstanding wages? Wages account to debit to outstanding wages. In wages law also it is in your trail balance law. Outstanding wages also not there. Means accounting is not done so far. Now what is the entry? Wages account debit to outstanding wages. Outstanding wages will come and sit in balance sheet law liability side. This wages of 200 will be added to this wages. How much? To this 7,000. In your trading account law, 2 wages 7,000 plus outstanding wages 200, total 7,200. Next. Outstanding salary how much? 500. Entry. Salary account to debit to outstanding salary. What, sir? Salary account to debit to outstanding salary. Now this outstanding salaries will come and sit in the balance sheet low liability side. These salaries of how much? 500 will be added to the salaries of existing salary. How much? Existing salary of 15,000. It will be added to that 15,000. Next. Insurance premium was paid for the year ended 30th September 2020. Yes, sir. There are two approaches. Approach number 1, which is followed by ICAI. Generally, this insurance for how many years? For 1 year. This insurance for how many years you will pay, sir? 1 year. You will pay insurance for 1 year. Means you paid insurance from which date to which date? From 1st October 2019 to 30th September 2020. Right. How much you paid that insurance? 420 you paid. And this 420 for 12 months. And in the next year means up to September 20th means in the next year you paid for 6 months. How many months? 6 months. Means 210 rupees is the expense for the current period. 210 rupees is the expense for the next period. Right? Now that in this insurance of 420 law, total insurance is there. How you know? Did anywhere that their prepaid insurance is there in the trail balance law? No. Means what? When you paid that 420, you debited insurance and you created cash. Insurance account debit to cash. But in that 420, actually you are supposed to debit insurance to the extent of 210, outstanding insurance to the extent of 210 to cash 420. But total amount you debited to insurance, what your insurance and advance insurance paid 210, insurance account debit 210 to cash. That is the entry you are supposed to pass. What? Insurance account debit, advance insurance account debit to cash. That is the entry you are supposed to pass. But what is the entry you pass? Insurance account debit to cash. That is the entry you pass. Now go to your P&L. In that 420 law, less prepaid insurance 210, balance 210 only show it in P&L, and balance sheet assets law show that 210. That is assumption, that is the treatment. No sir, I want to treat as this 420 is paid for 18 months. Last year 12 months, for next year 12 months. I paid for 18 months. Then 420 divided by 18, and how much you paid for 6 months? That is the next year. But don't follow this approach. Better follow this approach. What is that? That insurance is generally for 1 year, means that is from 1st October 2019 to 30th September 2020. 6 months is falling next year. So, but they are considered entire expense in the current period, like insurance account debit to cash, actual entry insurance, prepaid insurance to cash. Now, in that insurance of 420, less prepaid insurance, and that prepaid insurance show it in the balance sheet. Next one, sir. Depreciate machinery by 10%. How much, sir? 10%. Yeah, sir. Where is this machinery? Plant and machinery 20,000 is there? Yes, sir. Now they are asking you to charge depreciation. How much? At the rate of 10%. Entry, sir. Depreciation account to debit to plant and machinery. Depreciation account to debit to plant and machinery. How much? 20,000. Now 20,000 into 10%, which comes to 2,000. P&L లో show to depreciation. Balance sheet when you are presenting this plant and machinery inner column 20 less depreciation 2,000, outer column లో show that 18,000. Yes sir, just verify the answer. Yes sir, all adjustments with respect to that final accounts gets over. Now I'll start with the application of what we have discussed. Already managerial commission gets over, sir. Now come to one more problem, CRD 6, sir. Yes. Sir, trail balance will comprising of what, sir? Any trail balance will comprising of assets, liabilities, incomes, expense, capital, drawings. Any trail balance comprising of asset, liability, income, expense, capital, drawings. All assets will be transferred to balance sheet low assets side. All liabilities will be transferred to balance sheet low liabilities side. All incomes will be transferred either trading or P&L. Direct income, that is sales, will be transferred to trading. Indirect incomes like commission, dividend, interest received will be transferred to where, sir? P&L. Expense, direct expense in relation to purchase will be transferred to trading like wages and purchase, and indirect expenses in relation to purchase will be transferred to P&L. Capital account will be transferred to capital, drawings will be reduced from the capital. So hardly your trail balance comprising of asset, liability, income, expense, capital, drawings. Now if you know how to post in, how to arrange this in your financial statements like trading, P&L, balance sheet, nothing is there. But if there are some adjustments, what is the meaning of the term adjustments? Accounting is not done for these items. Accounting is done or not done? Accounting is not done. Now you do the accounting for that. Any item in the adjustment will have impact one area or two places it will have impact. Are you getting, sir? Anything which is inside the trail balance will have either impact in the trading or P&L or balance sheet. Example. Sir, capital is there, how much? 87,940. Directly take to the balance sheet low, liabilities low, capital how much? 87,940. Opening inventory, directly take where, sir? Trading low to opening stock. Discount having debit balance is discount allowed. Discount having credit balance is discount received. Discount allowed is P&L expense, sir. Discount received is P&L income, sir. I need to take to the respective places in the P&L. Allowed debit balance to P&L, in a received credit balance. Next. Advertising. Take to the P&L debit to advertising. How much? 4,000. Goodwill is the asset, sir. Take to the balance sheet asset side. Commission having credit balance is the income. Income will have P&L credit. Next. Import duty. This import duty is paid in bringing your raw material. Sir, how you know this import duty is bringing your inventory? Because if this import duty is paid on your asset, fixed asset, then you are supposed to be add to that asset. Did you are doing that? No, sir. If import duty is separately there, means this is paid on your inventory or this is paid on your purchases. Now take to the trading low debit import duty. Octroi, anything which you paid to the municipality to the transport from one municipal authority to the another municipal authority. How much? 1600. You are supposed to debit to where? Trading. Wages, debit to your trading. Duty and clearing charges. Duty and clearing charges is the port charges. Port clearing charges, port duties and all will be take to the debit side of trading. Next, carriage inward, trading low debit. Returns. Returns having debit balance is sales returns. Returns having credit balance is purchase returns. Returns having debit balance, sales returns will be reduced from the sales. Returns having credit balance is purchase returns will be reduced from your purchases. Next, salaries. How much? 15,000 take to your P&L lo debit. Plant and machinery asset take to the balance sheet lo asset side. Purchases having debit balance 2,60,700. Sales is an income will have credit balance 3,60,000 take to the income. Next, gas and water take to where, sir? Trading account. Next, office rent. How much is the office rent? 1,500 take to where, sir? P&L. Bills receivable. How much is the bills receivable? 2,000. That is what, sir? Asset. Bills payable will have credit balance. Liability how much? 1,200. Cash and bank how much? 6,685. Furniture how much? 2,500. Balance sheet lo asset. Trade receivables and trade payables. Trade receivables lo balance sheet lo asset 18,000. Trade payable balance sheet lo liability 8,000. Trade receivable will have debit balance. Trade payable will have credit balance. Next, taxes. This taxes is municipal taxes, house taxes, all that type of taxes. Now these taxes will be taken to your P&L account lo debit side, two taxes. Printing and stationery, P&L lo debit side. Printing and stationery 475. Drawings take to the balance sheet, reduce from your capital, less drawings how much? 12,500. Next, journal expenses take to your P&L to general expenses 1360. Insurance 420. Interest P&L account debit side 700. Interest expense debit balance. Interest income credit balance 850. P&L credit side. Next, now start your problem from the adjustments. Now put the heading trading account, profit and loss account, balance sheet. Now put the heading trading, P&L, balance sheet. Now closing stock. Closing stock is there in adjustments, means this is not accounted so far. Now closing stock immediately show this 39,800 in where, sir? In your trading account lo by closing stock, right? Why? Because this purchases is having 2,62,700. In this 2,62,700 low, this purchase of 39,800 is not reduced. Now you reduce the 39,700, but to reduce from purchase account is already closed and there and sitting in which account? Trading account. Now write by closing stock in trading account low 39,800. Trading account, leave 2 lines space, 3 lines space for sales returns, then write by closing stock 39,800. Immediately take this 39,800 to the balance sheet lo asset side, closing stock 39,800. Stock or inventory or whatever the name you want to call. Stock, inventory or closing stock, any name is fine. Next one, outstanding wages 200 means wages which is incurred not yet paid. These wages were outstanding. Already I covered that accrual concept. These wages were not paid, accrual concept lo you have to be recognize these wages of 200. But if that is there in trail balance means accounting is not done for the 200. Now the wages what is there here, how much? 7,000. In this 7,000 low, this 200 is included or not included? Not included. How you know, sir? If that is there in adjustments means that is not included here. Accounting is not done for the 200. Sir, outstanding wages is there? Not there, means accounting is not done for the 200. Now you are supposed to do what, sir? What is the actual entry for that? Wages account debit to outstanding wages, means you have to increase your wages. So already wages is 7,000 is there. Trading account low to wages 7,000 inner column, add outstanding wages 200, total outer column 7,200. This 200 is paid or not paid? Not paid. This is asset or liability? Liability. Take to the balance sheet low, outstanding wages 200 liability. Are you getting, sir? Next one, sir. Outstanding salaries, how much? 500. Means in the trail balance law, what is salaries is there? In that salaries law, this 500 is included or not included? Salaries 15,000 is there. In this 15,000 law, this 500 is included, not included? Not included. How you know? If anything is there in adjustments means that is not accounted so far. What is the entry? Salaries account debit to outstanding salary. Did that outstanding salaries is there in the trail balance? No, sir. Entry, salary account debit to outstanding salary. What is the accounting treatment? Come to the P&L, two salaries, take that 7, how much it is? 15,000, add outstanding salaries 500, total outer column 15,500. Immediately come to the balance sheet law, liabilities law, outstanding salaries, how much? 500. Next. So you are supposed to start with here. Take that assets law closing stock and trading law by closing stock. Next, trading law. Leave some space for opening stock and purchases. Write 2 wages. How much? Already 200, 700,000 is there, 7,200. Same way, show it under the liability side. Next, outstanding salary. Come to the P&L, leave some 2 line space and start 2 salary, 15,500. Liabilities law, show that 500 is liability. Next one. Insurance premium was paid for the year ended 30th September 2020. Sir, how much is the insurance premium? What is there in your trail balance? In the trail balance law, insurance is there to the extent of 420. What is the insurance expense, sir? 420. What is this insurance of 420, sir? This insurance of 420 is paid for a year. Always this insurance will be for 1 year. Generally, this insurance will be for 1 year. You paid for 1 year. How much? 420 you paid for 1 year. Okay. But that is up to which period? Up to 39/2020 means starting from 1/10/2019 to 39/2020 you paid. Means you paid for the next period low 6 months. Now how much you paid? 420. That 420 is for 12 months. That 420 is for 12 months. How much is for 6 months? 210 is what, sir? Is asset. But when you are paying, you debited what, sir? Insurance expense account debit to cash. But what should be the entry? Insurance expense account 210, advance expense, advance insurance account 210 to cash. How much? 420. But in the P&L, you took entire expense as insurance. Now, insurance in the P&L 420 inner column less prepaid insurance 210, outer column low, show it as 210. Are you getting, sir? The 210 what you have paid is the asset for the period. Show it in the balance sheet as asset, prepaid insurance. How much, sir? 210. You can also treat one more assumption, sir. That 420 is paid for 18 months. Then 12 months is expense for the period and 6 months is which is paid for the future period, that is advance paid. But don't go into that assumption. Institute followed that 1 year assumption only. So follow better that 1 year assumption. So then most of the students ask, sir, what about insurance from this period like 1/4 how much is this? Is the 2018? 1/4/2019 to 1/10/2019. What about? Means maybe they are not taken any insurance policy in between the time period for that 6 months. That is the assumption you can take. Right? Right. Yeah, last column one is what? Depreciate machinery by what percent? 10%. So entry, depreciation account debit to machinery. So what is the balance of machinery in the trail balance? Plant and machinery you are having 20,000. Apply 10%. You will have 2,000 as what? Depreciation. take the 2000 to the P&L as depreciation. When you are presenting your balance sheet, what is the plant and machinery? How much? 20,000 less depreciation 2000. Outer column show it as 18,000. Yes, sir. First, you are supposed to be complete your adjustments first. Once adjustment is done, just simply throw it in each item in each place. Capital means balance sheet lo liability side, opening inventory, trading lo to opening inventory, discount allowed, P&L lo to discount allowed, discount received, P&L lo by discount received, advertisement, P&L lo to advertisement expense, goodwill, balance sheet lo asset 9,500, commission is an income received, P&L lo by commission, import duty, take to the trading lo to import duty, octroi, trading lo to octroi, wages already done. So give one star mark when you are doing at that adjustment lo, give one star mark. Duty and clearing charges take to the trading law, carriage inward take to trading, returns having credit balance means what, sir? Purchase returns having debit balance means what, sir? Sales returns. Now accordingly reduce these figures from the purchases and sales, but you don't know what is purchase and wait for a moment. Next, salary already done. How much? 15,500. Take the balance sheet liability. Next, plant and machinery already done. 20 minus 2,000 depreciation and take the balance sheet 18. Next, purchases and sales. Take this purchase and sales and reduce that. Next, gas and water trading lo debit, office rent P&L, bills receivable balance sheet asset, bills payable balance sheet liability. Next, cash and bank balance sheet asset, furniture balance sheet asset, trade receivable balance sheet asset, trade payable will have credit balance sheet liability, taxes P&L lo taxes, printing and stationery P&L, drawings has to be reduced from where, sir? To capital, and general expenses has to be debit to P&L, insurance already adjustment is done, interest take to the P&L debit and received. Once trading account gets closed, take gross profit will be transferred to P&L. Now take that gross profit in the P&L. Once P&L is closed, take that net profit to the capital. Now opening capital less drawings, add profit, you will get the capital and your balance sheet also will get tallied. Let's check the answer for this. Yeah. Yes, sir. Opening inventory, sales less sales returns, closing inventory, purchases, and then less purchase returns, then carriage inward, wages add outstanding, duty, gas and water, import duty, octroi, everything. Then you are having what? Gross profit. Tally your account. Next, you will have what? Take the gross profit into P&L or by gross profit. Then add everything, matlab post everything in this account. Then advertisement, rent, general expenses, interest, by discount received, by commission, by rent received, taxes, printing, discount allowed. Now you will have the net profit will be added to where, sir? Capital. Now depreciation is also there, already we covered. Now come to the balance sheet. Balance sheet will take all assets like goodwill, yes, plant and machinery less depreciation, next furniture, next bills receivable, next trade receivable, prepaid insurance, closing inventory, cash in hand. Next, on the liability side, look, capital, add net profit, then you will have figure, drawings less, next bills payable, next trade payable, outstanding wages, outstanding salaries. Then balance sheet gets tallied. Insurance is only the adjustment. Assume insurance for 1 year. Now insurance is paid, which is for the future period. Now that is for the 6 months. Now that 210 is for the future period. That is you are supposed to be considered. Already I completed that. Yes, sir. Come to the next problem. Yeah. Prepare final accounts of whom, sir? Mr. Harikumar for the year ended 31st March 2020. The following trail balance. One is capital. So I already said, so trail balance comprising of assets, liabilities, incomes, expense, capital and drawings. That is the simple scenario. So adjustments lo anything is there, accounting is not done for this adjustments. Now you are supposed to start adjustments for that. Now you are, yes sir. Next problem, sir. CRD 8. They are asking you to prepare final accounts of Mr. Harikumar. Yes. they gave the all other information and they gave the adjustments. Always start your problem with the adjustments. Fine. Before going into the adjustments, first see the skeleton of the problem. Capital, how much, sir? 80,000. Directly take to where, sir? From the balance sheet, low liability side. Next. Drawings. What is the accounting treatment for this drawings, sir? We are supposed to be reduced from where, sir? From the capital. Next. Machinery, how much, sir? 5,200. Now what you are supposed to do, sir? This I am supposed to be considering the balance sheet as asset side. Bank overdraft, how much is the bank overdraft, sir? Liability, take to the balance sheet liability. Next. Taxes and insurance, how much? 4,000. Profit and loss account low, 2 taxes and insurance. Trade payable, how much? 17,600. Take in the balance sheet liabilities low, trade payables. Next. Buildings, how much? 46,400. Balance sheet low assets. Next. Inventory, how much is the inventory? 44,000. Take in the balance sheet low inventory. Next. Trade receivables, how much? Balance sheet low assets. Rent, how much is your rent? 2,000. Purchase, trading low to purchase, how much? 2,20,000. Sales, trading low buy sales 3 lakh. Next. Return inwards means sales returns, how much? 4,000 should be reduced from where? My sales. Next. General expenses, how much? 8,000 will be debited to my P&L. Next. Salary and wages, how much? 18,000 will be debited to my P&L. Next. Commission received, how much? 2,000 will be credited to my P&L. I already covered salary and wages means what is the accounting treatment. Wages and salaries means what is the accounting treatment. What is the assumption behind what we have taken that. Next. Carriage on purchase, taking to the trading low, debit to carriage on purchase. Bad debts, 1,600. P&L low to bad debts. Next. Discount, debit is discount allowed, credit is discount received. Bills receivable, balance sheet asset, bills payable, balance sheet liability. I don't think any complexity is involved analyzing these items. Next. Problem must be starts with your adjustments. Open one trading account, open one profit and loss account, open one balance sheet. That's you required to open the trading P&L balance sheet. Inventory as on 31st March 2020, how much? 42,000. Immediately come to your trading account. Inventory means buy closing stock. Write buy closing stock, leaving 3 lines or 4 lines below. Write buy closing stock 42,000. Right? Immediately come to your balance sheet, asset side, closing inventory 42,000. Done. This adjustment is done. Next. Inventory destroyed by fire. On which date the inventory was destroyed, sir? On 25th March, inventory was destroyed by fire, 9,000. I already covered accounting treatment. Just once again, the application of what I have discussed. Entry, sir. Inventory destroyed by fire or goods destroyed by fire account debit to trading account. Trading account low by inventory destroyed by fire or goods destroyed by fire, 9,000. As there is no insurance compensation, directly debit in the P&L to inventory destroyed by fire. How much? 9,000. In the P&L low, to inventory destroyed by fire, 9,000. Entry. P&L account debit to inventory destroyed by fire and goods destroyed by fire. Next. So what is the ultimate accounting? Trading low by goods destroyed by fire, 900. P&L low to goods destroyed by fire, 900. Yes, P&L low, leave 2 lines in the debit and credit. Next one. Provide for depreciation, 2,000 on building, 500 on machinery. What is the value of building here? The value of building comes to 46,400. Less 200 in the form of depreciation. Come to the P&L, write to depreciation 2,000. Outer column in the balance sheet 44,400. Next. Same, provide 500 depreciation on what, sir? On machinery. Come to the machinery. What is the value of machinery in your assets? Is value of machinery is 5,200. Yes, sir. Moving on to the next topic. Opening entries, sir. What, sir? Opening entries. Yes, sir. What is this opening entry? I already said trail balance low. It is comprising of what, sir? Trail balance comprising of assets, liabilities, expense, income, capital, drawings. Sir, assets will go and sit in where? Balance sheet lo asset side. Liabilities, balance sheet lo liabilities side. Expense, either trading or P&L debit. Incomes, trading or P&L credit. Capital, balance sheet lo credit side. Drawings will be reduced from the capital account in the balance sheet. Up to this okay? Yes, sir. Fine. Now I'll close the trading, I'll get gross profit, that gross profit will be transferred to profit and loss account. I will close profit and loss account, I will get net profit. This net profit will be added to the capital account. Super, sir. Next. Sir, nominal accounts is closed and transfers to which account? Trading and P&L. Assets and liabilities will not be balanced, will not be closed, sir, will be balanced and transfers to the next accounting period. If you take one asset account, debit what comes in, everything asset value increasing, it will be debited. If asset value decreases, it will be credited, and by balance carried down to balance brought down, meaning to say asset will always have which balance, sir? Debit balance. In which year? Next year or current year? In the next period, the asset will have opening balance to balance brought down. Liability, sir. Liability, if liability is increasing, I am crediting. If liability I am repaying, I am debiting. To balance carried down by balance brought down. Meaning to say, for assets it is having opening debit balance, for liabilities it is having opening credit balance, right? This is the opening credit. Asset it is having opening debit balance. Now, once the period gets over, we are having assets, we are having liabilities, and we are also having capital. Now, what is the entry, sir? Entry, opening entry. Asset will always have debit balance. For the next accounting periods, assets were increasing. Assets account to debit. 2. For the next accounting periods, liability will increasing. 2. Liabilities. 2. Capital. We are also having one equation, accounting equation approach. Assets is equal to capital plus liabilities. Assets is equal to capital plus liabilities. So what is that? Assets is equal to capital plus liability. If you are having 1 rupee of asset, means either it must be come from your liability or it may be your own contribution, capital contribution. Assets, this is the opening entry. Assets is equal to capital plus liability. If you want to write in the form of entry, assets account to debit to liabilities account to capital account. Next, come to the CRD 12. They have gave you the balance as on 31st December 2020 and they are asking you to prepare the opening balance sheet, right? Yes, sir, they are asking you to prepare the opening balance sheet. Sir, this provision is a different account, trade receivables is a different account. Actually speaking, this provision should be recorded on the credit side, provision. How much? 6,200. But this 6,200 is not, there is no external liability. I am not supposed to pay to any outside party 6,200. That is the reason I am reducing from my asset, debtor, trade receivables. I am reducing from the trade receivables. Outer column I am presenting the net amount. For the presentation sake I am using this. But if to record this is a liability, there is no record outside liability. But this provision will have which balance, sir? Credit balance. Provision will have which balance? Credit balance. Super, sir. Now, this provision is a separate account with 6,200. Trade receivables is a separate account with 1,88,000. For presentation purpose, I am setting off with that asset with this provision and balance I am showing. But for accounting entry. This is a separate asset, this is a separate liability. In fact, for creation of provision, I am not even touching asset account. What is the entry for creation of provision? Profit and loss account debit to provision for bad and doubtful debts. Now, in the second period, in the next year, as on 1st January 2021, I have to bring all these assets to my books of accounts to balance brought down for assets, by balance brought down for liability. That should come by way of an entry, sir. What, sir? By way of an entry. What is that entry? Fixed asset account debit. In my books, fixed asset is increasing 1,25,600. Fixed asset account debit. Inventory account. In my books, inventory is increasing. Inventory account debit 2,06,400. Trade receivables account debit 1,88,000, not 1,81,000, because those are two different accounts. 1,88,000 is the trade receivables balance. Now take 1,88,000 trade receivable. Cash 36,200. All these were assets individual wise. Fixed asset account debit, inventory account debit, trade receivables at 1,88,000, cash account debit 36,200. To liability, trade payable 1,64,000, bank loan 1,46,000. To provision, how much? 6,200. To capital account 2,40,000. Capital account 2,40,000. What nonsense you are discussing? No, sir. Sir, last period balance sheet gets over. Next period low, I want to bring those assets into my books of accounts as to balance brought down, liabilities by balance brought down. It should be come by way of entry, sir. That asset will not automatically will come to the next period. I am supposed to pass one entry. Asset account debit. Liabilities will not come automatically into my books of accounts. I need to bring those liabilities account into ledger. Liability by balance sheet. That should be come by way of entry. Liabilities to capital. Asset account debit. Liability account debit to capital. Provision for bad and doubtful debts, it is a separate account, but there is no liability. This provision is having credit balance, but there is no external liability. That is the reason, instead of showing on the liability side, I am reducing from the trade receivables, but that is a different separate account. So that should be taken in the liability side. Liability as a separate account, right? Right. Can you please, if you want to write, yes, I will show the answer. Wait. Yes, sir. What I have covered? Debit that fixed asset, debit inventory, debit fixed asset, debit inventory, debit trade receivables, and debit what? This cash, and credit low, highlight point, this provision for bad and doubtful debts. This is a separate account which should be taken on the credit side. Assets is equal to capital plus liability. These assets and liabilities will not automatically come to the next period. I am supposed to open an account and I am supposed to write to balance brought down. For that to balance brought down, I need to debit that fixed asset account debit, inventories account debit, trade receivables account debit, cash account to trade payable, to bank loan, to provision, to capital ends. I hope you got the clarity over this opening entries. I already discussed the entries for closing entries for nominal accounts. How to close, I already discussed. Yes, sir. Starts with CRD 10. Yeah. What they have provided in the problem? They provided in the problem is trail balance, sir. Yes. They provide in the problem trail balance. Yeah. So, like every time I will tell, you have to start your problem with the adjustments. First complete your adjustments and then pick and throw. That's it. Once the adjustments is completed, then pick an item and throw it in the relevant place. Example. For example, capital. Where I need to throw this capital? Balance sheet lo liability capital. Purchases. Trading account lo opening stock, leave some space for opening stock, come and write to purchases. Inner column, next, purchase returns is there, less that purchase returns. Done, done. Sales, trading account low, buy sales. Sales returns, less sales returns. Next, freight inward where, sir? Freight inward account need to be debited where, sir? Sales returns is there, freight inward, trading low you are supposed to be debit that freight inward in the which account, sir? In the trading account. Next, carriage outward where, sir? Carriage outward will be debited in your P&L, right? Carriage inward in your trading, carriage outward in your P&L. Reason I already discussed, sir. Carriage inward is a direct expense in relation to purchase. Carriage outward is no way related to your purchase, it is related to sales, sir. Hence take it in your P&L account. Next, rent of godown, P&L. Rents, rates and taxes. Rent, rates and taxes taken where, sir? In your P&L. Next, Salary, take it in your P and L. Discount allowed, P and L lo debit. Discount received, P and L lo credit. Next, drawings. Reduce this drawings from your capital account. Already capital is there. From that capital, reduce this drawings. Next, printing and stationery, P and L lo debit. Insurance premium, P and L lo debit. Electricity charges, P and L lo debit. General expenses, P and L lo debit. Bank charges, P and L lo debit. Bad debts, P and L lo debit. Repairs to motor vehicle, P and L lo debit. Interest on loan, P and L lo debit. Provision for bad debts. Sir, already one provision is there in your trail balance. That provision is created in the last year. When, sir? Last year. The balance left in that provision account is 10,000. That's this provision is all about. Are you getting? Once again, I am repeating. This provision is not created in the current period. How you know this provision is not created in the current period? Provisions will be created from the P and L. P and L is not so far created. Started. Now, what is this provision? This provision is created in the last year and the closing balance in this provision account is how much, sir? 10,000. Now, that is there in my trail balance, right? Accounting treatment, wait, I will tell. This provision is created in the last year. The balance in this provision account is taken in where? Trail balance. Loan from Rajan. Sir, there is a difference between loan to Rajan and loan from Rajan. If it is a loan to Rajan, I gave a loan to Rajan and this is my asset. If it is a loan from Rajan, I took loan from Rajan, it is a liability. Loan from Rajan is a liability. There is a difference between loan to Rajan and loan from Rajan. Next, sundry creditors, balance sheet lo liability 62. Motor vehicles, balance sheet lo asset. Land and building, balance sheet lo asset. Land and building, balance sheet lo asset. Office equipment, balance sheet lo asset. Furniture and fixtures, balance sheet lo asset. Stock as on 31st March 2019. Sir, when you are preparing this? As on 31st March 2020. And this stock is on which date? 31st March 2019 or 1/4/2019. The stock which is there on 1/4/2019 or 31st March 2019 is the opening stock. This 3,20,000 is what, sir? Is opening stock. Take your trading account and write to opening stock how much? 3,20,000. Sundry debtors how much? Sundry debtors 2,80,000. Take it in the balance sheet asset side inner column. Cash at bank 22. Cash in hand 16. Show it under the balance sheet assets. This is what the brief explanation of all your particulars in your trail balance. Right? Right. Now come to the adjustments. Start with your adjustment. Sir, prepare trading and profit and loss account for the year ended 31st March 2020 and the balance sheet as at the date after making provisions for the following. They are asking you to create provisions for the following and they are asking you to create this, adjust these items and prepare one trading P&L balance sheet. Nothing, sir, simple. Come to the first adjustment. Depreciate building by 5%. Immediately come to the P&L account, leave one line space and write 2 depreciation. How much, sir? 5% on building. Where is your building? Land and building 5 lakhs. Just depreciation is not at charged. That is the reason this depreciation is there in the adjustments. Now 5 lakhs on this 5 lakhs apply. How much, sir? 5%. Which comes to how much, sir? 25,000. In your profit and loss account lo write 2 depreciation. How much? 25,000. So as there are so many other assets, inner column lo make it as main heading like 2 depreciation. Make it as P&L lo 2 depreciation. First one on building. How much, sir? 5 lakhs into 5%. How much, sir? Inner column lo 25,000. Five lakhs into 5%, 25,000. Next one. Furniture and fixtures. How much, sir? 10%. What is the value of furniture and fixtures? Furniture and fixtures 50,000. Now 10% on this furniture and fixtures comes to how much? 5,002. In the depreciation lone, below the building, to depreciation, below building, right? What is this? Furniture. How much, sir? 10%, which is 5,000. Next. Office equipment 15%. Office equipment is how much, sir? 2 lakhs into 15% is how much? 30,000. Right? That 30,000 in where? Office equipment. Next. And motor vehicles, how much, sir? 20%. Motor vehicles, how much, sir? 1 lakh. 1 lakh into 20%, how much, sir? 20,000. Right? Now, add everything. What is that? Depreciation and building, how much? 25. On furniture and fixtures, how much, sir? Furniture and fixtures 50,000 into 10%, 5,000. Office equipment 30,000. Motor vehicle 20%. What is the motor vehicle? That is 1 lakh into 20%, 20,000. Add everything. Outer column low, throw it as a depreciation. Immediately come to the balance sheet. Asset side low. Write what, sir? First asset is what? Building. How much is the building? 5 lakhs. Less depreciation on building 25,000. Outer column low 4,75,000. Immediately next asset. Furniture and fixtures. Give one tick mark to this. Land and building. Next one. Furniture and fixtures. How much is the inner column? 50 less. Depreciation how much? 10%. Means 5,000. Less outer column low 45,000. Next. Office equipment. Office equipment how much, sir? 2 lakhs. 2 lakhs less 15% means how much? 30,000. Outer column low 1,70,000. Next. Motor vehicle. How much is the motor vehicle, sir? 1 lakh. Less depreciation how much? 20%. 20,000. Outer column low balance sheet 80,000. First throw everything into their respective places. First adjustment gets over. Throwing the depreciation into P&L. Throwing this assets less depreciation, those values into balance sheet asset side. Sir, value of closing stock how much, sir? 4,10,000. Take this value of closing stock in the balance sheet asset side as closing stock or inventory 4,10,000. Immediately show it in the balance sheet as inventory. How much? 4,10,000 closing inventory. Right? Right. Immediately come to the third adjustment. Sir, value of closing stock. Come to the trading. Buy closing stock. Leave 2 lines in the trading to write sales plus sales returns. Up in the third line or fourth line, buy closing stock. How much? 4,10,000. Immediately throw this 4,10,000 into where, sir? Into assets of the balance sheet. Next. 1 month rent of godown. 1 month rent for godown is outstanding. 1 month rent for godown is outstanding. Entry, sir. Entry rent account debit to outstanding rent. Right? Rent account debit to outstanding rent. But they have given rent of godown 55,000, right? Now in this rent of godown low, 1 month godown rent outstanding is not included. How you know? That is the reason that is there in the adjustments. Adjustments means accounting is not done so far for that item. Rent of godown for 11 months it is included here. For 1 month outstanding it is not included. Assuming rent of every month is uniform throughout the period. Now 55,000 divided by for 11 months. Which comes to 1 month 5,000. How much paid for 11 months? How much is yet to be paid? 1 month. How much? 5,000. Entry. Immediately go to the P&L. Write to rent. Inner column low 55,000. Add outstanding for 1 month 5,000. Outer column low 60,000 rent. Come to the balance sheet. Liability side low. Outstanding rent. How much? 5,000. That is a liability which is not yet paid. Once again, sir. Rent of godown is 55,000. That is what you paid is there in your trail balance. Outstanding rent for 1 month that is not yet paid, that is not there in your trail balance. How you know? Sir, that is there in adjustments means accounting is not done so far. Okay. This 55,000 is for 11 months. Outstanding is there for 1 month. 5,000 is outstanding which is not accounted so far. Okay, sir. Now this 5,000 show it in where, sir? In a P&L. Along with that 55, as per accrual concept, what is accrued during the period, irrespective of whether it is paid or not, 55 accrued and paid, 5,000 accrued but not paid, total 60,000, show it under where, sir? In your P&L to rent, right? Come to the balance sheet liabilities. Outstanding rent, how much, sir? 5,000. Which show in where, sir? Outstanding rent, show it in your balance sheet liability side. Are you getting? Next, give one tick mark for this outstanding rent. Matlab rent already accounting is done. Where is this rent? Rent of godown. Next, come to the D. Interest on loan from Rajan is payable at the rate of interest on loan from Rajan is payable at the rate of 10% per annum. The loan is taken on 1/7/2019. Sir, when you took this loan? 1/7/2019 means this loan is outstanding for a period of 9 months. How much is the loan from Rajan? Loan from Rajan is 60,000. 60,000 and the rate of interest which comes to how much? 10% per annum. 10% into for how many months? 9/12. Now interest comes to how much, sir? 60,000 into 10 comes to 60,000. 60,000 divided by 12, how much, sir? 60,000 into 10%, 6,000. Yes, divided by 12 into 9 comes to how much? 4,500 is your interest expense. How much? 4,500. How much you paid, sir, interest? Interest on loan 4,400. Then what about that 1,000? Not yet paid. Are you getting? Sir, how you know this 4,400 is paid? Is there any outstanding interest account like that? Nowhere outstanding interest account is not there, means outstanding account interest is not accounted so far. If it is there in adjustment means the accounting is not done so far. Interest on loan, how much you paid? 4,400. How much is yet to be paid? 100. Entry, interest on loan account debit to outstanding interest, 100. Immediately come to your P&L. To interest on loan 4,400 inner column, add 100 outer column low 4,500. Immediately come to your balance sheet liability side. Outstanding interest, how much? 100 in your balance sheet low liability side. Accounting is done. Such a simple task, sir. Come for the E point. Sir, reserve fund bad and doubtful debts to be maintained at 5% of sundry debtors. Very good. They are asking you to maintain 5% bad debts provision at the rate of on sundry debtors. Okay. Now go and check what is the existing provision. 10,000. What is the bad debts? Sir, bad debts comes to how much, sir? 12,200. Entire this 12,200 I am not supposed to be debit to P&L. If there is any opening provision is there or any provision is there, if any bad debts is incurring in the current period, now you are not supposed to be debit this bad debts to the P&L. You are supposed to be debit this bad debts to that provision account. Provision account is showing a credit balance of how much? 12,200. Matlab provision account is showing a credit balance of 10,000. Bad debts is showing a debit balance of how much? 12,200. First you are supposed to be debit your provision account. Debit your provision account to the tune of 10,000. Debit your profit and loss account to the tune of 2,200. Credit your bad debts account 2,200. Matlab 12,200. Everyone, provision account to the tune of how much? 10,000. Profit and loss account 2,200 to bad debts 12,000. Sir, what you did? Sir, already I covered this adjustment. Once again I am telling, if that opening provision is less than the bad debts given in the trail balance or less than the accumulated bad debts what is given in the trail balance plus what is given in the adjustments, now that excess amount has to be debited to P&L amount. Here the excess is how much? 2,200 debit to P&L. What is the provision now? A big zero. Provision is having a credit balance of 10,000. Now I cancel that provision by debiting that provision 10,000. Are you getting? Now bad debts account is completely closed. P&L ki debit 2,200 bad debts. Provision account is completely closed. Now I am not having any provision. Now what is this sundry debtors, sir? 2,40,000. Sundry debtors, balance in sundry debtors 2,80,000. Right? Now come to the P&L. Now provision is also done. Bad debts is also done. Come to the 2,80,000 is the bad debt, matlab sundry debtors. On 2,80,000, 5% is provision which comes to 14,000. What is the entry for provision? profit and loss account to debit to provision for bad and doubtful debts. Now in P&L account low to provision for bad and doubtful debts 14,000. Total towards provision and bad debts, how much it went to the P&L is 16,200. 14 is this, 2,200 is the excess of bad debts than your provision amount. That also I debited to P&L. Right? Done. Next. Next, sir. Yeah. Sir, insurance premium includes 40,000, 42 paid towards sole proprietor life insurance. Oh. How much is the insurance premium? 48,000. Yes, sir. Now, insurance premium is 48,000. How much? 48. In this 48 low, 42,000 is what? Proprietor own insurance. Means entry, sir. Drawings account to debit to unnecessarily you debited insurance account, right? Now credit that insurance entry. Drawings account to debit to insurance account. Now your drawings already what is given in your trail balance plus this 6,000. Now insurance comes to how much? 6,000. And this 6,000 is paid. And the balance of the insurance charges cover the period from 1/4/2019 to 36/2020, which comes to a period of how many months? 15 months. Which comes to a period of 15 months. Right? Right, sir. Which comes to a period of 15 months. Right, sir. Now, 6,000 divided by 15 months into, if I want for 1 month, how much, sir? Which comes to 6,000 divided by 15, I will get for 1 month. Now, I want 12 months, which you will get per annum, sir. Are you getting, sir? Everyone. Now, this 12 months is per annum and this 6,000 divided by 15 into 3. Are you getting? Which comes to how much, sir? I think 400. 400 into 3, 1200. And this is 4,800. This 4,800 is what? Insurance expense for the period. And this 1200 is what? Advance insurance premium which is paid, which will be shown in your balance sheet assets. Now, that 6,000 divided by 15 into 12, 4,800. Now, to insurance, how much? 48 less drawings 42 less insurance paid in advance 1,200. Balance amount 4,800 is what, sir? Insurance. Next. Asset flow, balance sheet assets flow. 1,200 is your insurance paid in advance. Now, drawings account lo already given in the drawings how much? 20 plus this 42. Total 20 plus 42, 62,000 is your drawings. Right? Done. Now, after you are accounting all these adjustments and you are supposed to give tick mark for adjustments what you have done accounting. Now, rest everything pick and throw in the respective area. Capital, already inner column lo capital, less this drawings is also there, done. Purchase, trading lo debit. Purchase returns, either you can reduce from the purchase less purchase returns, how much? 18. Sales, P&L lo, trading lo credit. Sales returns, less that sales returns from trading. Next, freight inward, trading, everything throw it in the respective heads. Everything. Once the adjustment is over, balance all items, throw it in the respective heads. Your balance sheet will pakka tally. Opening stock, what they have provided in the problem. Purchases less purchase returns, net purchases. Buy sales less sales returns, net sales. Closing stock. Freight inward. Now you are having this gross profit. Transfer this gross profit here. Close your trading account. Next, to salary 72. Carriage outward 8,500. Next, discount received. Rent of godown. Outstanding. Total rent godown. Next, rates and taxes. Discount allowed. Printing and stationery. LIC, just I said just now 4,800. Electricity charges 14. General expenses 11. Bank charges. Repairs and then loan add outstanding. Provision, I said this 16,200 is nothing but my 2,200 plus 14,000. 16,200. Depreciation, I already said net profit. This net profit will be added to the capital. Come to the balance sheet. Land and building less I covered. Equipment less I covered. Next, furniture less depreciation I covered. Next, motor vehicles next I covered. Next, debtors 2,80,000 less provision I covered 2,66,000. Next, closing I said, prepaid also I said cash in bank. Come to the liability. Capital, what is given in the trail balance? Add profit less drawings less this LIC also drawings. Loan from Rajan, that is a liability. Next, interest add outstanding total. Sundry creditors 62, outstanding rent 5,000. Your balance sheet will get clear. Tallied. You can also write outstanding interest, or you can add this loan account. Anything is fine. Loan from Rajan 60, add outstanding interest 100, total 60,100, or loan from Rajan separately and outstanding interest 100. Anything is fine, sir. Trail balance your balance sheet gets tallied. Yes, sir. Let's start with this adjustment for managerial commission. What's the adjustment for managerial commission? Yes, sir. What is this managerial commission? Yes, sir. This commission is based upon a percentage on sale or a percentage on profit. Sir, if the commission is as a percentage on sale, then no issue, sir. If you know your sales information, you will get that, calculate that percentage on that sales and you will give that commission. But if it is a percentage on profit, sir. Yes, sir. If it is a percentage of what, sir? Profit. How they used to express the things? Sir, my income comes to 1 lakh less my expense comes to 60,000. In this expense, so commission is not included, sir. Yes, sir. Profit before charging commission. Profit before charging commission, how much, sir? 40,000. Yes, sir. My income which comes to 1 lakhs, my expenses is 60. Profit before charging commission, how much, sir? 40,000. Next. Imagine the way how they are expressing their profit, sir. It is, commission is 10% before charging such commission. Means before charging such commission, how much is the profit? Before charging my commission, the profit comes to 40,000. Now on this before charging commission, 10%. Commission is 10% on before charging commission. If commission is 10%, when, sir? Before charging commission. Are you getting, sir? If the commission is 10% before charging such commission. Now the 10% you need to apply on before charging commission, how much? That is 40. Now 10% commission less how much? 10% of 40,000, which comes to 4,000. The balance is how much, sir? 36,000. This is what? Net profit. Sir, if the way how they are expressing their profit is 10% before charging such commission. What, sir? Before charging such commission. Then commission is equal to, commission is equal to net profit before charging commission. Net profit before charging commission into rate of commission, into rate of commission. Then you will get what, sir? Commission expense. And if you reduce your commission expense from where, sir? From net profit before charging commission, then you will get net profit. This net profit is what, sir? After charging. This net profit is what, sir? After charging commission. This net profit is what, sir? After charging commission. Are you getting, sir? Now, whenever they are expressing their commission on a terms of a percentage on what, sir? Before charging such commission, then apply that percentage on before charging such commission, then you will get commission. Reduce the commission from before charging commission profit, then you will get profit after charging such commission. Next. Sir, sometimes they will express commission as a percentage of profit after charging such commission. What, sir? Commission as a percentage of profit after charging such commission. What is this nonsense, sir? Income same 1 lakh less expense. How much, sir? 40,000. Then the balance, sir, profit before charging commission. How much, sir? Profit before charging commission? 60,000. Now, sir, earlier example it is 60-40. Okay, now you can take it as 40-60. No issues in that. Now, profit before charging commission, how much, sir? 60. Less. Do you know commission? I don't know, but I know it is 10%. 10% on what, sir? Profit after charging such commission. Do you know about how much is profit after charging such commission? Profit after charging such commission. Yes, sir. How much is profit after charging such commission? That also I don't know. Sir, if the way they are expressing is what, sir? Commission as a percentage of profit after charging such commission. Do I have what is commission? No, sir. Do I have what is profit after charging such commission? That information is also not there. But I know one thing. What is? This is 10% of profit after charging such commission. Imagine, I assume this as 100 rupees. How much? 100 rupees. If profit after charging commission is 100, then my commission comes to how much? 10. If this is 100 and this is 10, my profit before charging commission how much? 110. How much, sir? 110. Now, if you want commission, profit before charging commission how much in our example? 60,000. That is equivalent to how much? 110. If you want commission into commission how much? 10. If you want after charging commission, then multiply with 100. Sir, this is equivalent to 110. How much this is equivalent to? 110. Are you getting, sir? If your profit after charging commission is 100, then commission is what? 10% on after charging such commission. If your after charging commission is 100, then 10% comes to how much? 10 rupees. Now total how much? 10 rupees after charging commission. 10 rupees is after charging such commission. Matlab, your commission comes to how much? 10 rupees. Profit after charging commission how much? 100. Then 10 plus 100, that is how much? 110. That is profit before charging such commission. How much, sir? 110. Are you getting, sir? Now that profit before charging commission equivalent to 110 into, if you want commission, multiply with 10. If you want after charging such commission, what is the profit? Multiply with 100. Are you getting, sir? 60,000 divided by 110 into how much? 10. 5454 is your commission. 5454 is your commission. No, sir, I want after charging such commission, what is the profit? Then 60,000 divided by 110 into 100, how much? 54,546. 54,546, that's how it works. Now, if you want a commission which is expressed as a percentage of profit after charging such commission, now how to express, sir? Net profit before charging commission, net profit before charging commission is equivalent to 100 plus rate of commission into rate of commission will give you what, sir? Into rate of commission will give you how much, sir? What is your commission? Are you getting, sir? If you multiply with 100, then you will get what? Net profit after charging such commission. If you multiply with rate of commission, then you will get what? What is your commission expense? I hope you get the clarity. Sir, are you getting, sir? Sir, that commission is the way how they are expressing is 10% or 15% or 5% after charging such commission or before charging such commission. If it is before charging such commission, then apply that commission straight away on the before charging such commission profit. If it is after charging such commission, means then if it is on a profit after charging such commission, then before charging such commission is equivalent to 100 plus rate of commission. Then if you want commission, multiply with rate of commission, you will get what? Rate of commission. Are you getting, sir? Yes, sir. This is the last question in your final account. We have spent ample of time in this final accounts. Adjustments, closing stock, everything I covered. Multiple times I covered relating to the closing stock. Multiple times I covered the adjustment relating to provisions. This is the last problem. And the way I said, follow the same manner. Your balance sheet will get tallied in your exam. Done. Yeah. So from the following trail balance of Mr. Upendra Raju as at 31st December 2020, prepare final accounts after making necessary adjustments. Yes, sir. Whenever they are asking you to prepare final accounts, means they are supposed to prepare one trading account, one profit and loss account and one balance sheet. Yes, sir, I will prepare. Open trading, leave that page in exam. Now half page. Then open P&L, the balance page, and open one balance sheet. Always read, give one reading and then start your answer from the adjustments. Capital, okay, it will be taken in the balance sheet, liability side inner column. Drawings, it will be reduced from that capital. Plant and machinery, that is the opening date. We are have to prepare up to 31st December. This is on the opening date. Do means same. Plant and machinery purchased as on 1st July. 1st July it is purchased how much? I think 10,000 purchased on 1st July and plant and machinery as on 1/1/2020 40,000. Total 50. Inventory, this is the opening date inventory. You have to take in the trading account lo 2 opening stock. Purchases and sales, trading lo to purchase, trading lo buy sales. If there is any adjustments, you have to do adjustment. For all these things, any adjustment you have to adjust and take to the respective places. Returns, if the return is showing debit balance, sales returns, returns are showing credit balance, purchase returns. Trade receivables and trade payables. Trade receivable is what? Balance sheet lo asset. Trade payable is what? Balance sheet lo liability. Furniture and fittings, what is this? Balance sheet lo asset. Freight and duty, what is this? Trading lo direct expense, freight and duty. Carriage on sales, that is carriage outward, take in the P&L. Rates and taxes, take in where? P&L lo debit side. Printing and stationery, P&L lo debit side. Trade expenses, P&L lo debit side. Postage, indirect, P&L lo debit. Provision for bad debts, this provision for bad debts is created in the last year for current year bad debts. This provision for bad debts is created in the last year for current year bad debts. In the last year, what is the entry? Profit and loss account debit to provision for bad and doubtful debts. This 1000 is created in the last year, means last year P&L it is debited, it is having a balance of 1000. Interest received, P&L credit if there is no any adjustment. Rent is there on the credit side, means it is the income. What sir? It is the income. Rent for the year ended 30th June means you have received in advance for 6 months. You have received in advance for 6 months. Very good sir. Next. Insurance premium on the debit side, P&L lo insurance premium. Salary and wages, take it into where? P&L. If it is wages and salaries, take it in trading. 42,600. Cash in hand, balance sheet asset. Cash at bank, balance sheet asset. Bad debts 2,200. This 200 bad debts will be taken in where? Profit and loss account. But if there is a provision, you have to adjust against the provision. This 200 is not supposed to be taken to the P&L. As there is provision, adjust from this provision. So give the debit to that provision. Loan from Mahesh, balance sheet lo liability. Next, interest paid to Mahesh, how much? 500, right? Interest paid to Mahesh 500. If there is no adjustment, you need to debit to P&L to interest paid, but interest expenses need to be debited. 10,000 lo apply 12%. How much? 1,200. Everyone. But how much you paid? 500. How much you are supposed to pay total? Total you are supposed to pay 1,200. But you paid how much? 500. How much is yet to be paid? If they provide any information relating to loan, so and so date it is taken, you assume the loan is there. If there is any adjustments, I will cover. Or you have to assume this loan is taken on the beginning of the period. 1,200 is the interest, 500 is paid, liability is 700. P&L lo to interest on Mahesh loan 1,200, balance sheet lo liability 700, which is yet to be paid. Next, adjustment. Always start your problem with the adjustments, right? Right, sir. Right? Closing inventory, how much? 29,200. First, in the trading low, buy closing stock, leave some space for sales less sales returns. On the fourth line low or fifth line, write buy closing stock 29,200. Immediately take this closing stock on the balance sheet. Adjustments lo anything is there, I have to account twice. Come to the balance sheet. In balance sheet lo take this closing stock. How much? 29,200. Bad debts to be written off how much? 1,200. How much to be written off? 1,200. How much is the bad debts? Trail balance lo bad debts given is 200. How much? 200. Bad debts to be written off how much? 1200. Total bad debts is 1400. In this 1400 lo, that bad debts what is there in trail balance 200 is reduced from your debtor. But if there it is drain in adjustments, if that is there in adjustments means accounting is not done. Now you do the accounting for how much? 1200. Now you do the accounting for this 1200. For 200 already accounting is done. Yes sir, for 200 already accounting is done. For 1200, no sir. Now reduce your debtor 1200. Yes. Total bad debts how much? 1400. Will I need to debit P and L? No. Why you are not supposed to debit P and L? Because you are having provision balance to the tune of 1000. Now adjust this 1000 bad debts with the provision. Balance left how much? 400. That 400 dump in P and L. 2 bad debts. Write in the P and L. Leave one line. Leave one line and write 2 bad debts. Open your bracket. 14,000 minus 1,000. 14,000 minus 1,000. Outer column lo 400. What you conveyed by that? Sir, total bad debts is 1400. But for that 1400 lo provision is there for the tune of 1,000. So reduce 1,000. Balance only take to the P and L. Provision is there for that purpose only, taken in from P and L in the last year. Then come to the balance sheet. Balance sheet lo give debtors inner column. How much is the debtors here? 41,200 inner column less 1,200 less additional bad debts or bad debts. Sir, what happened is 200 already there in the trail balance, already reduced. But this additional bad debts only, that information law, adjustments law, what is there, that bad debts is not adjusted. Less 1,200. Don't throw anything to the outer column, just leave like that because there are some other issues also to be adjusted. Right? Right. Now increase the provision for bad debts up to 5% on trade debtors. What is the balance of the trade debtors now? 40,000. How you got 40? 41,200 minus 1,240. On that 40 apply what? 5%. Comes to how much? 2,000. That 2,000 what is the entry? Profit and loss account debit to provision for bad and doubtful debts 2,000. Go to the P and L and write 2 provision for bad and doubtful debts. How much? 2,000. In that balance sheet lo 40,000 inner column less provision for bad debts 2,000 less provision for bad debts 2,000. How much you are having? Net balance 38. Up to this okay? Everyone, P and L lo to provision for bad and doubtful debts 2,000. Reduce the 2,000 from the 40,000. You will have 38 in the inner column only. Inner column. Next one. Create a provision for bad and doubtful debts. How much? 2%. 38,000 into 2%. Debtors less additional bad debts in the adjustments, less provision on the balance amount lo you need to create provision for discount on trade receivables. Which comes to how much? 380 into 2%. Matlab 380 into 2. 760. That 760 is your provision for discount on debtors. We will have to debit to P and L. Less 760 in your balance sheet low provision for discount on debtors. 38 minus 760. 37,240 is the closing value of trade receivables. 37,240. P and L account lo to provision for discount on debtors. How much? 760. 10. Provide for depreciation on furniture and machinery. Where is furniture? Yes, furniture and fittings. 10,000 into furniture 5%, 500. So to depreciation, I think only 2 assets, right? Okay, to depreciation on furniture 5% on 10,000, you will get 5,000. Come to the balance sheet, write furniture 10,000, less provision, how much? 500, give the outer column lo 9,500. Machinery 20%, but this machinery 40,000 into 20%, 8,000, because this machinery is there for the full year. But this 10,000 into 20% into 6 months by 12 months. 10,000 into 20% is how much? 2,000. Now 1,000 is the depreciation here. 8,000 is the depreciation for the full year. To depreciation on plant and machinery 9,000. To depreciation on plant and machinery total 9,000. Come to the outer column of the balance sheet. Plant and machinery 40 plus 10. 40 plus 10. Inner column lo 50 less depreciation 9,000. Outer column lo 41,000. Inner column lo plant and machinery 40 plus 10 total 50 less depreciation 9,000 total 41,000 outer column. Done. This is also done. Provision for bad debts also done. Next, bad debts also done. Whatever is done, give one tick mark so that you will not give one more accounting treatment when you are taking this trail balance. Done. Next, interest received in advance. How much? 200. Where is this interest received? Did anywhere you are having interest received? You are having interest paid, but yes, interest received is 1,600. How much you received, sir? Interest received is 1,600. In this 1,600 low, how much you received in advance? 200. This 200 is included there? Yes. In the P and L low, right, by interest, give one tick mark for the 1,600. In P and L low, by interest, how much? 1,600 less received in advance, how much? 200. Outer column lo how much? 1,400. What is that? Interest. Come to the balance sheet liability side. Interest received in advance, how much? 200. Interest received in advance, 200. Then that is the liability. A fire occurred as on 28/12/2020 in the godown. Inventory costing 10,000 was destroyed. Come to the trading account. Right, by stock lost by fire, by trading account lo, because you need to reduce from the purchases. Your purchase is high, you need to reduce from your purchases by inventory, by stock lost by fire. You have to take the cost in the trading, 10,000. How much insurance compensation received? 8,000. What is the net loss? 2,000. Come to the P and L and write 2 loss of stock by fire 2,000, right? This 2,000. P and L lo 2 loss of stock by fire 2,000. The other alternative accounting treatment is bring that 10,000 to the debit side, loss of stock 10, credit side lo 8,000, insurance compensation received 8. Net lo you will have 2. That is also correct. This is also correct. Anything you follow. Better both are correct only. Either directly you can take the net amount. If you are taking net amount, show working note. If you are taking both gross amounts 10, 8, no working note required. Are you getting? Next. Up to this okay. If I want to cover that last stage, I need to throw everything into the P and L and trading. Done. Now, capital, balance sheet lo inner column, drawings, less the drawings from the balance sheet inner column, less inventory, trading account lo 2 opening stock, purchases inner column lo 1,64,000, sales inner column lo 2,40,000, returns, sales returns debit balance 4,000, less from this 2,40,000, outer column lo how much is your sales? 2,36,000. Purchase returns credit balance, debit side of trading lo, less from the purchases, less returns 2,500, outer column lo 1,61,500 purchases. Trade receivables already done. Trade payable, throw this trade payable in the balance sheet liability side 20,000. Furniture and fittings already done. Freight and duty, take to the trading account lo 2 freight and duty. Carriage on sales, take to the P and L low. 2 carriage on sales, indirect expense. Rent and taxes, take to the P and L and write 2 rent and taxes. Printing and stationery, take to the P and L 2 printing and stationery. Trade expenses, take to the P and L 2 trade expenses 800. Postage, take to the P and L and write 2 postage. How much? 1600. Provision already done. That provision, how much you have? Now you have reduced from your debtors. Interest received already done. Rent 2400 is received. This rent 2400 is received up to how much? Next period lo 6 months ki you have received this rent, right? Right. Means you have received rent for how many months total? Last period lo how many months? 12. Next period lo how many months? 6. Total for how many months you received? 18 months ki you receive this rent. Means 2400 divided by 18 months into 12 for this year into 6 for the next year. Are you getting? Yes, already same adjustment I have covered already, I think, in one of the problem. Next, insurance premium. Trading lo P and L lo debit, P and L lo debit. Salary and wages, P and L lo debit. Cash in hand, balance sheet lo asset, cash in hand. Cash at bank, balance sheet lo asset, cash at bank. 12% loan from Mahesh, balance sheet lo liability. 10,000. Interest, sir, total interest you are supposed to pay how much? 1200. Go to your P&L and write to interest. Paid 500 inner column low. Add outstanding. How much outstanding? 700. How you got 700? 10,000 into 12%. 1200 is your interest expense. In this 1200 low, how much is paid? 500. How much is outstanding? 700. How you know? Because 1200 is the expense. Did they mention any somewhere like when you took this loan? Assume this loan is taken on the first day. Come to the balance sheet and show it in the liability side. What is that liability? Outstanding interest payable or interest payable. How much? 700. I hope you covered everything. Completed? Which one? Rent. Already I covered, no. Ayyo. Sir, similar point I covered somewhere in the insurance, so somewhere point I didn't remember. Rent for the year ended how much? Which date that was? 30th June. Rent for the year ended 31st June 2021. How much? Means this year beginning from which date to which date? 1st July 2022, 31st June 2021. For this period ended, how much is the rent? 2,400. Up to this, okay. Means per annum how much? Yes, per annum how much? 2,400 is per annum. Now 1/7/2022, 31st December 2020 is this period. For this period ki how much? 1200. For the next period ki how much? 1200. In your income, same point we have covered in the insurance. Yes. When it is period ended, year ended means for 12 months. Yes. 1200 is the current period income. Taken where? P&L lo income. This 1200 is balance sheet lo liability side. Rent received in advance. Are you getting? Total 2,400. Year consists of 6 months, 6 months. This 6 months falling under this year, this 6 months is falling under next year. This is from 1/7/2022, 31st December 2020. This is from 1st January 2021 to 30th June. This is 6 months, this is 6 months. For this period it is 1200, for this period it is 1200. This is liability, this is income. Income lo by rent 1200, liability lo by rent 1200. Once you calculated everything, income, just don't write, income less expense, income less expense, profit before commission less commission, profit after commission. This commission at the rate of 10% on profit after commission. Once again, this commission is 10% on profit after charging commission. I don't know what is commission amount. Why? If I know commission, then only I know what is profit after commission. On this profit after commission, they are telling like charge 10%. I don't know what is profit after commission. If I know commission, I want to know what is profit after commission. If I want to know commission, I want to know what is profit after commission. Now, I know profit before commission. Sir, if this is 100, right, commission is 10, then profit before commission is 110. Now, if I want commission means profit before commission divided by 110 into 10, I will get what? Commission. Profit before commission divided by 110 into 100, I will get what? Profit after commission. Just calculate this. Profit after commission divided by 110 into 10. What they are telling in the last point? General manager is entitled to commission at the rate of 10% on net profit after charging such commission. If I want to know commission, first I need to know what is profit after commission. If I want to know profit after charging such commission, first I want to know commission. Both I don't know, but I know profit before commission. If profit after commission is 100 means commission will be 10% means 10. 110 is what? Profit before commission. Now profit before commission divided by 110 into 10 you will get commission. Same apply. First get the profit before commission in the P&L. Yes, working note. Profit before commission divided by 110 into 10 commission. Profit before commission divided by 110 into 100 after commission. You will get the profit. That profit add to the what? Capital. Go and check. Yes. Yes. This loss by 5, 2000 done. Everything is fine. $749, 7491. Everyone got the same answer. 749 is what? Manager's commission. Go to the working note, how they prepared. Yes. 100. I already covered same 100 plus rate. Everything I covered. 8240 divided by 110 into 10, 749. Very good, sir. Excellent. Everything is we followed accordingly. Take the opening stock, done. Less purchase, done. 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 Gross profit you are having 79,700, 269. Lost by fire, closing stock, done. Bring that. Salary and wages, bring that. Rent also I covered 1200. This is I covered. This is also I covered. Interest. Next. Done. P&L everything I covered. Carries on sales, rent and taxes, printing, salary, trade, postage, insurance. These adjustments also we covered. Interest, provision, everything is done. Depreciation, done. Loss by 5, 200, everything is done. Provision balance, what I said, please follow the same. You will have 1,88,340. You will have 1,88,340. Working notes you have supposed to mention. Working note 1, interest on loan. Just write what you understand about that working note in a meaningful sentence. Please drop that sentence. Provision, what I said you prepare that. What I said you prepare. This is as it is I covered. If you remember, as it is I covered. Next, this is also done. This is also done. Done. Everything is done, sir. According to the, if it is given for 15 marks, please try to have as many as working notes as you can. I hope this chapter is completed. Thank you everyone. Right? Yes, all the best for this chapter because important chapter. This NPO, single entry, advanced final accounts, those 4 chapters. See, every video watch twice if you are feeling any doubt. Advanced final accounts, final accounts, single entry, NPO, minimum 30 marks you will get from these chapters. Minimum from these 4 chapters. Minimum from single entry, NPO and these two, minimum from 25 to 30 marks. Done. Thank you. Yes, sir. Let's begin with one more new chapter, sir. The title is, the name of the chapter is Bills of Exchange. What, sir? Bills of Exchange. Yes, sir. These are instruments. One is a promissory note, one is bill and promissory note. Either a bill of exchange or promissory note. Both are covered under NI Act 1881. Promissory note is an undertaking. Promise, I am making the promise. Bill of exchange is ordering. I am ordering. Please make payment. Creditor is ordering debtor. Creditor is ordering debtor. Creditor is ordering debtor. This is what? Bill of exchange. Next one. Debtor is promising. Who, sir? Debtor is promising whom? Creditor. Debtor is promising creditor an undertaking. I will make payment after 2 months, 3 months, 4 months. Right? Right. This is known as promissory note. These two were instruments. Whether it is a bill of exchange or it is a promissory note, from accounting point of view, there are no changes. Now, there are two parties here. Drawer, drawee. Sir, drawer draws one bill on drawee. When it is known as just a draft. Just when a drawer draws one bill, it is known as draft. When drawee accepted this draft, this will become bill. There is a contract between drawer and drawee. This is a bill. Now entry. Sir, what is the entry in the books of drawer? Sir, generally these type of instruments will be taken place when goods are sold. Not necessarily, but generally. Entry, sir. For credit sales, debtor account to debit to sales account. In the books of creditor. In other words, in the books of drawer. I purchased the goods from the creditor, entry. Purchases account to debit to creditor account. Purchases account debit to creditor account. Sir, now debtor, what debtor is doing is, I drawn one bill. So my name is drawer. Drawer drawn one bill on drawee. For what purpose? For this amount. Yes. Drawee accepted that bill. Who accepted? Drawee. Now I am getting what? One instrument, asset comes in, asset increasing. Bills receivable account to debit to debtor account. I am accepting this bill. Now creditor account to debit to bills payable account. Are getting, sir? Creditor account debit to bills payable account. Next, third one. The bill what I have received as a drawer, I am having three options with that bill. In fact, four. The bills receivable what is accepted by the drawee. Now that bills receivable, I drawn one bill and I gave to the drawee. Drawee accepted and gave that bill to me. The bill what I have received from drawee, I am having four options with that bill. First one, retained till the date of maturity. Retained till the date of maturity. Second one, I will discount with the bank. Third one, bills sent for bank for collection. Fourth, endorsed. Done. Now first one, if I retained till the date of maturity, on the date of maturity I will get cash or bank account debit to bills receivable. Done. Next, discounted with the bank. Discounted with the bank, bank account to debit, discount account to debit to bills receivable account. I am getting cash now. Discount is the finance cost expense. Bill is going out. Cash or bank I am getting on the due date of maturity. Bill is going out. Bills sent for bank for collection. Now, when I send these bills on bank for collection, on the date of sent, bills sent to bank for collection. Entry, sir. Bills sent to bank for collection. Bills sent for collection account debit to bills receivable account. Bills sent for collection account debit to bills receivable account. On the date of collection, this is on the date of bills sent. On the date of collection, bank account debit a small discount or rebate or commission or whatever you want to call, a small discount, commission or fee, whatever the name you can call, to bills sent for bank for collection. Done. Next, endorsed. Entry, sir. When I endorsed a bill to the creditor, creditor account debit or endorsee, creditor or endorsee account debit to bills receivable. On the date of payment, on the date of honor, no entry. On the date of honor, no entry. I hope you got the clarity. Yes, yes, yes. Dishonor I will tell. All these cases for honor. Either I can retain or I can discount or I can bill send for bank for collection or I can endorse. If it is retained, then on the date of honor, this entry is on the date of honor. Next, discount with the bank, yes, on the date of honor, no entry. This is on the date of discount. On the date of discount, on the date of honor, no entry. Next, on the date of bill sent for bank for collection, on the date of honor, on the date of collection or honor. Next, this is on the date of honor, no entry. This is on the date of endorsing, means on the date of I am giving this bill to my creditor. Creditor is endorsee. I can also use endorsee to account debit to bills receivable. This is when the bill is honor. When the bill is dishonor, when the bill is dishonor, when the bill is dishonor, entry for bill dishonor depends upon what happened to the original bill. What is meant by dishonor? Dishonor refers to non-payment. What? Non-payment. Entry G. When bill is dishonored, retained with the customer, discount with the bank, bills sent for bank for collection. Next, endorsement. Dishonor of a bill when it is retained with the customers. Entry, sir. Yeah, what is the entry for dishonor of this bill? Unnecessarily I debited the instrument called bills receivable and I credited the debtor. Now reverse the entry. Debtor account to debit to bills receivable account. Here, when I discounted with the bank, entry, I debited my bank and I debited discount and I credited what? Bills? Yes. Now, I am supposed to be receive this money from whom? From my debtor? Yes. Debtor account to debit to my bank balance is reduced. Debtor account to debit to bank account. Everyone, next. Third one. Yes. When this is a dishonor, I am supposed to debit my debtor. Debtor account to debit to bills sent for bank for collection account. All these are entries for dishonor. Who is constant here? Debtor is constant here. And the credit depends upon if the bill is with me, credit your bills receivable. Discounted with the bank, credit your bank. Bills sent for bank for collection, credit your bills sent for bank for collection. Next. Now, debtor account to debit to creditor account. Entry, when dishonor of a bill, if it is endorsed to your creditor, increase your debtor, increase your creditor, credit liability, increase your debtor. Debtor account debit to creditor account. Next. This is for dishonor, this is for honor. Yes, these 4 entries when bills are accepted. Next, then honor key. First of all, that bill I am having 4 options, honor, then 4 options, dishonor, then 2 special cases. First one, sir, I am settling this bill. Settlement is done before settlement is done before due date. Every bill is have one due date like 2 months, 3 months, 40 days, 50 days, add some 3 grace days. Now the settlement is done before the due date. If settlement is done before due date, if settlement is done before due date, rebate will be allowed. What? Rebate will be allowed. Now, drawer drawn one bill, drawee accepted one bill. Entry, sir. Bills receivable account to debit to either drawee or debtor. Next, I am getting the cash well before the due date. Entry, cash account to debit or bank, rebate account to debit to bills receivable account. Imagine if it is for 10,000, I am giving some 500 as rebate, I am getting cash 9,500 and rebate comes to some 500 to bills receivable 10,000. Next, sir, in the books of drawee, yes sir, entries in the books of drawee, drawer account to debit to bills payable account. I mean, you can also replace with a creditor account debit to bills payable account. When you are making payment, bills payable account to debit to cash to rebate is a income. Rebate account, cash account or cash or bank. For a drawee, rebate is the income. For a drawer, rebate is the expense or loss. Done, done. This is the concept of rebate. Next, renewal. Sir, on 1/4/2024, I drawn one bill on Mr. X. Entry, sir, bills receivable account to debit to X account for 2 months. How many months? 2 months. After 2 months, X requested me to renewal the bill for an interest of 500 and the new bill is for 3 months. What I am supposed to do? Bills receivable account debit to X account. Yes sir, bills receivable account debit to X account. Then renewal means first cancel this bill. X account to debit to bills receivable account, cancelled. Now you are having two options, sir. Option number 1, to recognize interest separately means I need to recover interest from whom? Mr. X. X account to debit to interest account 500 and I am receiving freshly a new bill including interest. Bills receivable account debit to X account for 10,500, 10,500, so that X account will get closed. 10,500, 10,500, or only one entry. What is that entry? X account is there. X account lo balance how much is showing? Nil. Now raise this X account. Already you are showing X account lo balance of 10,000, sir. How much? 10,000. X account lo showing balance how much? 10,000. Now I am receiving one bill, not for 10,000, for 10,500 including interest. To cancel X account 10,000, to recognize interest income 500. Either first recognize the interest, entry X account debit to interest, and then draw one new bill, bills receivable to X, or raise one new bill including the interest, close the X account and credit the income. Any treatment is correct only. Anything you can follow. Either you want to pass interest alone one entry, fine, or you want to pass one entry for this, it is also super fine. Next. So this is the concept of renewal and this is the concept of interest. Next, insolvent. When drawee became insolvent, who sir? When drawee became insolvent. Only 50 paisa in a rupee, 50 paisa in a rupee is collected from the estate, is collected. For example, a bill is for 1 lakh. How much cash or bank is collected? Cash or bank is collected 50,000 because only 50% is collected. Cash or bank collected is 50%. Cash account to debit 50,000. That is a bad debts is a loss. How much is the bad debts? 50,000. To close that bills receivable. Close that bills receivable. 1 lakh. These bad debts will come and sit in where? In P&L. This entry is in the books of drawer. For a drawee, sir. For a drawee, bills payable account to debit 1 lakh. To cash account 50,000. To deficiency account, what sir? To deficiency account. To deficiency account, how much? 50,000. To deficiency account 50,000. What is this? This is for dishonor of whom? Insolvent. In the books of drawee, or the drawee became insolvent in the books of drawee, in the books of drawer. Let us solve some problems on this backdrop. Nothing is there, sir. One of the easiest chapter. Even trade bills, most of them feel, accommodation bills, most of them feel little bit difficult. For my point of view, that is one of the easiest, sir. Yes, sir. Continuing with our discussion. The next is renewal of a bill. What is this? Sir, yesterday I covered, once again I am repeating. Drawer, drawn one bill on drawee. Drawer, drawn one bill on drawee. Drawee accepted the bill. Drawee accepted the bill. Entry in the books of drawer. Bills receivable account to debit to drawee account. Right. Entry in the books of drawee. Drawer account to debit to bills payable account. Why, sir? Why bills receivable is debited? Asset. Why drawee is credited? Drawee balance is reduced. Done. Next. Immediately, the next entry should be if drawee approached drawer. If drawee approached drawer and requesting for a renewal of a bill. If drawee approaching whom, sir? Drawer for renewal of a bill. Example, the bill original value is for 10 lakhs or 10,000 is for 10,000. How much? 10,000. Now what happened? Immediately renewal means cancel that old bill, draw a new bill for the extended time period. Okay, sir, cancel that bill. What is the entry? Drawee account debit to bills receivable account. Cancel 10,000, 10,000. For how many months you are extending? For 3 months. Okay. Now, for that extended 3 months of time period, I'll charge what? Interest. Entry. Interest is my income and that interest is to be recovered from whom? Drawee account to debit to interest account. Imagine some 200 interest, 200. What happens, sir? Now, drawee is immediately settling how much? 5,000 and the balance amount they are drawing a new bill. Cash account, how much is the cash? I am getting 5,000. New bill for how much? 5,200 to drawee account. How much? 10,200. Actually, drawee is debited with 10, drawee is debited with 2. Now I received cash 5,000, I received bill 5,200, total drawee account is 10,200. Next. Next one, sir. Imagine I am supposed to be receive how much? 5,200. Before the maturity date, drawee became insolvent. Drawee became, I can recover only 3,000. Now debit drawee, I need to collect from drawee account debit, cancel that bills receivable account. How much? 5,200, 5,200. How much I am getting cash now? Cash account to debit 3,000, bad debts account to debit how much? 2,200 to drawee account 5,200. This is how it works, right? I think yesterday I covered the drawee account entries. Next, in some cases lo I draw a bill for 1 lakh. For how much I drawn one bill? For 1 lakh I drawn one bill. For how much, sir? For 1 lakh. What happened? For this 1 lakh I drawn one bill on Mr. X. Drawer books lo entry. Bills receivable account debit to X account. How much? 1 lakh, 1 lakh. After 1 month, what they said? They will pay 50,000 now, and for the balance amount, how much? 50,000 they will pay now. For the balance amount of 50, they will pay interest at the rate of 12%. Now only they will pay that interest also. For how many months? 3 months. First, renewal, cancel this bill. X account to debit 2. Bills receivable account, how much? Cancelled 1 lakh. How much you will get now? I will get, how much you will get now? I will get cash 51,500. What is this 1500? That 1500 is interest. And 2, who is giving? X account. How much? 50,000. What is that 1500? That is interest. How much? 1,500. Now X account will show balance how much? 50,000. That 50,000 on the due date I will collect. If any I am not getting, that will be charged as bad debts. Right? Right. Shall I move on to the problems? Yes. Yes, sir. Go through this problem. Mr. David draws 2 bills of exchange on 1st Jan 2020. This is for 6,000 rupees and for rupees 10,000. So, one bill is for 6,000 and one bill is for 10,000, and these 2 bills are drawn on the same date, that is 1/1/2020. The bill of exchange for 6,000, that is first bill, is for 2 months, while the bill of exchange for 10,000, that is second bill, is for 3 months. Thank you. Yes, sir. The bill of exchange is for first bill is for 2 months, whereas the second bill will be for 3 months. Very good. These bills are accepted by Mr. Thomas. Who is a drawer? David is the drawer. Who is a drawee? Thomas is the drawee. Thomas is the drawee. Now I am writing in the books of whom? Drawer. Now accepted by whom? Thomas. Write first journal entry. Put the heading in the books of journal entries in the books of David. Journal entries in the books of David. First one. Yes, sir. Who drawn bills on whom? David drawn bills on Thomas. How many bills? 2 bills. Bills receivable. You need to write bills receivable full. Number 1 account debit. Bills receivable number 2 account debit. If I am not wrong, first bill is for 6,000, second bill is for 10,000. First bill is for 6, second bill is for 10. 2. Thomas. How much? 16,000. Being bills receivable drawn. Very good. Second one. Now this is drawn on date 1/1, if I am not wrong, 2020. 1/1/2020. Yes. Next. On which date? 4/3/2020. Exactly after 2 months. What they are telling? On 4/3/2020, Thomas requested, yes, Thomas requested Mr. David to renew the first bill. Okay, they are asking you to renew the first bill. with interest at 18% per annum for the period of 2 months. Please extend 2 months at an interest of 18%. Okay. And Mr. David agreed for this proposal. Now, what happened? First, cancel this bill. Thomas account to debit. Bills receivable one account, number one account. How much? 6,000, 6,000. And interest at a rate of how much? 18 for how many months? 2 months. Interest at a rate of 18 for a period of 2 months. How much is this bill? 6,000 into 18% divided by 12 into 2. Interest is 180. Now, it is my income and I need to collect from whom? Thomas. Thomas is the asset. Thomas account to debit to interest account. How much? 180, 180. Now, for this entire amount, I am drawing one new bill. Bills receivable number 3. Account to debit to Thomas account. How much? 6180. You can also club these two entries and you can write one entry. Bills receivable account 6180. Thomas account 6,000. Interest account 180. You can also club these two entries and you can also write one entry. In that case, bills receivable 6180. Thomas is 618. Here Thomas is 180. Now Thomas will net credit is 6,000 to interest ultimate 180. But if you can also write two entries, nothing wrong. But date is when, sir? All these were taking place on 4th March. 4th March. Next. On 23, 2020. On which date? On 23, 2020. Mr. Thomas retires the acceptance for the 10,000. The interest rebate, that is discount, being 100, being the due date of the bill before the due date of the renewed bill. Okay. What they are telling means on 23, 2020, when? On 23, 2023. Mr. Thomas retires the acceptance for 10,000. The interest rebate, that is discount, being 100. Means actually if you calculate 3 months, which it will get 4/4/2020. Which date? 4/4. The second bill ki maturity date will come 4/4/2020. But what happened? These guys are making payment. This Thomas is making payment well in before. For that interest rebate discount being 100. Means Mr. Thomas retires the acceptance for 10,000. The interest rebate discount being 100. Retirement means making payment before the due date. How much you are getting? Bank. Bank account to debit 9,900. Rebate or discount, whatever the name you can call it, 100 to bills receivable number 2. Sir, what happened? Sir, actually the due date of the second bill will fall under 4 or 3rd. But what happened? You are that Thomas is retiring the bill before the maturity date. For that you are giving a rebate of 100 rupees. That is my expense. I am receiving 9,900. Then bills receivable number 2. Done. Come to the next one. Before the due date of the renewed bill, when? Before the due date of the renewed bill, Mr. Thomas became insolvent and only 50 paisa in a rupee is recovered from his estate. What is this, sir? Sir, I drawn one bill on 4, right? Means it is for how many months? 2 months. Then on 7th, on 7th May, it is the maturity date. Before that maturity date, who became insolvent? Thomas became insolvent. Only 50 paisa in a rupee is recovered from his estate before the due date of a renewed bill. The due date of a renewed bill is 7th of May, but before that 7th of May, Mr. Thomas became insolvent. Only 50 paisa in a rupee is recovered from his estate. Okay. On 7/5/2020, cancel that bill. Thomas account to debit, bills receivable number 3, 6180, 6180, being cancellation of that bill. Now, on the same date, I am getting only 50%, means I am getting 3090 bank account to debit. Balance amount is my bad debts. Bad debts account debit. Cancel this to Thomas. How much? 6180. That's how you are supposed to solve this problem. Go and check your answer. Bills receivable 1, 2, done. Thomas to bills receivable. What is this? Cancellation of that 6000 bill. Yes, cancellation of that 6000 bill. Next. Yes, they wrote one single entry. I asked you to write 2 entries, but both are correct only. They wrote one single entry, but I shown 2 entries. You can also club and you can also pass 1 entry for that. Next. When that bill is retired, excellent, bills number 2. When dishonored, 6180, 6180. How much you are getting bank? How much you are getting bad debts? Done. I think I also wrote the same entries. But here they wrote 2 entries. I wrote only 1 entry. I clubbed these 2 entries and wrote 1. No issues. Rest everything is fine. For this, they wrote only 1. Here they wrote suggested answer, they wrote only 1 entry, but I wrote 2 entries. Nothing wrong. Just go through. If you have any doubt, please ask me. First, second, cancellation of this. Third, recognition of interest. Drawing a 4th bill. मतलब drawing a next bill. Next, retirement of a bill before the maturity date. Next, cancellation of that newly renewed bill. Realization and 50% is bad debts. I hope you got the clarity on this. Please ask me any doubt. Yes, sir. Before going to the next problem, there is a concept of noting charges. What, sir? Noting charge. What is this noting charges, sir? Whenever a bill is dishonored, So generally the person who is holding the possession of the bill, the possession who is having the possession of the bill, they will do this noting charges, noting, they will noting, right? For that you need to pay expenses. Yes, I will pay some expenses. And who need to suffer that? Who need to borne is drawee, incurred by possession of bill. Ultimate burden is on drawee. Entry, how it will change? If bill is retained by, if bill is retained by drawer, if bill is retained by drawer, then entry, sir. If bill is retained by drawer and the bill is dishonor and noting charges also incurred by whom? Noting charges also incurred by drawer. Entry, sir. Drawee account, I need to raise the drawee account debit to bills receivable account to cash account. What this cash represents? Noting charges I paid. And who has to give that amount? Drawee need to give that amount. For example, 10,000 is bill, cancel that bill. 100 rupees noting, okay. Now drawee is liable for 10,100. This is how it works. Right? Right. See this. Yes, sir. Assignment problem number 3. What is this? Assignment problem number 3. Mr. A drew upon B 3 bills of exchange. First bill is for 3,000, second bill is for 2,000, third bill is for 1,000. Yes, sir. How many bills you drawn? 3 bills. Who drawn? A drawn. On whom? B. Entry, sir. Respectively. Entry. In the books of A, I guess. Drawer. In the books of A. What? In the books of A. Entry, sir. Bills receivable. How many bills? 1 account to debit. Who drawn this bill? Bills receivable number 2 account debit. Who drawn these bills? A drawn. On whom? Bills receivable 3 account debit. 1, 2, 3. Bills receivable 1, bills receivable 2, bills receivable 3 account debit. 2. The first bill is for 3, 2, 1. Total how much? 6,000. 3, 2, 1 to B account. How much? 6,000. Being bills drawn on B and B accepted. Done. Next. A week later. Okay, 1 week later. The first bill was mutually cancelled. The first bill was mutually cancelled. Come and write one entry. B account to debit to bills receivable account. How much? 3,000. 3,000. First bill was mutually cancelled. Next. B agreeing to pay 50% of the amount in cash immediately and the balance plus interest 100. B agreed to pay 50% of the amount in cash immediately, and for the balance plus interest 100, he accepted a fresh bill drawn by A. Okay. 3000, right. B accepted cash immediately means how much cash I am getting from B? Cash account to debit to B account, 1500, 1500. Okay. Next. Next what happened? I am drawing a new bill. Yes sir, I am drawing a new bill. Bills receivable account debit. This bill is number 4, account debit. For how much sir? 1500 plus 1 interest, total 1600 to B account. How much? 1500 to interest account. How much is the interest income? 100. In the last problem, I wrote 2 entries for this. Now I wrote only 1 entry, consolidated entry. If you want, you can bifurcate and write 2 entries. What is the first entry? B account debit to interest income 100, 100. I earned interest income of 100 and due from B. Entry B account debit to interest 100, 100. Now write one more entry, cancellation of that amount received from B. What is that one more entry? Bills receivable account debit to B. Matter over. How much? 16, 16. No, I want to write only 1 entry. That is also super fine. Next one. The new bill, this bill was endorsed to C. The bill what I have received, this was endorsed to C, who discounted the same with the banker for 1500. I don't want to bother about what C is done. My bothering is all about this bill I endorsed to C. C account debit 1600 to bills receivable 4 is going out. 1600, and in turn this C discounted the bill with the bank for 1500, where I don't want to bother about all these things. The second bill was discounted by A at 5%. If there is no per annum means directly apply this 5% on the bill value. If there is per annum means now compute that amount on the basis of 12 months how much, 2 months how much, all these things. But if there is no such per annum means directly apply this 5% on the bill. Now the second bill was discounted by A at 5%. Yes, this bill was matured and returned dishonor. Okay. The second bill was discounted by A at 5%. Raise the entry. Bank account to debit. Second bill entry, discounting with the bank. Discount account to debit. How much? 5%. 2. Bills receivable number 2 account. What is this bills receivable number 2? 2000. What is this bills receivable number 2? 2000. 2000 into 10% comes to how much? 200. When it comes to 5%, how much? 100. Bank account debit 1900. Discount 100. Bills receivable to how much? 2000. Entry bank account debit 1900. Discount account 100. Bills receivable to 2000. Very good, sir. Now what happens, sir? The second, this bill on maturity was returned dishonored. Noting charges 30. Sir, this bill on maturity date is returned dishonored and noting charges became 30. Very good. Very good, sir. Now, who gave this bill to me? Yes, Mr. B. Raise Mr. B. B account debit. How much? 2000. Noting just 30. B account debit. He need to give me 2030. And bank will reduce amount in my account 2030 rupees. B account, B need to give me money to bank. Bank will reduce in my account lo 2030 dishonor. Dishonor of a bill. Next. The third bill was retained till maturity when it was duly met. Okay. Third bill was duly met on a maturity date. Entry, sir. Bank account debit 1000 rupees. Bank account to debit to bills receivable number 3. Duly met 1000. Sir, what happened? What your nonsense you're doing? No, sir. I am having 3 bills. Done. Who gave? B gave. Next. Next, immediately cancel that first bill. A week later, the first bill was mutually cancelled. Cancellation of the first bill. Next. Receiving cash immediately 50% for balance interest of 100, drawing one new bill, bill receivable 4. I hope you got the clarity for this. Next, what happened? Next, I am drawing a new bill for the interest. I am drawing a new bill for the interest, and this bill I am endorsing to Mr. C. Next, the second bill is discounted with the bank. This bill is dishonored, and the third bill is duly corrected on the due date or maturity date. Go and check the answer. 3A. Yes. Okay, this time they wrote all bills together at 6. Please write bills receivable 1, 2, 3. Next. B account debit to bills receivable, cancellation of that bill. Next. Cash, bills receivable, interest B. Done. I wrote 2 entries for this. They wrote only consolidated entry. No issues. Endorsement of a bill. Done. Discounting of this bill. Done. Dishonor of this bill. Done. Collection of this bill. Bank account debit to bills receivable. Bank account debit to bills receivable. Done. Sir, dishonor key, noting charges. It is ultimately, it is have to be given by drawee. And I incur that expense and banker deducted that amount. I hope you get the clarity. Shall I start the next problem? Just ask me any doubt is there in this problem. I will show the answer. Any doubt, please answer. Please ask me. Moving to one more problem, sir. This is a different problem comparing to all other problems. Conceptually nice problem. Conceptual problem, sir. And what is this problem is all about, sir? What they are talking, yes. Rita owed 1 lakh to whom, sir? To Sriman, yes. Sriman. Rita owed 1 lakh to Sriman. Okay. Now, Rita have to give to the Sriman. For Sriman point of view, it is asset. For Rita point of view, it is a liability. Okay. On 1st October 2019, when on 1st October 2019, Rita accepted the bill drawn by Siriman. Who accepted? Rita accepted the bill drawn by Siriman for amount of 3 months. For the amount at 3 months. At 3 months. Draw one bills. Draw the entry. In the books of whom? Sriman. Entry, sir. Bills receivable account to debit to Siriman account. How much? 1 lakh. 1 lakh. What is the next entry, sir? Bills receivable account debit to Siriman. 1 lakh. 1 lakh. What is the next entry? Next entry is Siriman got the bill discounted with the bank for 99,000 on 3rd October. This is on 1st October. This is on 1st October 2019. This is on 3rd October 2019. Discounted the bill with the bank entry. Bank account to debit how much? 99,000. Bills receivable account to debit 1,000. So bills, I mean discount account debit. This is the discount, right? Yes, discount account to debit to bills receivable is going out. So from us that asset is going out, we are having a bank balance of 99, we are having a discount of 1,000 and this bills receivable is going out. Next. On 2019 before the due date. Next. Rita approached Simran for renewal of bill. Who approached? Rita approached Simran for what? For renewal of bill. Simran agreed on a condition that 5,000 to be paid immediately. Yes, sir. They are asking you to, okay, 5,000 is to paid immediately together with interest on the remaining amount at the rate of 12 months per annum for 3 months. And for the balance. And for the balance, Rita should accept a new bill at 3 months. Okay, super. First one, cancel the old bill. So, who need to give money to you? Rita. Rita account to debit. Don't cancel bills receivable because the bills receivable is not in my books. You discounted with the bank rate. Don't credit your bills receivable. You discount your bank rate. You discounted the bill rate. Credit your bank account. How much? Rata account to debit to bank account. How much, sir? For 1 lakh. I need to collect from Rata 1 lakh. I need to pay to the bank 1 lakh. Credit your bank on the due date. Bank will deduct my amount. Next. And they are telling 50,000 they will pay immediately. For balance 50%, they will pay interest at the rate of. Simran agreed to condition 50,000 to be paid immediately together with interest on the remaining amount. What is that remaining amount? 50,000 at 12% per annum for 3 months. 50,000 into 12% into 3 months divided by 12 months. 50% into 12%, which comes to how much? 3,000. 50,000 into 12% comes to 6,000 divided by 12 into 3, 1,500. Now, this is the interest on the balance amount. So, who has to give that amount? Rita account to debit to interest account. How much? 1,500. 1,500. Now, they are paying a bank money along with that interest. Bank account to debit to Rita account. How much they are paying? 51,500. 51,500. For the balance amount, they are drawing one new bill entry. Bills receivable account to debit to Rita account. For balance, how much? 50,000. 50,000. For the balance, 50,000. 50,000. Next. These arrangements were carried out, but afterwards Rita became insolvent and only 40% of the amount would be recovered from the estate. Ayyo. Now cancel this bill entry. Rita account to debit to bills receivable, cancel this bill. How much? 50,000, 50,000. Now how much Rita is giving? Only 40%. I am getting bank. How much? Only 40%, means how much? 20,000. Balance amount is my bad debts. How much? 30,000. To close that Rita account. How much? 50,000. Sir, what happened? Sir, nothing happened. What happened? First one, I drawn one bill on this rate, I think, not Simran. In the books of Simran. So I drawn one bill in the books of Rita. I drawn one bill on Rita. Right here, Rita account. Next, everything is fine. I discounted this bank. Next. This is on the date of what? Cancellation of that bill. Sir, earlier we wrote, in an earlier problems we wrote Rita account debit to drawee, or in other words, we created bills receivable. We created, but in this case, that bills receivable is not in my books. Hence, credit. Debit the Rita, credit the bank. Next. This is the interest. Done. And this is what? We are collecting the money 50,000 plus interest on the balance amount at the rate of 12% for 3 months. For the balance amount, drawing one new bill. For the balance amount, drawing one new bill. Cancellation of that bill. Collection of cash 40%. Balance amount is 60% bad debts. And this is 100% of the amount. Done. Problem done. Simple problem only, sir. But you need to think about this entry. This entry. Which is this entry. Most of them used to write Rita to bills receivable, but bills receivable is not in my books. That's it. Rest everything. This entry also, most of them used to calculate interest, and they will add this amount for this newly drawn bill. No, that interest is not included in the newly drawn bill. Interest is already collected. So we are not supposed to be including the newly drawn bill. I don't think any difficulty is there in this problem. Please ask me any doubts are there in this problem. Wait, I'll show the answer. Yes. Bills receivable to Rita 1 lakh, 1 lakh. Bank discount bills receivable 99. Done. Rita to bank 1 lakh, 1 lakh. Rita to interest 1500, 1500. Bank to yes collecting. New, draw one new bill. Cancel that bill. Done. You have collected this amount and this is the bad debts. I hope you cleared. Please ask me any doubts is there. Any doubts are there in this? Please ask me any doubts are there. Yes, sir. Next, begin with one more important area, sir. Accommodation bills. Accommodation bills. Sir, in case of trade bills, there is a trade transaction between drawer and drawee. But whereas it comes to the accommodation bills, for to obligate financial needs, drawer draws one bill on drawee. Right. There is no any trade transaction between these two, sir, to help the needed person. Now, what I am having, sir, I drawn one bill and So there are accommodating party, accommodation party. This is accommodating and this is accommodation party. Okay. Drawn one bill, yes sir. Accepted, yes. Bills receivable, this is X, this is Y. Bills receivable account to debit, I am having one asset. To Y account, on the due date, there is a liability to pay the amount to Y. What X will do? X will discount the bill with the bank entry. Bank account to debit, discount account to debit to bills receivable account. On the due date, when X is making payment to Y, entry Y account to debit to bank or cash, whatever the name you can use, you can use. This is what? In the books of X. Come to the Y. Y book lo, on the due date, X is liable for me, X need to make the payment and I need to honor an instrument which is known as bills payable account. I am having one asset. What is that asset? X has to pay the money. I am having one liability on this bill. Whoever producing this instrument to me, I need to make payment for this bills payable. No entry on the date of discounting. When X is making the payment, entry bank account to debit, cash is collecting, and who is giving that? X account. On the date of due date, when I am honoring such a bill to the bank, entry bills payable liability is there, close that liability, bills payable account to debit to cash or bank, anything, generally it will come bank account, cash account, I mean bills payable account debit to bank account. Are you getting, sir? Sir, in this case, everyone is good, sir. X is also good, Y is also good. What happened? X. So, X drawn one bill, accepted by Y, entry bills receivable on the due date. I need to make payment to Y. Next, I need to collect on the due date and I am having a liability towards this bills payable. No entry when cash is collected, when it is paid. Very good, sir. Next, sir, when this bill is drawn by drawer and accepted by drawee or accommodating party and accommodation party, there are two things here, sir. Sometimes the arrangements in such a way that X draws a bill on Y, X draws a bill on Y, X draws a bill on Y. Yes, sir, X draws a bill on Y. Next, Y accepts the bill. Y accepts the bill. X discounts the bill with the bank. X discounts bill with the bank. X discount bill with the bank. The proceeds what they are collecting shared equally among X and Y, or the proceeds may be shared in any other ratio. The proceeds will be shared among X and Y, maybe in an equal ratio, maybe in some other ratio, any ratio. They can, according to their agreement, according to their need, they will share. So, what makes it different means, when you are discount the bill with the bank, entry bank account to debit, discount account to debit to bills receivable. Now the issue is, in what proportion this discount will be, in what proportion this discount will be shared in between X and Y as expense, as finance cost, between who and who? X and Y. It depends upon how they are sharing the main proceeds. The proceeds from the bill, if they are sharing in the ratio of 1:1, then the discount also will be shared in between X and Y 1:1. No sir, the proceeds they are sharing in the ratio of 1:2, then the discount will be shared between X and Y in the ratio of 1:2. No sir, the proceeds they are sharing in the ratio of 2:1, the discount will be shared among X and Y in the ratio of 2:1. Done sir. Next. Next sir. Next one. What if what if on due date, what if on due date X fails to pay to Y, X fails to pay to Y. Sir, if on due date, if X fails to pay to Y, yes, X fails to pay to Y. Now, earlier we are writing this entry, bank account debit to X account. I will not write this entry. I will not write this entry, but I will make payment to the bill. I am the primarily liable on this bill. Yes, sir. So I will make payment on this. Yes, sir. Obviously, I will make payment on this. Now, my books lo this X will show debit balance as an asset. Debit balance as an asset. Y books lo. X books lo Y account will be shown as a liability. Y account will be shown as a liability. Next, Y books lo X account will be shown as a debit balance asset. Right? Right. Next. X and Y. Very good. I drawn one bill for 1 lakh. Okay. Entry, sir. I am having one bills receivable account to debit. I need to make payment on this bill to Y. How much? 1 lakh, 1 lakh. Similarly, X is liable for me, X is an asset for me, and I need to make payment for this instrument, bills payable liability, 1 lakh, 1 lakh. Next, first one, come to the second one. Immediately the next step is what? Discounting the bill with the bank. Bank account to debit. Imagine I am getting 90,000. Discount account to debit 10,000 to bill is going out, bills receivable account 1 lakh. In the books of Vilo, no entry. No entry. Very good, sir. Third one. What is the third entry? Now, what the internal agreement between this X and Y, internal adjustment between X and Y is nothing but X, they are having like proceeds they want to share in a ratio of 1:1 or 50:50. They want to share in a ratio of 1:1. How much you got in the form of bank? 90. Now, Y account to debit. Earlier I credited Y account as a liability. Earlier I credited Y account as a liability. Yes. Now I am debiting Y account to debit. How much? 50,000. Y's are 50,000, not 50, 45. Yeah, 50 only. Y's are 50,000, I will tell. To how much I am giving, either bank or cash. I received how much? 90. 90 lo half comes to how much? 45. 45. 90 lo 45. And this 50, this 10,000 is not my discount expense. This 10,000 lo half is mine, half is yours. Why? Because entire amount I am not using. If entire amount I am using, then this entire discount is my expense. But entire amount I am not using, 50% I am using, 50% you are using. Now unnecessarily I debited the discount as my expense, but your expense is 5,000. Now in the books of Y, I am getting cash or bank? Yes sir, I am getting cash or bank. How much you are getting cash or bank? I am getting 45,000. How much is your discount expense? My discount expense is 5,000 and I wrote X is my asset, right? X is liable for me, X is my asset for 1 lakh, but now I am also using how much? 50,000. X is no more an asset for 50,000. X is asset only for how much? 50,000. In this bills payable liability of 1 lakh low, my liability is 50,000. X liability is 50,000. After this, okay. Sir, everyone. So far, everyone is good, sir, like Charan, sir. But the thing is, now on the due date, X failed to pay money to Y. Who drawn bill? X drawn bill. Who accepted that bill? Y accepted that bill. Now the bill is with whose hands? The bill is in the hands of X. Now the bill is in the hands of X. Who discounted the bill with the bank? X discounted the bill with the bank. Tomorrow, X will first ask whom? Primary liability is Y. X will come to the Y. Hey Y, please give the money because you accepted this bill. X is discounted the bill with me. If Y said, yes, Y obviously need to make payment. But on the due date, X failed to pay his share. On the due date, X failed to pay his share. Now what I did, sir? I drawn, what sir? I drawn one bill on whom? X. I drawn one bill on whom, sir? On X. Okay. Now what is the entry? Bills receivable account debit. On the due date, I am having liability towards X because I need to make payment to the X. How much? Imagine some 2 lakhs bill. How much? 2 lakhs bill. Now, for him it is what? Bills payable liability? Yes, sir. Now, on the due date, who has to give that amount? Y need to make payment? Y account to debit to bills payable account. How much? 2 lakhs, 2 lakhs. Now the bill is in the hands of whose hands? In the hands of Y. What Y did? Y discounted the bill with the bank. Bank account to debit. How much you got? 1,80,000. Discount account debit. How much you got in the form of discount? 20,000. 2. Is the bill in my hands or it is not there? Credit your bills receivable account. Entry bank account debit, discount account debit 2, bills receivable account 2 lakhs. Very good, sir. Next. Next, what happens, sir? Now, I am not using that entire money in my pocket. What I will do, sir? How much I am getting? I received 1,80,000. This 1 lakh I will use to repay existing how much? 1 lakh. In this 1 lakh lo, X share how much? 50,000. Y share how much? 50,000. Are you getting, sir? Yes, sir. Now tell me, sir, how much you are paying? Entire 1 lakh. How much balance left? 80,000. Balance left how much, sir? 80. How you got this 80, sir? Sir, I got 1,80,000. How much? 1,80,000. With this 1,80,000, what I did, sir? I settled this 1 lakh first bill amount. Balance left how much, sir? Balance left 80,000. In this 1 lakh lo, 50,000 is X amount, Y amount is 50,000. Balance left how much? 80,000. This 80,000 is shared in the ratio of, again 1:1, 40, 40. They have shared 40 and 40. Now, my question is, this discount of 20,000 need to be shared among between A and B in the ratio of 1:1. No, sir. If they are sharing the proceeds, this in some other ratio. If they are sharing the proceeds in some other ratio, then the settlement for the first bill also has to be done in the same ratio. Then the discount will be shared in that ratio. Wait, I will tell that also. Up to this, okay? Yes, sir. Now, this 80 lo 40, 40. Yes, sir. Now, what Mr. Y did? First, that bills payable is there, no? First bill, that is paid. Bills payable account debit to bank account. How much? 1 lakh, 1 lakh. Balance left how much? 80,000. Now that 80,000, what Y did? 40,000 gave to X entry. X account to debit to cash or bank. How much? 40,000, 40,000. But discount is also there. Discount is, I wrote unnecessarily this discount as my book slash complete expense, but half of the amount is shared between these two. Now, to discount, 10,000 is not my expense. 50,000 to cash or bank to discount. Now, he is also receiving cash. Cash, discount, cash or bank account to debit. How much you are receiving? 40. How much is your discount expense? 10. 2. Who gave this? Y gave this. How much? 50,000. Now, on the due date. Who, sir? On the due date. Now, on the new bill drawn by Y, bank will ask Mr. X. Bank will ask Mr. X. X need to make payment. Old bill, I mean new bill, how much? 2 lakhs. How much you gave to me? Now you gave how much to me? 50,000. How much you settle that bill? Old bill? 50,000. Means in the new bill lo, I used 1 lakh. How much I used? 1 lakh. You used how much? In the new bill lo, in the amount lo, you have utilized 1 lakh. I utilized 1 lakh. If you see in the X books lo, Y account will show a balance of exactly 1 lakh. X books lo. That to debit balance. Here it is credit 1 lakh, done. Here it is debit 50. Now ultimately credit how much? Ultimately credit how much? 50. Now debit 2 lakhs. Ultimately debit how much? 1 lakh 50. Credit 50. Ultimately the debit balance is 1 lakh. Who has to give to whom? Y have to give to X. How much? 1 lakh. But on the due date, Y became insolvent or Y is became some bankrupt. Now nothing is recovered from Y, or some 50% can be recovered from Y. 50% recovered from Y. what our X will do, whether he become bankrupt, bad debts, insolvent, we are not bothered. Bank will collect the money. Now, bills payable account to debit to bank account. How much? Bank will take 2 lakhs from you. But how much amount you need to collect from Y? 1 lakh. How much? 50% is collected. Entry. Cashier bank. How much? 50,000. Bad debts. How much? 50,000. 2. Y account. How much? 1 lakh. Here, X account. How much we are supposed to pay to X? 1 lakh. X account debit 1 lakh. How much we paid in the form of cash or bank? 50,000. The balance 50,000 will be transferred to deficiency account. Deficiency account 50,000. This is the accommodation bill treatment, sir. Solid scenario, n number of times asked in the exam, sir. Highly important for the exam. Very, 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 very important. Main scenario will have this, sir. This you are supposed to have an idea. Imagine you are getting 1 lakh 80. How much? Now in this 1 lakh 80 lo, you are having some 10,000 cash with you. How much? Some 10,000 cash with you. Now you are using only how much? 40,000 and other 50, right? Right. How much balance left? 90 is gone. Balance left is 1,10,000. Now this 1,10,000 also they shared in the ratio of 4:5. The 1,10,000 also they shared in the ratio of 4:5. Now the discount of 20,000 they need to share in the ratio of 4:5. 4:5. Are you getting? Sir, imagine I am having 10. In this 1,80,000 proceeds low, I don't want 50. I added 10 and I took 40. Total 50 I repaid. Are you getting? Who drawn bill on whom in this case? X drawn on Y. Now Y is having how much? Y is having 10,000. Y used the 10,000 and the new proceeds flow Y is using 40. For X they are using 50. Total 90 gone. 1,10,000. This 1,10,000 they are sharing in the ratio of 4:5. How you got that 4:5? This how you shared, you repaid this 4:5 in the same ratio. If they are sharing, then the discount also to be shared in the ratio of 4:5. I hope there is no doubt in this. But very, 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 very important, sir, for exam perspective. N number of times they are asking in the exam. I don't know why that much of importance is given for this accommodation bill, but majority of the cases they are asking this problem. Now come to our problem number 1. If you want to write, please write down, sir. Carefully write down. Analyze what is the reason for writing every entry. Like I always said, don't mug up. Accounting is an art. So you have to be your own style of doing the things within the legal framework. In other words, within that what we having that in that legal framework or in that law we are supposed to be done. Our own style has to be shown. Yes, sir. Any doubt? Please ask me, or else I will go with this problem. Yes, sir. Just go through this question. Yeah. For the mutual accommodation of X and Y on 1st April 2020, X draw 4 months bill on Y. Who drawn? X drawn on Y. They are asking entries in the books of X, but you better prefer preparing the entries in both the books. Entries in the X books, sir. I received one bill is an asset and I am having the liability towards Y on the due date. So entry bills receivable account debit to Y for how much? For 4,000. For 4,000. Next. Y returned the bill after accepting. Very good. On the same date means on the 1st April 2020, X discount the bill with his bankers. You will get how much? Bank account debit, discount account debit to bills receivable account. Entries are bank account to debit, discount account to debit to bills receivable. Credit your bills receivable for how much? For 4,000. How much bank you are getting? 4,000 into 6% divided by 12 into 4. How much? That 80 rupees is what? That is discount. Now 4,000 minus 80, you will get 3920. First one, bills receivable account to debit to Y account, sir. Yes, to Y account. How much? 4,000, 4,000. Second one, discounting with the bank, bank account to debit 3920, discount account to debit 82. Bill is not there with me. Bills receivable how much? Next. Sir, what happened is we are getting some cash with the bank and now that amount is given how much? And remits 50% of the proceeds to Y. Very good. Remits 50% of the proceeds to Y. Entry. I am giving to Y. How much? Discount plus proceeds to make it bank. How much? 960 to discount. How much? 40. What happened? Discount is 80, 2,000. Then you are giving 1960 in the form of bank and the 40 is what? Discount. Why I am writing this? Cancellation of the discount. Very good, sir. Next, what happened? On the due date, this so-called X failed to make payment to the Y. Now, Y drawn one bill on me. I accepted that bill. For me, that is bills payable. Now, X is liable for me. X account to debit to bills payable account. How much? 7,000. Right? Right. Next, what happened? 7,000 lo 4,000 they have utilized for making of bill. Balance left how much? Unable to amount. Y drawn a new bill for 7,000 which is accepted by Y. X discount the bill with the bank. They got 6,600. That 6,600 they utilized. This 6,600 they utilized to settle this 4,000. Balance amount how much? 2,600 lo. Y gave X how much? 1,300 means half of amount they are sharing. How much? Half of the amount they are sharing. Discount also need to be shared in half of. How much I am getting? Bank 1,300. Discount how much? 200. 2. This is Y. Y account debit to bills payable to Y account. How much? 1,500. Are you getting, sir? On the due date, Y is liable for me because Why drawn this accommodation bill on me? Done. Next one, sir. Now, on the due date, who is liable for whom, sir? I is liable for bank. I am liable for bank. But what happened? I become insolvent. If I became insolvent, banker will collect this amount from whom? Banker will collect this amount from Y. Now, the bills payable, what is there? Cancel this bill entry. Bills payable account to debit. 2, because it is not a liability, because I became insolvent. 2, Y account. How much? That is for 7,000. Right? That is for 7,000. Now, I paid only 25 paisa in a rupee to Mr. Y. Come and tell 4,000 credit, 2,000 debit, ultimately 2,000 credit, ultimately 5,000 debit, ultimately 3,500 debit, ultimately 3,500 credit. I need to pay 3,500 to whom? To Mr. Y. To Mr. Y. But what happened, sir? I became insolvent and I am paying only 25 paisa. 3,500 into 25 paisa, 875 I am paying. Balance amount will be transferred to deficiency account. Y account to debit 3,500. 2, cash or bank 875. 2, deficiency. So, balance amount what I am supposed to pay to this will become 2,625 deficiency account. Two six two five 3,500 875. Rest everything I covered, nothing. Sir, how to get the 3,500 without calculating this Y account from the beginning? Yes, so simple, sir. I am liable to Y how much? Initially when I am drawing the bill, 4,000. I gave how much including discount and cash? 2,000. Balance how much I am liable? 2,000. But he drawn one bill on me how much? 7,000. Now, Y only in term due for me how much? 5,000. Y is due for me. But how much they had given me cash in the form? If I am not wrong, 1,600. Yes, 1,500. Balance left how much? 3,500. Are you getting? You can also just by calculation you can also do like this. Yes, sir. Come to one more chapter, bank reconciliation statement. Bank reconciliation statement. Sir, what is this bank reconciliation statement? What is this BRS statement, sir? Why this statement and what is this and why a entity need to prepare or what about this? Okay. Sir, first one. Yes, I am a business. I am doing a business. Yes. So, when I am doing business, generally I have lots of receipts in terms of cash and lots of payments in terms of cash. Very good. Now, bankers are asking these business persons to route these receipts and payments from bank, or through bank. Who is asking? Bank is asking. Now, first of all, why a businessman will open bank account? First one, safe custody. Sir, if that cash is in physical form, there is always a chance for what? Losing that cash or theft or whatever the case. Next, it acts as an evidence. Any payment or receipt act as an evidence. Any payment or receipt act as an evidence. Yes, sir. Any payment or receipt act as an evidence. What is this? Any receipt payment act as an evidence. For example, I sold goods worth 1 lakh to one of my debtor, one of my customer. He paid only 50,000 in cash, and when next time when he's paying 30 and telling last time he paid 70. When if it is a bank transaction, everything is there in an evidence. See, passbook is there, you have paid only 50, pay the balance 50. Are you getting, sir? It acts as a payment. Or I purchased some goods and I paid 50 and my supplier is telling no, you paid only 30. Then I can show this. See, this is the payment what I did in terms of passbook, or in terms of some bank receipts I can show this is what I made the payment. Are you getting, sir? Perfect. Next, it acts as a proof of evidence. Yes, sir, it acts as a proof of evidence. Next one, sir. Interest. Sir, if the funds are there idle, then I will not get anything, sir. For example, if I deposit it in the bank, there is always a possibility to get some portion of interest. And one more, overdraft facility. What facility? Overdraft facility. Bankers is forcing, or bankers are running on the businessman to take these bank loans and overdraft facilities. All these things, for them there is a small portion of income which is in the name of transactions fee or interest or whatever the name they can call. Are you getting, sir? For these reasons, a business person opened one bank account, and what they are telling and how he is having one name. When he opened one bank account, that bank account number also will be there. Bank account number, and that number given to all these customers, and they are making payment by using that number, and daily I can see how much I have received. Where to see? How? That I will tell. Are you getting? Yes. Similarly, I also making payment to my suppliers by using this bank mechanism, and I am paying. Very good, sir. In cash book chapter lo we have learned, in cash book chapter lo we have learned what means, sir, we maintain two columns, one is for cash and one is for bank. Yes, sir, we maintain two columns, one is for cash and one is for bank. Yes, sir, we maintain two columns, one is for cash and one is for bank. Now, sir, yes, this is from businessman's point of view, or this is our point of view, entity's point of view. Now, if I deposited into bank, I am writing on the debit side all my deposits or customer deposits, all checks collected, all these things. If I am issuing checks, if I am making payments, all those were crediting, and I will have some balance by balance carried down. Are you getting, sir? Example, sir. Cash deposited into bank. Sir, how much cash deposited into bank? 1 lakh. Next, second one, check collected from debtor, paid into bank, deposited into bank, paid into bank. How much? Some 60,000. Next, check issued for supplier, check issued, check issued. For what this check is issued? For payment to creditor, in other words supplier. How much? Some 40,000. Next one, rent paid by issuing check, rent paid by issuing check. How much? 15,000. Next, Salaries paid by issuing check. Salaries paid by issuing check. How much? Some 20,000. I hope you are getting the clarity. So these are, imagine these are the only 5 transactions what we are having. Yes. Now I want to prepare one cash book. Yes sir, I will prepare one cash book. Yes. Yes sir. This is my cash book. Yes. This is cash column. This is bank column. This is cash column. This is bank column. Particulars. Particulars. Right. Sir, what is the entry for cash deposited into bank? Bank account debit to cash account. Bank account debit to cash account. Bank lo write to cash. How much? 1 lakh if I am not wrong. Everyone, bank account debit to cash. So you can also take opening balance of cash, but only I want to focus only on the bank column. I don't want to write anything on the cash column, sir. I want to focus only on the bank column. I don't want to write anything. If I want to write something means first of all I should show the opening balance of bank. Okay. Opening balance of cash, and I need to show all these payments in cash. I don't want to show. Next 2. Second one, what happened? Checks collected from debtor. What is the entry I am writing? And the check is paid into bank or deposited into bank. What is the entry? Bank account debit to debtor. Yes, my bank balance is increasing. Debtor gave the check entry. Bank to debtor. How much it is? 60,000. Yes. 60. Next one. Next one is check issued for payment to creditor. Entry. Creditor account debit to bank. My bank balance is reducing. Right, by creditor. How much? 40. Next. Next, rent paid by issuing check. Entry. Rent account debit to bank. Right, by rent. How much? 15,000. How much? 15,000. One more. Salaries paid by issuing check. Entry. Salaries to bank by salaries. How much this is? 20. By balance carried down. How much? 160 minus 40. How much? 120. 85,000. It should have a balance of 85,000. I am only talking about bank. Now, what this chapter is talking is, sir, like how you are maintaining an account for this bank. Banker also maintain one account. Banker also maintain one account. Banker, in banker books also, banker will maintain books of accounts. Banker maintain books of accounts. From banker point of view, what is this, sir? It is an asset or liability. It means a guy who is depositing in the name of savings or current or fixed deposit, whatever the account may be, that is asset or liability from bank point of view. It is demand liability. On demand, when they are putting card inside the ATM machine, or on demand they are giving check, banker has to honor the check, provided they should have balance. Very good. What I want to convey? Banker also will maintain books of accounts, and these things will be form part as a liability from banker point of view. Yes sir, banker is also preparing books. Yes sir, banker is also preparing books. Yes. Now Wait, sir. Yes. Yes. Yes, sir. Banker also maintaining books, date column, particulars. Yes, sir. Date, particulars, deposit, credit, withdraw, debit, balance. Debit or credit. Last one is balance. Yes, sir. Now come, sir. Tell me. Yes, sir. Yes, sir. This is the books which is maintained by whom, sir? Banker, relating to our records. Our records means our, for example, if it is X limited means X limited statement or X limited account, whatever it may be. Date. Did I give any dates? Yes. Imagine, take this as 1st of April. Take this as 2nd of April. Take this as 3rd of April, 4th of April, 5th of April. Okay. Yes. Come to the cash deposited into bank. Very good. This is cash book. Date. Come to the first date. Which is that? 1st April. Particulars. Cash deposit. How much is the deposit? 1 lakh. Credit. From banker point of view, that 1 lakh is a liability, demand liability. Whenever the customer is asking, we need to make payment of that 1 lakh. Balance 1 lakh. This credit or debit, they are talking about this balance. Credit or debit, they are talking about this balance. Second one. This is 2/4. This is 2/4. What is this 2/4? 2/4 is checks collected from debtors paid into bank. Yes. Now collection. How much? 60,000. Yes, 60,000. Right on the deposits column. Because credit, banker point of view, once again this is a liability. Banker on the part of the banker, there is a liability towards this 60,000, towards that guy, towards our X limited. Total 1,60,000 credit. Next 2/4. Next one. Come to the 3/4 checks issued for payment to creditors. 3/4. Checks issued. So when you are issuing check, what is the entry? Checks issued to creditors for payment. Entry. Creditor account debit to bank means banker will write as a withdrawal when means when the check is presented by the creditor to the bank. Banker need to present the check, matlab this creditor need to present the check to the banker When banker is really making payment, then only banker books lo they will write withdrawal. Are you getting or not? Imagine actually the validity period of a check. The validity period of a check is 3 months. Earlier it is 2, now it is, 10 years back only it is revised, it is 3 months. Very good. Now, this validity period of a check is 3 months. Now, I gave this check to our creditor. Creditor at any time during this 3 months, he might present the check into bank at any time during these 3 months. At any time during 3 months, they might present this check to where, sir? Bank. Now, the moment I issued the check, I wrote money went out. But banker will write in the withdrawal column only when our customer, in other words, our supplier, our creditor presented the check to the bank. Imagine the check is not presented by our supplier. I hope you are getting the clarity. Next. On 2/4, what is this 2/4 means? On April 2nd, this is a collection is there. What about this collection? Imagine when the day I deposit the check, same day collection also taking place. But sometimes the collection also will take some 4 to 5 days clearing process, 3 to 4 working days, 48 hours clearing process. Are you getting, sir? Yes. In cash book, I discussed all these things. Next. Come to the next. Next. Rent. Okay. Imagine that guy for whom I gave the check, he presented the check to the bank on the same day, which I said on 3rd of April, 40,000. On 3rd of April. What is this? Amount paid. Amount paid, so and so party name will be there with account number. Amount paid, so and so party name with account number. How much? Withdrawal 15,000. 15,000. Next one. After 3, 4, next one. 4, 4 if I am not wrong, salaries. Rent is 4, 4, salaries is 5, 4. Okay. Rent is 4, 4. Salaries is 5, 4. What is this? Same way that to whomever it is paid with account number and all these things will be there. How much? 20,000. And now balance left how much? After 160 minus 15, 145, which is what balance? Credit balance. And 125, what balance? Credit balance. Now, as per your cash book, the balance is 85,000 bank loan. But as per your passbook, the closing balance is 1,25,000. Why the reason is there? What is that reason? Why that reason? Yes. What is that? Checks issued, but creditor is not presented for payment. 40,000. The difference 125 minus 85 is 40. Yes. Now, when I am checking, this is known as bank statement or passbook. This is known as bank statement or passbook. In other words, this is known as duplicate copy. This is known as duplicate copy of what? Duplicate copy of our account in the books of banker. A duplicate copy of our account in the books of banker is known as what? Passbook. Is known as passbook or bank statement. Is known as passbook or bank statement. I hope you are getting the clarity. Is known as bank statement or passbook. What is meant by passbook? A duplicate copy of our account in the books of bank is known as my passbook. Now, there is a difference between what and what? Balance as per my cash book bank column and balance as per bank records. Nothing but balance as per bank statement or passbook. And now you prepare one statement What? You prepare one statement. Tell why there is a difference. That statement what you prepared is known as bank reconciliation statement. In that statement law, it shows the reasons why there is a difference between bank column of the cash book and the bank statement of the passbook. If you remember, if I want to start a BRS statement for this, either I can start with this balance or even I can start with this balance. It depends upon in the problem, in academic problems law, what balance they are giving. They are providing passbook balance or they are providing cash book balance. It depends upon what balance they are providing. Fine. Balance as per cash book. How much is the balance as per cash book? 85,000. Now, what is the balance as per passbook? Balance as per passbook. I want to make a balance of 85 as per cash book into balance of passbook 125. What I need to do? Add or less? Add. In other words, how to tell means because of that. What is that? Because of the transaction, add. Because of that transaction. What is because of that transaction? Checks issued but not presented for payment. Because of the transaction not accounted in the passbook, my passbook balance is increasing. Add check. So because of that transaction which is not accounted, my passbook balance is increasing. Add checks issued but not presented 40. Sir, how to remember this add and less? All this nonsense means, sir, you are having two. One is, this is known as starting point. What point? Starting point. And this is resultant. This is resultant balance. Because of a transaction, if your resultant balance is increasing, what, sir? Because of a transaction, if your resultant balance is increasing, add. Because of a transaction, resultant balance is decreasing, less. Because of a transaction, resultant balance is decreasing, less. Because of a transaction, resultant balance is increasing, add. That's it. Because of this one, what happened to the resultant book? Either accounting or not accounting of this transaction, what happened to the resultant book? What is resultant book here? Passbook. Either accounting or not accounting. Here accounted or not accounted, which is not to be accounted or not accounted. Because of not accounted, your passbook balance is more. By how much? 40. Add that 40. Imagine if you start the same one by balance as per passbook. Balance as per passbook, how much? 1,25,000. This is what? Balance as per passbook. Now, less. What you are supposed to be less? This 1,25,000 passbook balance as per cash book has to become balance as per cash book. How much? 85. You need to add, you need to less. A 1,25,000 has to become 85. Less what? Checks issued but not presented for payment. What is the meaning of but not presented for payment? A guy, I issued a check to a guy, but that guy is not presented the check to the bank for payment. Yes, checks issued but not presented. How much that is? That is, if I am not wrong, 40. Are you getting? Because of this transaction, either accounted, not accounted, accounted in a resultant book. What happened to the balance of resultant book? Reduced, hence less. So what is the rule to add and less? The rule for add and less, because of the transaction what we are talking, because of either accounting or not accounting done in the resultant book, what happened to the resultant book? Balance increasing or decreasing? Decreasing, less. Increasing, add. That's it. If resultant book balance is increasing, add. If resultant book balance is decreasing, less. Done. I hope you are getting the clarity. Next, sir, now what is a bank reconciliation statement? Sir, bank reconciliation statement is a statement which shows the reasons for difference as per cash book, bank column of cash book and the passbook or bank statement. Now that reasons I am talking about, that reasons for difference. Reasons for difference. What is this reasons for difference? What is this reason for difference? Yes, two reasons are there. One is timing difference. One more, error or omission in where, sir? Either it may be in cash book or it may be in passbook. Sir, why you will get difference means because of two reasons, sir. One is timing difference. What is this nonsense timing difference? And one more reason, error or omission in where? Either it may be in cash book or it may be in passbook. Very good. Come to the timing difference. Come to the timing difference. First one, checks issued but not presented for payment. What is this checks issued but not presented for payment means? I issued, a business person or who is having this bank account, he issued checks, but the validity time period for a check is how many months? 3 months. That to whom the check was issued, he is not presented the check for payment to bank. So the moment I issued the check, what is the entry I am writing? Creditor or to the person to whom the check is giving, account debit to bank. If it is for expense means expense account debit to bank. In my cash book, the bank column is reducing, balance is reducing. But when it comes to the passbook, the balance is not reduced. Means the passbook balance is high because it is not, payment is not done. The passbook balance is more, but even though the payment is not done, from banker's point of view, my point of view, I gave the check, I credited that. So in cash book flow, my balance is reducing. Passbook flow, my balance is increasing. Checks issued but not presented for bank for payment. Checks issued but not presented for bank for payment. Perfect. For payment. Next one. This is one timing difference. Timing means what? At what time I recorded the transaction? That moment I gave the check. At what time they recorded the transaction? The moment they, the creditor or the person to whom the check is made, they presented that to the bank. That is the timing difference. From entity's point of view, they will record when they issued. From banker's point of view, they will record when the payment is really happened. When we actually thrown the money on their face. From banker point of view. Second one, checks deposited but not collected. Checks deposited but not collected. Sir, I deposited certain checks, sir, into the bank, or checks paid into bank, but these checks were not cleared so far. In other words, clearing process is still going on, but the day I deposited the check into the bank, I wrote one entry, bank account to debit. If it is cash, if it is from a party, I wrote bank account to debit to the person who gave the so and so check. Are you getting, sir? In my cash booklet it is already recorded, but when it comes to my passbook, it is not recorded so far. So one more reason for getting the difference. I hope you are getting the clarity over it. Now what we are supposed to do? Because of this transaction, either accounted or not accounted in the resultant book, what happened to the balance of resultant book? Resultant book balance increasing, add. Resultant book balance decreasing, less. That's how it works. Third one, checks deposited but not collected. Checks deposited into bank but dishonored. A check which is deposited into bank but the check is dishonored. I hope you are getting the clarity. A check which is deposited into bank, but the check is dishonored. Are you getting, sir? Yes. Next one. Interest allowed by bank. Sir, banker, for the amount what is there in our bank, banker has give some small portion of interest, 3%, 2%, 1%, whatever it may be. That interest what banker is giving to us, that is added to our bank balance and that is recorded in the passbook. But until I am seeing the passbook, I don't know how much interest is given by the bank. If I know how much interest is given by bank, then I might write one entry, bank account debit to interest account in where? In my cash book bank column. But the fact I don't know. When I will came to know? When I actually seen this statement. If in this statement law, if interest is there, they will give date and they will write interest and they will write on the deposit column and my balance will increase. Are you getting? My balance will increase. After seeing that, I will record one transaction in my cash book law. What I will write? 2 interest. In bank column, I will write 2 interest. Are you getting? That simple is as simple as that. Next, sir. Interest allowed by bank. Interest allowed by bank. Next one. Interest allowed by bank. Next. Interest charged by bank. This time interest charged by bank on overdraft balance. So banker is giving a facility. What is the facility? To withdraw over and above what is the balance you are having? Yes, I withdrawn over and above the balance what I am having. Yes, this interest charged by the bank on the overdraft balance, that interest expense is there. Until I seen my passbook, I don't know how much is this interest expense. Then what I am supposed to do? Come to your cash book. Once first you check this passbook law there. What is this? Interest this time is there on the debit side. Means what is that meaning? My balance is decreasing, means interest charged. Once I seen this, then go to your cash book and write by interest and reduce your balance. Means these two transactions are first recorded in where? These two transactions are first recorded in passbook. That passbook acts as source document. That passbook acts as a evidence to record these transactions in my books of accounts. Are you getting? No, this is a timing difference is there. When banker is charging, actually as per the rules of the bank, as per the timing limits, that at that point of time, either they are allowing or charging. But when I came to know, the moment I am seeing that bank statement, then only I will record. Are you getting? Perfect. Next one. Charges or commission charged by bank. Bank charges or commission. Bank charges or commission charged by bank. So bank charges or commission charged by bank. What is this bank charges or commission? Means banker are performing so many services. So they will charge annual maintenance fee, transaction fee, whatever charges they will charging, that charges they will automatically cancel or debit from the passbook. Matlab that balance will get decreased in my passbook. But when I came to know means the moment I am seeing my passbook or bank statement. Are you getting, sir? These transactions were recorded by the bank first. After seeing where? After seeing my passbook, then I will record in my cash book. Are you getting? Bank charges or commission charged by bank. Next one. Come to the 7th one. Sir, a customer directly deposited into our bank. Customer directly deposited. Customer directly deposited into bank. What happened? Now, one of our customer, without telling to us, just like that, he came and he deposited in that money in our bank account. He went. I don't know he deposited. When I came to know means when I am seeing deposit columns low, his name is there, his account number is there. In deposits column low, passbook low, his name will be there and his account number will be there, and in deposits column it will be there. Then I will see this and I will record in where? I will record in my cash book lo as deposit. To what? To whatever that amount you are receiving, no, what is that? To our debtor. Means there is a difference when they recorded it in passbook, when the customer deposited. But when I am recording, when I see this statement, or when I know that this guy transferred that amount. This is known as what? Customer directly deposit into bank. Next one. Next two were one. Customer directly deposited into bank. Next one. Sir, amount paid by bank as per standing instructions. Sir, this auto debit, you know that auto debit. Yes, I am giving by sending one OTP to bank, I am giving one acceptance like every month on or before 5th or on 5th, just give this much of amount to Bajaj or give this much of amount to like this IDBI or IDFC, all these guys are there now. Now, when I will record transaction means after seeing my passbook. These transactions are first affecting in my bank, matlab these transactions are first recorded in my passbook. After seeing that, I am recording amount paid by bank as per the standing instructions. What I am giving the standing instructions? On every month 5th, pay to Bajaj, or every month 2nd, pay to Bajaj, and every month 5th, pay to this Access. All these things are there, no? Auto debit. These auto debits I will record once I am seeing my passbook. One more. Dividend or any income received directly by the bank. Received directly by the bank. Sir, I am holding shares in a company. Yes, yes. If you are holding shares or if you are holding any debentures or deposit security, what the banker will give you? Banker will give you either any dividend or any interest. Yes. If banker is giving that dividend for shares and banker is giving interest, they will directly at the time of we are purchasing these shares, at the time of subscribing these shares, they will take our bank details, directly they will transfer the amount into our bank. But we don't know the fact they have directly transferred that amount into our bank accounts, dividends or any other income. We will came to know only when we have seeing. What is the difference between this? This is the customer directly depositing, sir, and this is what? This is any incomes which is collecting by our bank, on our behalf, collecting our bank. Are you getting? Like interest on the securities, dividend. Yes, the moment I seen what in my passbook bank statement, I find, oh, this is the amount what I have received from so and so bank, so and so company. Company with that account number will be there, and in the deposit column below that balance will be there. And after seeing this, I will write on where? In the cash book balance. I hope you are getting the clarity. So these are the reasons for what, sir? Timing difference. These are the timing difference. Because of these reasons, our cash book balance and passbook balance is not matching. Bank column, bank balance as per cash book, bank balance as per cash book is not matched with passbook balance. Is not matched with passbook balance. This is known as timing difference. Checks issued but not presented for bank for payment, checks deposited but not collected, checks deposited into bank but dishonored, interest allowed by bank, interest charged by bank on OD balance, bank charges or commission charged by bank, and customer directly deposited into bank, amount paid by bank as per the standing instruction charges, dividend or any other income which is received directly by the bank. Because of this timing difference, there is a difference between what book balance, cash book balance and passbook balance. And one more, error or omission. These are the second category or reasons. Error or omission. Error or omission in where? Error or omission in. Error or omission in where, sir? In. Either it may be cash book or it may be passbook. What is this, sir? Sir, I deposited, examples I am talking. I deposited check into bank but failed to record in my cash book bank column. I deposited but check into bank, failed to record in the deposit column. Or I deposited a check into bank but recorded twice in my cash book bank column. Are you getting, sir? I issued one check but failed to record in my where? In my cash book. Because of this reasons also you will have difference compared with cash book and passbook balance obviously, and you have to show that reason why they have difference. Next one, errors or omissions in passbook. For example, I deposited in savings account, wrongfully they have deposited, wrongfully they have recorded in where? Current account of mine. Or there is one guy called Charan which is PS Charan, one more guy called PC Charan. Now, for example, PS Charan deposited the money into the bank. They might give the credit to the PC Charan. Instead of one account, they gave the accounted in another account. So, these are known as errors or omissions in cash book. So, specifically there are so many reasons, like for example, when the totaling my debits of cash book, I took that excess 10,000. Totaling credit side, I took excess or lower. So, there are so many permutations and combinations. Directly in the problem, we can tackle these things. Directly in a problem, we can tackle these things. I hope you are getting the clarity. These are not the reasons. Always rule 1. What is this? Because of this transaction, either accounted, not accounted in where? Resultant book. What happened to resultant book balance? Increasing or decreasing? Increasing, add, decreasing, less. Already accounting is done, or already accounting is not done. Now I am not doing accounting. Already accounting is done. What happened to the resultant book? Already accounting is not done. What happened to the resultant book? Resultant book balance increasing, add. Resultant book balance decreasing, less. What is the resultant book? Either it may be cash book or passbook. That resultant book depends upon what is the starting point. If starting point is cash book, resultant is passbook. If starting point is passbook, resultant is cash book. I hope you are getting the clarity. So, we can solve some numericals, but then you will have the command over these specific transactions. Nothing is there in this chapter, sir, to be honest. Yes, sir. Come to the numericals. Take one problem or what we have discussed relating to the BRS in the last class. Yes, I said like all these transactions, there are so many reasons for getting difference from the balance as per bank column of the cash book and balance as per the bank column of cash book and balance as per your passbook. So, what are the things you are supposed to do? Yes. Yes, sir. Yes. So, I already said you have to be in the problem low, they have given both the balance like cash book balance and passbook balance, and they are telling start from this balance, start from that balance. So, how the problems used to be? Generally, they used to give only one balance and the balance you used to find out, right? Okay. So, what is the balance they are provided in the question? When Nikki and Co received a bank statement, yes, bank statement. So far, just now I shown what is that bank statement like. What is there in that statement? Which is the duplicate copy of our account in the books of bank. Whatever debited in our cash book, it will be credited. In other words, it will be recorded on the debited means their deposit here, credited means their withdrawal. That's it. Showing a favorable balance. What balance? Favorable balance means a positive balance which is debit balance from our point of view. Very good. For the period ended 30th June 2019, this did not agree with the balance in the cash book. This did not agree with the balance in the cash book. Yes, obviously there are so many reasons. Yes. Now analyze these transactions. Because of these transactions, the resultant figure either accounting or not accounted, because either accounted or not accounting. What happened to the resultant book? Balance increasing, add, balance decreasing, less. I hope you are getting the clarity. Next. First one. Bank reconciliation statement as on 30th June 2022, 2019. Very good. Very good. Next, particulars. Particulars. Particulars, amount inner column, amount outer column. Yes. Next. Yes, sir. Yeah. Read the transactions. Yes. Yes. Particulars, amount, amount. First one, balance as per what book? Passbook. That is, in other words, make it as favorable balance or balance. Anything is fine. Favorable balance or balance as per passbook or bank statement. You can also write bank statement. How much is the amount? Outer column. 10,39,200. Yes, 10,39,200. Next, you need to add certain transaction. You need to less certain transactions. Yes. Sir, a deposit, how much? 3,09,200 paid on, deposited on 29th June 2019 had been credited by the bank, had not been credited by the bank until 1st July 2019. What happened, sir? A deposit of 3,09,200 paid on 29th June. Okay. I paid on 29th June 2019. Has not been credited. Banker is not given that credit by the bank until banker gave on 1st July. Means when I deposited, what I will write the entry? Bank account debit. When I deposited, bank account debit to cash. Bank account debit to cash. I increased my what? I increased my bank balance in the cash book, but passbook is not increased. Sir, what is my resultant figure? Balance as per cash book. What is my resultant figure? Balance as per cash book. Because of this transaction, what is accounted means what is recorded at the time of deposit this check or amount into the bank, my cash balance is increased, my passbook balance is not increased because amount is not credited as on 1st July, amount is credited on 1st July, hence my cash book balance is increasing. How you know your cash book balance increasing? The moment I deposited, the moment I paid this money into the bank, I recorded entry bank to cash. My cash book bank balance is increasing, but in the bank statement or passbook they will write on the deposit column when they give the credit. Means so far they are not recorded, so hence my cash book balance is increasing. Add. Cash deposited into bank, cash deposited into bank, but not credited in passbook or bank statement. How much? 3,09,200. 3,09,200. Come to the next one. On 30th March 2019, company has entered into hire purchase agreement to pay by bank order. To pay by bank order. Yes, to pay by bank order a sum of 3 lakhs on the 10th of each month commencing from April 2019. April 2019, May 2019, June 2019. April 10th, May 10th, June 10th. So how much it comes to? 3 lakhs plus 3 lakhs plus 3 lakhs. Total comes to how much? 9 lakhs. Total how much? 9 lakhs. What happened to this 9 lakhs? 3 plus 3 plus 3. What happened to this 9 lakhs? 3 plus 3 plus 3. Now, these were paid by whom? Banker. The moment these were paid, that standing instruction charges, auto debit, what happened? Automatically it will be recorded in where? In my passbook. But this 9 lakhs will not be recorded in where? Cash book. They are only telling has been not recorded in the cash book. Means because of this transaction not recorded in cash book, a payment not recorded in cash book, a 9 lakhs payment which is not recorded in cash book, a 9 lakhs payment which is not recorded in cash book payment, my cash book balance is more comparing with passbook. How much? 9 lakhs. Add that 9 lakhs. Money paid but not recorded in cash book. How much? 9 lakhs. I hope you are getting the clarity. I hope you are getting the clarity. Next. Next one. A customer of the firm who received a cash discount of 4% on his account. How much? 4 lakhs. A customer due how much? 4 lakhs. Received a cash discount of 4%. 4% on 4 lakhs, which comes to 16,000 if I am not wrong. Paid the firm a check on 12th June. When they gave the check? On 12th June. The cashier erroneously, means without any intention, enter the gross amount. What is the gross amount? 4 lakhs in the bank column of cash book. Yes sir, perfect. How much you collected in the name of check? I collected in the name of check bank account to debit to the customer 3 lakh 84. How 3 lakh 84? 4 lakh minus 16. But without knowing the discount fact, our accountant recorded in the bank column of cash book as how much? 4 lakhs. Means how much their excess recorded in cash book? 16,000 excess debited in the cash book. Cash book balance is more by 16,000. Hence, the resultant is cash book. Cash book balance is more by 16,000 comparing to the passbook. Add that 16,000. Add that 16,000. Wrongly recorded in cash book. 4 lakh minus 3 lakh 84. 16,000. Next. Bank charges amounting to 3 lakhs. How much is the bank charges amounting to 3 lakhs? Had not been entered in cash book. Cash book lo bank charges is not accounted. Bank charges amounting to 3 lakhs has not been entered in cash book, but it is entered in passbook, so that passbook balance is less. As a payment is not, as an expense is not recorded in your cash book bank column, hence the cash book bank column is more. Hence the cash book bank column is more. This is an expense which is not reduced from where? In the cash book, hence it is more, but already reduced in where? In the passbook. Hence what you are supposed to do? More. Add how much? 3,000. 3,000 bank charges not entered in cash book, but entered in where? Passbook. Because of this, your cash book balance is more, a payment which is not entered. Next. On 28th June, very good, a customer of the company, yes, directly deposited the amount in the bank 4 lakhs, but no entry has been made in the cash book. Because of this transaction which is not entered in the cash book, the passbook balance is more, cash book balance is less, hence the resultant cash book balance it is less. Now reduce this amount to less, customer directly deposited into bank, less customer directly deposited into bank. How much? 4 lakhs. How much? 4 lakhs. 4 lakhs. Next one. 11,200 paid into bank has been entered twice in the cash book. I deposited 11,200, an error or omission which is committed in the cash book. Because of this error or commission, a deposit which is you recorded twice in your cash book. What is that? 11,200 recorded twice in your cash book. What happened? Your cash book balance is more by how much? 11,200 cash book balance. Cash book bank column balance is more because it is entered twice. Hence, add 11,200. Cash deposited entered twice in where? Cash book how much? 11,200. Next, a debit of, sir, one of the beautiful points are this one. Sir, wait, before going to this point, I'll explain what actually they mean. Sir, banks need money to run the bank. Yes. See, bank earn money in the name of interest, transaction fee, all these things. Bank collected so many deposits, either in the name of fixed deposits or savings or whatever it may be. Bank is having crores and crores of money. Now, I want genuine persons, so that I will give that money for them at an interest of 18%, 16%, 15%, 24%. On this savings deposit, I will pay some 6, 7, 8, 9, whatever the case may be. Now, I want some income and I am running based upon this function. Very good. Perfect. Now, I am asking most of the genuine business industrialists to, sir, please take the loan. If you want loan, yes sir, we are providing loan, sir. It's 15%, 14% comes at term there. I myself is asking them to please take loans like that. If they are genuine and they are having some net worth and there are some great companies. Now what happened? They have one check. This so-called business industrialist give the check. Imagine some XYZ business, that is XYZ company. Now what happened? The check, what is there? The check, what is there? Yes, because of the relationship, 5 years, 10 years relationship with the banks and this so-called XYZ company, whatever that may be relationship, they seen this check and they have seen that balance 10 lakhs is there on the person who gave the check. The check is for 10 lakhs given by Charan. Now banker is seeing Charan account lo 10 lakhs is there, and yes, Charan account lo 10 lakhs is there. Okay sir, no problem, we are giving the money, take sir, like that. Who is giving? Banker is giving to our XYZ. Without deducting from where? From this Charan account. Without deducting from Charan account, banker is giving the money to whom? XYZ company. After seeing, after paying, after once they see check, it looks out of date. The validity period of check is only 3 months. Means the 3 months is expired. It is an outdated check. Means the check you can't make payment for this, which is known as a bounce check because of non-payment of money, because of expiry of time. Then what will happen? Immediately banker, when the banker in the passbook law, when they are giving money, what they will do? They will write on the deposit. Right? Immediately what they are supposed to write? They have to write on the withdrawal. Withdrawn means first they have given on the credit, now they have to write on the debit side. Now they have to write on the debit side. Deposit and withdrawal. Deposit and withdrawal. Yes, customarily directly deposited into bank. Customer is this one. What is this? A debit of 11 lakhs appearing in where? Bank statement for this unpaid check. So far what I discussed, this is known as unpaid check, which has been written marked out of date. Means a debit means earlier they gave credit of 11 lakhs. Now they are giving debit of 11 lakhs. For to cancel earlier credit, they are debiting now. A debit of 11 lakhs appearing in bank statement for an unpaid check. This check is known as unpaid check. Why this became unpaid? Which has been written marked out of date. Because of out of date, this became unpaid. If a check which is become out of date and which is unpaid because of out of date, and banker is debiting, means what is that meaning? Earlier credit is done, to reverse that they are doing debit or getting. It is not a mistake. Actual mistake done when you are giving that money. Now to rectify that mistake, they are debiting it. Earlier credited, now debited. Banker point of view nullified. But when I received the check or when I deposited the check, I debited bank account. When I received the check or when I deposited the check, I debited what? Bank account. What I want to convey on this? So when your bank balance is increased in your cash book, when you are deposited, you wrote one entry, bank account debit to customer, whatever it may be, your bank balance is increased in the cash book, but passbook lo first credited and then debited, no impact. Bank matlab cash book balance is more by how much? 11 lakhs. Next, what happened? The check has been redated by the customer, very good, and paid into bank again on 5th July. Once again, I took the new check and on the I took on 5th, I will deposit in the 5th July. Means because of this transaction, cash book balance is more because already I deposited, I recorded. Passbook lo no effect. Cash book balance is more. I want to add. Add how much? 11 lakhs. Debited by banker for unpaid check because of out of date. Perfect. Now add all these. Now add all these. How much? 3,09,200 plus 9 lakhs plus 16,000 plus 3,000 plus 11,200 plus 11 lakhs, which comes to how much? 23 lakh 39,400. Add 10 lakh 39,200. You will get how much? 3 lakh 33 lakh 78,600. Yes, 33 lakh 78,600 less how much? 4 lakhs. Then balance as per cash book how much? Minus 4 lakhs, which you will get 29 lakh 78,600. I hope you are getting the clarity. This is how it works. No working required, just give that everything, more than enough. 29, 78, 600. 29, 78, 600. Yes, sir. Yes. Yes. Yes, done. Yes, deposit. Yes. Yes. Everything we took correctly only, sir. Just you check, and this is they'll ask some 5 marks. Easy. So similar sort of question they have asked in earlier exams n number of times. High chance of asking at any time. See, they might ask a small questions with 5, 6, 7 points for 5 marks, or they might ask with 10 points for 10 marks. So yeah, whether they're asking small question or big point, points remains the same. Matlab, these adjustments remains the same. You have to think because of this transaction, either accounting or not accounting is done for the resultant book. What happened to the resultant book balance comparing to the starting point? Either if it is increasing, add, decreasing, less. Apart from that, that nothing is there. Done. Moving to the next problem. The cash book of Satyam Traders shown a debit balance of 4,12,200 at the bank. Very good. As on 31st March 2021. Perfect. But you find that it does not agree with the balance as per passbook. After checking, you find the following. Yes, sir. Bank reconciliation statement. Yes, sir. Particulars amount amount. Perfect. Particulars amount. Yes. Balance balance as per balance as per cash book. How much is the balance provided in the problem? 4,12,200. 4,12,200. Come to the first point. Yes, they are asking that your passbook is not tallied and get the balance of the passbook and show the differences. Perfect. Yes. On 12th March, very good, 2021, the payment side of cash book was under cashed. How much? 12,000. Means if payment side of cash book is under cashed means the cash book balance is more. How you know, sir? For example, this is the cash book. This is the bank column. Payment side is under casted by 12,000. For example, payment side is under totaled by 12,000 means payment side is lower. Now receipt side is higher. Means cash book receipt side is higher. Means cash book balance, debit balance will be, cash book balance will be lower when compared to the passbook. Mistake taking place in the cash book, just because of a mistake taking place in the cash book balance is more, but passbook balance is less. A mistake which is committed in the cash book, because of that mistake which is you have wrongfully undercasted, your cash book debit balance is more comparing to your passbook. Because of this transaction, passbook balance is showing at correct figures, that correct figures is less comparing to the passbook, hence less, what that less? Under cashed, payment side under cashed in cash book, less. Add less. Payment side under cashed in where? Payment side under cashed in cash book is how much? 11,200. Next, a check of 85,000 issued on 20th March, but it is not taking in the bank column. When you issue the check, it should be taken on the credit side. A check which is not taken on the credit side of bank column, hence your debit side is more. Hence your debit side is more. Imagine if the question is silent, assume it is presented and payment is also done. Payment is also done and the difference is there, but the difference, cash book is more, passbook balance is less. Are you getting? Why cash book is the more? Payment is not recorded. Why passbook is less? Because payment is done, payment is also recorded. Hence less. How much? 85,000. Check issued but not taken in where? Bank column. But not taken in bank column of cash book. Check issued but not taken in bank column of cash book. How much, sir? 85,000. 85,000. Yes, sir. Come to next one. On 22nd March 2021, debit balance of 8,500 as on the previous day was brought forward as credit balance. Ayyo. What is the debit balance? 18,500. And how they took as credit balance? In rectification chapter lo multiple times I said, when instead of taking on the debit side, if you are taking on the credit side, the quantum of mistake is twice the amount of mistake. Means the rectification shall be passed for twice the amount of mistake. What is the twice here? 18,500 into 2, which comes to 37,000. I need to post on the debit side, so that the credit of 18,700 will be cancelled. 18,500 will be cancelled. Balance left only, that 18,500 will be there. If I am posting only 18,500 on the debit side, means that credit will be cancelled, but originally you need to recognize that. Who will recognize? Now recognize. Hence, double amount have to be is the amount of mistake, 37,000. What I am supposed to do? Is taken on the credit side. If you are taking on the credit side, means now your balance is less by how much? 37,000. Cash book balance is more by 37,000. I mean, passbook balance is more by 37,000. Hence, add that 37,000. Add 37,000. Add 37,000. Wrong side posting in. Wrong side posting in cash book. Next one. Out of total checks amounting to 42,000. Yes, out of total checks amounting to 40,000. Issued in the last week of March 2021. Issued on the last week of March 2021. Checks aggregating 28,500 were encashed in March 2021. What is this nonsense? Sir, out of the total checks amounting to 42,000, I issued in the last week of March. Very good. Immediately I written on where? Payment side of cash book. Immediately the moment I issued, I written here how much? 42,000. But checks aggregating 28,500 only encashed for payment. Matlab, the balance 42,000 minus that amount 13,500, still it is payment is not done in where? Passbook. Hence your passbook balance is more comparing to your cash book. Hence add how much? 13,500. 13,500. Write what? Checks issued but not presented. Done. Come to the next point. Dividend of how much? 35,000 collected by the bank. Yes. Fire insurance premium 20,000 paid by bank were not recorded in the cash book. Dividend received 35,000 by the bank. Bank balance is increased. Add dividend collected not recorded. How much? 35,000. Next, fire insurance premium. How much? 20,000 paid by it were not recorded in cash book. Were not recorded in cash book. Means fire insurance premium paid, passbook balance is decreasing, cash book it is not affected. The resultant book is what? The resultant book is passbook. Passbook balance is reducing. Hence less. Less what? Fire insurance premium paid but not recorded in cash book. How much? How much is not recorded in cash book? 20,000. 20,000. Next, one check issued to creditor. Yes, sir. One check issued to creditor. How much is the check you issued to the creditor? 1,29,000. Very good. Was recorded twice in cash book. Check issued means a payment is recorded twice in the cash book. Hence, the cash book balance is reducing. Passbook balance is at correct figures, that is more when it comparing to your cash book. The resultant is your passbook. Hence, add how much? 1,29,000 in where? In your passbook. Matlab in your BRS statement. Add payment recorded twice. Payment recorded twice in cash book. Next. Next. A debtor, Mr. A, has deposited the check for 32,000. Very good. A debtor deposited a check for 32,000 into the bank directly in the month of March 2021 without intimating to the Satyam Traders. Satyam Traders is there, a debtor is there. Satyam Traders is not intimating whom? Satyam Traders is not intimating that, this debtor is not intimating the Satyam Traders, and he is directly depositing a check into our bank account, Satyam Traders bank account, 32,000. The fact that he deposited, I don't know. Next. And the same check was dishonored by the bank. The same check is dishonored. Perfectly, it is dishonored by the bank due to insufficient funds in the month of March itself. First of all, did I recorded anything? No. I means whom? Satyam Traders cash book lo. I don't know this nonsense happened. I not even recorded anything. Did bank give any credit? No. Why? Because amount is not collected. Check he gave, but amount is not collected. Bank also will not do anything. Hence, this is not subject to reconciliation. When it is subject to reconciliation, when any transaction is subject to reconciliation, it is recorded in one place, and if it is not recorded in other place, then only reconciliation comes into picture. There also not recorded, here also not recorded, then where is the question of reconciliation? For the transaction, reconciliation is not required, because in cash book law I also didn't record anything, and in passbook law banker also didn't enter anything. Then where is the question of reconciliation? No reconciliation. Come to the next. A check from customer for how much? 5,000 was deposited in the bank on 28th, but was dishonored. Advice received from bank on 21st. Okay. My cash book balance is more because a check from customer 5,000 was deposited. I entered in my cash book in the debit side to customer. Cash book balance is more, and passbook balance is at correct figures, which is less because it is not entered in where? Passbook, because it is dishonored. And I know that this is dishonored on April 3rd. Now what I am supposed to do? Passbook balance is less, cash book balance is more because I entered in the debit side of cash book, but it is not entered in the passbook. Hence, my passbook balance is less. Now you are supposed to reduce how much? 5,000 less 5,000. What is the check? Check issued but not presented for payment, or check dishonored. Check paid into bank but dishonored. But dishonored. I hope you are getting the clarity. Yes, come to the ninth one. Bank paid credit card bill 2,500, which is not recorded in the cash book. Cash book law, that payment, I don't know how much bank paid. Now in the cash book law, that amount is not recorded. Passbook law, it is recorded. Passbook balance is less comparing to the cash book because its payment is not even entered in the cash book. Hence, my passbook balance is reducing. Less how much? 2,500. Less 2,500. What is that less 2,500? Bank paid credit card bill. Next one. Bank wrongly credited check of 25,000 of other customer in our account. Perfect, sir. Banker gave a wrong credit of 25,000. Wrong credit of how much? 25,000. Banker gave a wrong credit of 25,000 of other customer in our account. It is not even entered in my cash book. Okay. But it is entered in our passbook. Hence, passbook balance is more comparing with the passbook. Hence, add how much? 25,000. Add how much? 25,000. What is this 25,000 add? Wrong credit given by banker. Wrong credit given by banker. Next, come to the 11th one. Bank credited check of 2,000 in savings account of the proprietor of Satyam Traders instead of crediting check in current account. Bank credited a check of 2,000 savings account of proprietor Satyam Traders instead of credited to the, actually this should be credited to the current account, but it is credited in the savings account. But the moment I deposited in the current account, cash book current account, I increased the cash book balance, but passbook lo current account balance is not increased, cash book balance is more, passbook balance resultant is less, hence less how much? 2,000. Less 2,000. Wrong posting in savings account instead of current account. Instead of current account. Next one. Instead of current account. Next. 500 discount received wrongly entered in where? Bank column of cash book. Sir, discount allowed will be recorded in credit side of discount received column. Discount allowed or received? Discount received will be recorded in where? Credit side of what? In which column? In the discount column. Cash book, if you remember, we are having how many columns? Cash, bank, discount. Now, a discount have to be recorded in discount column of credit side. But you recorded on which side? On the bank. That's what they're telling. 500 discount received. Okay, discount received. Wrongly entered in bank column of cash book. Wrongly entered debit side or credit side? Credit side. How you know? It because it is discount received. Are getting? Discount received should be credited in the cash book discount column, but wrongfully they have credited in where? Bank column. That's what that meaning. Are you getting, sir? 500. Wrongfully they have credited in where? In your cash book lo credit side they have credited. Cash book balance is less because of that credit. Passbook balance is more. Add how much? 500. Add 500. Discount received entered in cash book bank column. Cash book bank column. Last one. Bank debited charges how much? Bank debited charges 200. Bank debited charges 200 for when? 25th March, for which no intimation received till 31st March. Means banker they have repeated that charges. Matlab banker reduced that amount. My passbook balance is less. It is not even recorded in where? Cash book. My cash book balance is more as this payment is not recorded in my cash book. My passbook balance is less because it is accounted. Passbook balance is less. Now what I am supposed to do? Less bank charges. Less bank charges. Bank charges entered in passbook or bank. How much? 2,200. Yes, sir. Total this 37,000. Sir, you practice, then only you will get. Don't just copy or don't just audit what I am doing. Whether he is teaching correct or not, don't do that auditing and all. 35,000. 37,000, 13,500, 35,000, 1,29,000, 25,500, 2,40,000. Total this 2,40,000 plus 4,12,200. How much you will get? 6,52,200, 11,200, 85,000, 20,000, 5,000, 2,500, 2,200, 1,25,900. Then minus 6,52,200, 4,12,200, add 2,40,000 minus 1,25,900, which you will get. 1 second. Total 37,000, 13,500, 35,000, 1,29,000, 25,500, which comes to 2,40,000 plus 4,12,200, which comes to 6,52,200. Very good. Next, come to the 11,200 plus 85 plus 20 plus 5,000 plus 2,500 plus 2,200, 1,25,900. 2,40,000, 1,26,700. 1,26,700. What happened? Sir, this is 12,000, not 11,200. This is 12,000, not 11,200. Yes. If it is 12,000, that is X, it is there 12,000 only. I mistakenly took 11,200. That is 12,000. Perfect. Then now add 800, 1,25,900 plus 800, which is 126,700. $126,700. If you less, the resultant is how much? 126,700 minus 6,52,200. You are getting 5,25,500. 5,25,500. 5,25,500. 5,25,500. Everything done correctly, but this we took instead. I took 11,200. Rest everything is correct only. Rest everything is correct, but now I corrected. Everything is done. And please provide one note stating that the transaction what is there on 7th, it is neither affecting your cash book, passbook. Reconciliation is not required for that. You have to provide note which will carry 1 mark for that. I hope you are getting the clarity. Yes, sir. We'll move to the next problem. Yes, sir. Come to yet another problem. In this problem, we are going to discuss what if the balance is unfavorable. In other words, overdraft balance. Sir, what is this overdraft balance? Sir, nowadays bankers are giving one facility to withdraw over and above what you are having in the bank. Matlab, excess withdraw. Excess withdraw. Okay, sir. Yes. Because it having on the pattern how you are using, how many times you are depositing, how much value you are depositing, on the usage of your account status, they will generally give these type of a credit limits, like on the base of your profile they will sanction some credit limit. Okay, sir. Now imagine I have utilized that overdraft facility, hence my balance, if you see cash book, bank balance is not showing a debit balance, it is showing a credit balance, means credit side is more, debit side is less, balance carried down is coming on the debit side. This is known as what balance? Overdraft balance from our point of view, cash book point of view. Samely bank statement point of view, for bank, so this customer who took this facility of what? This facility of overdraft facility, who took this overdraft facility, for them, matlab for bank, this guy is an asset, hence will show debit balance, because bank need to collect from this guy and this guy need to pay to the bank. From this guy point of view, it is what? It is a liability. What it means? Bank balance, bank overdraft is a liability. From bank point of view, this idiot account is what? Asset, because bank need to collect from this idiot. Perfect. Fine, sir. Come to the BRS point of view. Nothing, sir. Start with what? Balance, in other words, unfavorable balance or overdraft balance, OD balance, as per either cash book or passbook. Okay, I am starting OD balance as per cash book or passbook. Yes, sir, this is a negative figure. This is a overdraft figure. Now, what you are supposed to do, add less. Sir, think that resultant balance is also overdraft. Think that. That's how we used to solve these problems. Think that the resultant balance, whatever it may be, passbook or cash book, is also what? Is also negative balance, overdraft balance. And because of one transaction either accounted or not accounted, because of a transaction either accounted or not accounted, because of a transaction either accounted or not accounted, because of a transaction either accounted or not accounted, what happened in the resultant books? Overdraft balance. Overdraft balance increasing, sir, add. Overdraft balance decreasing, sir, less. Example, sir. Imagine I started with cash book. Okay. Checks issued but not presented. Okay. Because of checks issued but not presented, I credited in the cash book. Cash book overdraft balance is more comparing to the passbook overdraft balance. Passbook overdraft balance is less because passbook will write on the withdrawals column how much is encashed. Then what you are supposed to do? Less, because your passbook balance is less. That's it. Because of this transaction, what happened to the resultant overdraft balance? Either increasing or decreasing. Increasing, add, decreasing, less. This is a positive figure, then overdraft as per the resultant book, cash book or passbook. Sir, this is a negative figure, then positive balance as per the resultant book. Because I took here positive figure, here also if it is a positive figure, then what is this? Here also if it is a positive figure, then overdraft balance as per cash book or passbook. If this is a negative figure, then what? This is positive balance as per cash book or passbook balance. I hope you are getting the clarity. Shall we start one problem based on this? Nothing is there, sir, just it's a matter of practice. If you practice one problem, nothing is there in this. But only thing, assume that resultant book also is having overdraft balance. Because of this transaction, overdraft balance increasing, yes, add. Overdraft balance decreasing, less, that's it. Think that resultant balance is having what? Overdraft balance, that's it. Yes, sir. The bank passbook of account number 5678 of Mrs. Rani. Yes, Mrs. Rani is having an account number 5678. Showed an overdraft of 33,575. Very good, sir. What is the overdraft balance in where? In the passbook. And as on 31st March 2020, on going through the passbook, the accountant found the following. On going through the passbook of which passbook? 5678. This account related passbook I am seeing. Which passbook? 5678. See, if I am having three accounts, I will not have only one passbook. I will have three different passbooks. In other words, I will have three different bank statements. Now, I am having that passbook or that bank statement which is account number 5678. Perfect. Start your problem. Don't do audit and all. Write along with me. Bank reconciliation statement in the books of Mrs. Rani. Perfect. Next. Yes, sir. Particulars, amount, amount. Next. Yo. Yes, sir. Overdraft balance as per what book? Passbook. How much is overdraft balance as per passbook? 33,575. 33,575. Add less. Perfect. Add and less. Yes. A check of first one. A check of 1080 credited in the passbook on 28th March. Where it is credited? In the passbook. When? 28th March 2020. Being dishonor is debited again in the passbook. Okay. First they credited a check in the passbook. It is dishonored, debited again in the passbook on 1st April. Okay. Okay, sir. They gave first credit. Okay. Dishonor, they gave debit on 1st April. When I deposit the check, I will give debit to my cash book. Yes. When this credit of a check 1080 credited in the passbook on 28th March, being dishonor is debited again in the passbook, there is no entry in the cash book about the dishonor. Very good, sir. See, When I deposited the check, I debit my cash book. Perfect. Entry, bank account debit to customer, whatever the name it may be. Next. Banker wrongfully give one credit, sir. A check of 1080 credit in the passbook. Okay. On 28th. Once it is dishonored, banker debited. From banker point of view, everything fine. But on 28th, banker given that credit. And on when I deposited, I debited my cash book. Now there is no difference. I debited, banker also credited. There is no difference. Banker reversed on which date? 1st April. If on 1st April, there might be difference because my books flow it is having higher balance, banker reversed means banker lower balance. But as on today, matlab as on 31st March, there is no difference in cash book and passbook because of this transaction. Because you accounted in cash book, yes, passbook also they gave credit. Hence, because of this, there will not be any effect in your where cash book and passbook balances. Hence, it is not qualify for BRS statement. What transaction qualify? Which transaction qualify for BRS statement means that transaction either accounting or not accounting shall have a difference. Matlab shall have a difference in either of the book. Because of the transaction accounting or not accounting, both books are having same. Matlab both books you recorded or not recorded. Then why is the question of BRS and all this stuff? Not qualify for BRS. Come to the next one. Bankers had, creditor had account. Bankers had, credited her account. 2800. Okay. For what? Interest collected by them on her behalf. But same has been not entered. Sir, interest collected on her behalf. Now, banker had gave one credit in that bank statement, but this entry is not yet recorded in where? Cash book. If it is recorded in the cash book debit balance is more, credit balance is less. Matlab, it will show debit balance. But as it is not recorded, the overdraft balance will be more. If it is recorded, overdraft balance will be less. Why? Because credit side debit is more, credit is less. As it is not recorded where? In the cash book, as it is not recorded on the debit side of cash book, credit side is more, then at least to this amount a debit is missing, hence the overdraft balance is increasing. What increasing? Overdraft balance is increasing. Are you getting or not? Once again see. 2800. Yes sir, 2800. Recorded, recorded. Where it is recorded? Passbook it is recorded. Cash book recorded, not recorded, not recorded. Just because the debit is not recorded, then what happened to the overdraft balance? If this debit is recorded, then the overdraft balance might get reduced. A debit not recorded, overdraft balance is increasing. Hence, add. Assume the resultant also having what? Assume the resultant also having what? Resultant cash book is also having overdraft balance. A debit which is not recorded, which leads to what? Increase in your overdraft balance, hence add. $20,500 interest collected, not recorded in cash book. Interest collected, not recorded in cash book. Come to the next one. 2800. Where this 25 is? $2,800. Yes, sir. Next one, sir. Out of 20,500 paid in by Mrs. Rani in cash and checks. Yes, they have paid in cash and in checks. Checks amounting to 7,500 were collected on 70. Means for 7,500, for how much? 7,500. So out of 20,500 paid in by Mr. Rani in cash and in checks. Means this is what I deposited into where? Bank account. Checks amounting to 7,500 is collected on the next month. Means because this amount is already debited in where? In your cash book. Cash book overdraft, what happened? Reducing. Cash book overdraft balance is reducing. Now what you are supposed to do? Less. How much? 7,500. Checks paid or checks issued but not presented. Out of 20,500 paid in by Mrs. Rani in cash and check. Okay. Checks deposited but not collected, amounting to 7,500 we are collecting. Checks deposited but not collected. Because of this, overdraft balance is reducing less 7,500 checks deposited but not collected. Perfect. Come to the next one. Out of the checks amounting to 7,800 drawn by her on 27th March, she drawn one check how much? 7,800 drawn by her. A check of 2,500 was encashed on 13th. Because of this transaction, I drawn one check amounting to 7,500 credited to the cash book. Overdraft balance is more, but 2,500 is encashed. To this 2,500, my overdraft balance is more in the cash book. Hence, add 2,500. Checks issued but not presented. Add. Checks issued but not presented. Come to the next one. Banker seems to have given her wrong credit for how much? 500. Bankers seems to have given her wrong credit of how much? 500. Paid in by her in account number 8765 and a wrong debit in respect of check 300 against her account 8765. Carefully see, sir. These are some peculiar transactions. Banker seems to have given her wrong credit. Paid in by her account 8765. Means banker seems to have given a wrong credit of 500 in where current 5678 lo paid in by her in account. She paid in the account number of what? 8765. But they have given the credit in where? Account number 5678. Because of this 5678 overdraft balance, what happened? Giving some credit is reducing. Now, the overdraft balance in 5678 passbook, cash book. Sir, this credit is there in where? Deposits. Because of this, overdraft balance as per this passbook is reducing. Are you getting or not? Why, sir, that is reducing? If that credit is not there, then your overdraft balance is more. What happened in this 5678 of cash book? You not even recorded that of a deposit, not even recorded that in the debit side of cash book. Hence, comparing with the passbook, overdraft balance as per cash book is more. Comparing with cash book, overdraft balance as per passbook is more. How you know this is more, sir? Sir, 5678 is what? 5678 is this account number or this currently what we are referring. In this law, bank wrongfully given what? One credit. Just because bank wrongfully given one credit, my balance is increasing. Positive balance is increasing. When it comes to overdraft, it is decreasing. And the same debit here is not there. A debit is not there means comparing with the passbook, my overdraft balance is increasing. Hence, add how much? 500. Wrong credit in bank statement. Wrong credit in passbook. And A. Wrong debit in respect of check for 300 against her account 5678. Sir, wrong debit is given in where? In this account law against a check, but actually it should be given in where? 8765. And a wrong debit in respect of a check for how much? A wrong debit in respect of a check for 300. A wrong debit is given in which? In this bank statement against her account number means banker seems to have given a wrong credit and a wrong debit in which account against that 5765. Yes sir, if they wrongfully given this debit means overdraft balance is increasing as per passbook, decreasing as per cash book, less 300. Less 300. Wrong debit in passbook. Next. A check for 1000 entered in cash book. Yes. But omitted to be banked on 31st March means cash book lo I recorded. But omitted to be deposited into the bank. Means passbook lo it is not recorded. Overdraft balance is more comparing to cash book. Cash book lo debit side it is recorded. Overdraft balance is less comparing to where? Our passbook. Hence resultant is cash book less 1000. Checks deposited but checks recorded in cash book but forgot to bank. How much? 1000. Next. A bill receivable, however, how much? A bill receivable for 5200 previously discounted, discount being 200 with the bank, and it is dishonored but advice was received on 1st April. So when a bill receivable for 5200 previously discounted, now it is dishonored means banker will reduce in our balance how much? 5200. Banker will deduct from our balance how much? 5200. Yes, banker reduced that 5200. Okay, next what happened? Sir, banker reduced 5200 in where? In the passbook. Now it is there on withdrawals column. How much? 5200. Passbook overdraft balance is more, but this is not recorded as on 31st March. Cash book overdraft balance is less. Why? It is not recorded on the payment side. Hence, less. How much? 5200. Hence, less 5200. What is this 5200? A bill receivable dishonor, not recorded in cash book. Next one. A bill for 10,000 was retired or paid by the bank under a rebate of 175. Bank paid under a rebate of 175, but full amount of the bill was credited in the bank column of cash book. Actually, in the cash column of bank, in the cash book lo, bank column lo, you are supposed to credit how much? 975. But how much you credited? 10,000 you credited. How much extra you credited in the cash column, I mean cash book bank column? 175. Because of that 175, overdraft balance is increasing in where? In your cash book to the tune of 175. Then add that 175. What is that name of 175? 175 wrongly taken 10,000 in cash book credit side instead of how much? 9,825 instead of 9,825. Next, a check for 2,400 deposited into bank. Yes sir, a check of 2,400 deposited into bank but omitted to be recorded in cash book. But omitted to be recorded in cash book. A check for 2400 deposited into bank but omitted to be recorded in cash book and was collected by the bank on 31st March 2020. What is this? Yes, sir. A check of 2400 I deposited into bank. Okay. But omitted to be recorded in where? Cash book. And was collected by the bank on 31st March. Now, it is written on deposits column in where? Passbook. Overdraft balance is reducing because of that. When it comes to cash book, it is not recorded in where? In the debit side. So, if it is not recorded on the debit side of cash book, overdraft balance is more to the transaction. Means add 2400. Add 2400. Why? Check deposited but failed to record. And the check is collected. Next. A check of 500 issued by Mrs. Rani was wrongly paid by bank from the account of Mrs. Soni. A check of 500 issued by whom? Mrs. Rani. Was wrongly paid by the bank from the account of Mrs. Soni. Means in this passbook law there is no recorded. It is not recorded. But the moment I gave the check, it is recorded in cash book credit side. Matlab on the credit side payment I wrote the check issued matlab to creditor or whatever it may be. Means the cash book balance is reducing comparing with what? Passbook. Overdraft balance is increasing, hence add. Overdraft balance is increasing comparing to the passbook, hence add. Add how much? 500. Check issued but not taken in passbook. Next. Interest. How much is the interest? Interest on overdraft balance of 250. Interest on overdraft balance of 250 was recorded in cash book as interest on deposits. Oh, sir, it is an interest on overdraft, and it should be right on the credit side of the cash book, not debit side, because it is decreasing the balance. But without any intention, you wrongfully wrote on the debit side as what? Interest on deposits. Means the effect is, I already said in rectification, 500. Effect is how much? 500. So what happened? Unnecessarily you debited this. Overdraft balance is decreasing to the tune of how much? 500. In where? Cash book. Because you are debited this, overdraft balance is decreasing to the tune of 500 in where? In cash book. Hence less 500. Interest on OD were taken as interest on deposits. Yes. Done, sir. Now total it. Sir, 2800, 2500, 500, 175, 2400, 500, which comes to 88, 75, and then come to the 7500, 300, 1000, 5200, 500, which comes to 14,500, 14,500, 8875. Double 875, 14,500. Okay. Totals also correct. Now 33,575 add 8875, which comes to 42,450. Now reduce what? Reduce this amount. It is a positive figure, means it is also overdraft balance. 27,950. What is this 27,950? OD balance as per cash book. Overdraft balance as per cash book. Sir, what we did in this problem? Sir, this is the overdraft they had given. Assume that this is also having overdraft balance. Now, for each and every transaction, either accounting, not accounting, what happened to this overdraft balance? It is increasing, yes, and it is decreasing, less. For example, interest collected, not recorded in cash book. Yes, sir. Interest collected means it should be written on which side? It should be written on cash book load debit side. But I failed to record on the debit side. Because it is not recorded on the debit side, credit side will be obviously more by the to that amount. Credit is more because it is not recorded. If it is recorded, then no issues, no debit, no increase in debit, no increase in credit. But not recording a correct transaction in the debit side, it increasing your credit to the tune of that amount. Your overdraft balance is increasing by that amount in the cash book add. Same way I did everything. Yes, sir. That's end for this problem. Important, sir. This problem is important. Yes. Yes, sir. Come to yet another video. Sir, one more part is adjusted cash book. In other words, prepare your so-called BRS statement. Prepare BRS statement after adjusting your cash book. After adjusting your cash book. What is this after adjusting cash book? Sir, after adjusting cash book, before adjusting cash book. What is this after adjusting cash book, before adjusting cash book? Sir, sir, yes, sir. Prepare this BRS statement before adjusting cash book, after adjusting cash book. Sir, what is this before adjusting cash book? What is this after adjusting cash book? Yes. Before adjusting cash book, after adjusting cash book. Sir, if it is after adjusting cash book. Sir, first when this concept come, what is this nonsense you are talking? BRS is the statement which you are preparing as on 31st March, or it is prepared as on 31st December, where the question is asking you to prepare either as on 31st March, as on 31st December. Indirectly they are hinting to adjust your cash book. Yes, sir, I will adjust my cash book. After adjusting cash book, start what? Doing reconciliation. Start reconciliation. What is this adjustment, sir? Sir, there are so many reasons where your cash book is bank column of cash book. Bank column of cash book is not matched with passbook or bank statement. In that so many reasons, there are so many errors where I committed in the cash book. Like in the previous problem we have seen payment taken twice, payment side undervalued, receipt side overvalued. Instead of taking in the discount column, taken in the bank column. All those mistakes what I committed. First, amend the bank column of passbook. Once you amended the bank column of cash book, then what? Then prepare reconciliation. Prepare reconciliation. Are you getting, sir? Sir, in our earlier problems, what is that bank balance as per the cash book? They am directly taking to prepare what? BRS. Here two things. One, they are asking to prepare either as on the 31st March or 31st December, or they are giving the starting point of what? Cash book starting point. They are giving cash book starting point. If passbook starting point and these two dates, there is no question of adjusted cash book and all this nonsense. This nonsense came to picture only when what? You are preparing. Your starting point is what? Cash book, and that BRS you are preparing as on 31st March. First adjust your cash book for any mistakes you have committed. Sir, mistakes committed in the passbook, will I need to adjust in my cash book? No. Now tell me, sir, I adjusted for my mistakes. Now I am having adjusted. Now I am having adjusted cash book balance. I am having what, sir? Adjusted cash book balance. Now start doing what? Reconciliation. Now what are the reasons you are getting, sir? What are the reasons you are getting difference? I want balance as per passbook. Balance as per passbook. What are the reasons you are getting difference? What might be the reasons for getting difference is errors or omissions in where? In the cash book. Are you getting, sir? Everyone, you adjusted your cash book balance? Yes, sir, I adjusted my cash book balance. And for what you adjusted your cash book balance? For errors or omissions in where? In my cash book. Now, you will have difference only because of what? Error or omission in where? Error or omission in passbook. It is not error or omission in cash book. Sir. The difference is only because of what? Error or omission in where? Passbook. Sir, what nonsense you are babbling? No. There you are having what? Cash book balance. Yes, I am having my cash book bank column cash book balance. Now adjust that for errors or omissions in where? Cash book. Now prepare BRS. You will get the reasons only that error or omission in where? In passbook. One more. In the cash book chapter alone I said, what is that? Checks issued but not presented. Checks issued but not presented. This checks issued but not presented, I will take on the full amount. The moment I issued, I will take on the bank column credit side. But in passbook, it will be written on withdrawal column only when it is presented. Right. So that is the one such reason, checks issued but not presented. Don't adjust for checks issued but not presented. If not one today, one day it will be paid. Checks deposited but not collected. Sir, adjust your cash book for all reasons, mistakes, whatever taking place, but don't adjust your cash book for three reasons. One, checks issued but not presented, checks deposited but not collected, error or omission in where? In passbook. Now once you adjusted your cash book, yes sir, I adjusted my cash book. Now you are having adjusted cash book balance. Now start doing reconciliation. You will have only these three reasons for your difference. If any these three were there, reconcile it. Apart from the any three, that is adjusted when you are preparing where? Adjusted cash book balance. I hope you are getting the clarity. The essence of the discussion, when the starting point is cash book and they are asking you to prepare what? BRS as on 31st March or 31st December, first amend your cash book or adjust your cash book. For what you need to adjust? For all those mistakes, what happened except for these three? What is it? Errors or omissions in the passbook mistake is there. You don't adjust your cash book balance. That is done in reconciliation. Checks issued but not presented. Don't do anything for your cash book. Checks deposited but not collected. Don't do anything for your cash book. Balance anything is there. Amended. Then you will have what? Adjusted cash book balance. Then do what? Reconciliation. In this reconciliation, you are having only three reasons. What are they? Checks issued, checks deposited but not collected, errors or omissions in passbook. Show that and your BRS will get over. Shall I move to one problem? Sivacharan sir. What is chapter name? Yes, sir. Come to problem number 8. The cash book of Mr. Gadbadwala shows how much? 8,36,400 as balance at the bank on 31st. The cash book is showing balance at bank means what is this? Cash book, starting point is cash book balance. But you find that it does not agree with the balance as per passbook. Obviously, it will not agree. On scrutiny, you find the following discrepancies. Very good. First one is what? On 15th December 2020, the payment side of cash book is undercasted. First, what you are supposed to do? Prepare reconciliation statement before and after amending cash book. Before amending, we have seen so many problems. Now, I want to start by after amending. First, amend your cash book. First, amend your cash book. Amended cash book. Yes, sir. Amended cash book. To balance brought down, it is an asset. I am talking only about bank column. I am talking only about bank column. I am talking only about bank column. Yes. Yes, sir. I am talking only about what column? Bank column. Yes. Particulars. Ayyo. Particulars. Amount. Particulars. Amount. To balance brought down. What is the balance brought down? They have provided 8,36,400. 8,36,400. Yes, sir. 8,36,400. Next. On 15th December 2020, when sir, on 15th December 2020, the payment side of cash book was undercasted. Very good. The payment side of cash book is there. Yes, sir. The payment side of cash book is there. Is undercasted. Why it is undercasted? That is the mistake they have committed in where? Cash book. If it is a mistake in cash book, we have to amend your cash book. So, a payment side is undercasted. Now, why? Undercasting. How much? 10,000. I think 10,000 is the, yes, next. Come to B. A check for how much? 1,31,000 issued on which date? 25th December. Okay. A check for 1,31,000 issued on, but not taken in the bank column. Ayyo. You have issued a check of 1,31,000 but not taken in the bank column. Come, now you take. Why? Check issued. How much? 1,31,000. Yours. Yes, sir. By check issued how much? 1,31,000. Yes. Next. A deposit of 1,50,000 were recorded in the cash book. Deposit of 1,50,000 was recorded in the cash book as if there is no bank column. Sir, a deposit of 1,50,000. I deposited 1,50,000 was recorded in cash book as if there is no bank column means where they recorded in the cash column they recorded. Now record in the bank column. To deposit how much? 1,50,000. Or in other you can also write to cash also. To cash also you can write. Next. On 18th December 2020, debit balance 15,260 were brought forward as credit balance. I said multiple times. Once again, hazard times I repeat. This is hazard plus 1th time I am repeating. Where a mistake is taken, instead of debiting, you credited on the same account, means the rectification treatment shall be double the amount of what it is. 15,260 into 2, 30,520 should be the accounting treatment. Double the accounting treatment. 30,520. 2. Wrong posting. 30,520. In the rectification chapter lo n number of times I have discussed regarding this. In this 30,520 lo, first 15,260 use it to cancel this. First 15,260 use it to cancel the credit side, and the next 15,260 is to recognize the original debit. That's how it works. Next. Of the total checks amounting how much? 11,514. Of the total checks amounting to 11,514 drawn on the last week of December. Drawn on the last week of December. Okay. Checks aggregating 7815 were encashed in December. Matlab, what they are trying to tell means, out of 11,514 checks I issued, 7815 were encashed and balance 3699 were what happened? It is not encashed in the month of December, it is encashed in the month of January. Even though it will be encashed, if not one day within the 90 days, it will be encashed. Don't amend your cash book. That is the highlight story here. Checks issued but not presented. Don't amend your cash book. This is a form part of BRS when you are adjusting your cash book. Very good. Come to the F. Dividend of how much? 25,000. Collected by whom? Bank. Yes. To dividend. How much is to dividend? How much is dividend? 25. By subscription, how much? By subscription, how much? 1,000. One outgoing check, a check which is going out, one outgoing check, how much? 3,50,000 were recorded twice in the cash book. Check issued, outgoing check issued were recorded twice in where? Cash book. Now what you are supposed to do? Debit this. To recorded twice. How much? 3,50,000. Next. A bill payable of how much? 2 lakhs has been paid by the bank but not entered in the cash book. Now entered. By bills payable 2 lakhs. Next. And bills receivable of 60,000 had been discounted with the bank at a cost of 1,000, which had also not been recorded in cash book. Okay. Means how much you are getting? 59,000 you are getting, but you are not recorded here. Now record. 2. Bills receivable how much? 59,000. Total this 8,36,400 plus 1,50,000 plus 30,520 plus 25,000 plus 3,50,000 plus 59,000. This is the total 14,50,920. 14,50,920. Now total this also 14,50,920 minus 10,000 minus 1,31,000 minus 1,000 minus 2 lakhs. 11,08,920. By balance carried down 11,08,920. Now what I want to tell, this is the adjusted cash book balance. Start doing reconciliation by taking this balance. They gave one balance. In that balance so many mistakes were there. Adjust all the mistakes except for 3 mistakes. What are those 3 mistakes? An error or omission which is committed in where? passbook. If there is any error or mistake in passbook, I am not supposed to adjust my cash book balance. Next one. A check which is issued, I already issued one check in our example, some 11,000 odd amount is there, issued a check, but it is not presented. If it is not presented today, within 90 days, obviously it will be encashed. Then don't adjust your cash book for that. A check which is deposited but not collected, a check which is deposited but not collected, at the time of deposit I increased my bank balance. If not today, 90% it will be recovered on the next day or next day within 45 hours. Then don't do anything unless it is dishonor. Means the balance what they have provided, adjust everything except for 3, error or omission in passbook, check issued but not presented, checks deposited but not collected. Yes, sir. How much? 11,08,920. Start doing reconciliation from this. Bank reconciliation statement. Particulars, amount, balance as per cash book, adjusted balance. How much? 11,08,920. 11,08,920. Now add. You will have only one. What is that? So your passbook balance will be more because of what? Because that withdrawal is not written. Why? Checks issued but not present. If it is not presented, there will not be any change. Checks issued but not presented. How much the difference? This one 11,514 issued, 7,815 presented, balance 3,699. 3,699. What is this 3,699? Why you are adding, sir? Sir, first 3,699 you got clarity. I issued this much, but present only for this much. But in the cash book law, when you are writing original entry by creditor or by service, so how much you written? 11,000 odd amount. Passbook law, when payment is done, how much they written as withdrawal? Some 7,000 odd amount. Cash book law, you have credited more amount. Passbook law, less amount. So that passbook balance is more. Hence I added. Now balance as per passbook. Balance as per passbook. 11,08,920. 11 lakh 12,619. This is the preparation of BRS after adjusting your cash book. Sir, no sir, I want to prepare BRS before adjusting my cash book. Then what you are supposed to do? Take this figure. Take this figure as what? Balance as per cash book 8,36,400. Then in all our problems we have solved law, add less. Then do that add and do that less, and you will have this balance as your passbook balance. Are you getting? Yes. Come here. Come to the answers part. CRD 8. Yes, 11,08,920 only. I think 11 lakh. Yes, 11,08,920. 11,12,619. Yes, done, sir. Done. Yes, this 2 and by you can use whatever the name, because they are just one-sided errors. These are nothing but your passing by rectification statement. So rectification statement you can write the way you like, nothing wrong, because we are not having double entry posting. If double entry posting is there, what I have recorded here in the next account, I have to next in the subsequent account, matlab the account what you have, corresponding account, you have to post the same. But it is not like that. It is a rectification statement. In your rectification chapter, go and watch. Almost some 4 hours I have discussed. In depth I have discussed in that chapter. Go and see that rectification chapter. Next. Sir, this is nothing, sir. Start from your where? Cash book 8,36,400. Then what and all your passbook, because of what reason your passbook balance is more, add that. A deposit was not recorded in the bank column of cash book. Yes, a deposit is not recorded in the bank column of cash book, but the deposit is recorded in where? Passbook as deposit. Hence, your passbook balance is more, add. Yes, mistake in bringing forward a debit balance which you have credited, so that your cash book balance is less to that amount. Passbook balance is more to the extent. Yes, had. In other words, where is that statement? Yes. Yes. 3699, your passbook balance is more to that tune, hence take that. Yes, dividend collected, passbook is more to that tune, hence add. And 3,50,000, pass outgoing check not recorded, hence the passbook balance. Outgoing check was recorded twice. Outgoing check recorded twice. So 2 times you recorded, cash book balance reduced, passbook balance is more because only 1 time they recorded, add. Bills receivable, yes, I have received in my passbook bills receivable, balance more, hence take this amount. Total this. Less. Wrong casting in the cash book. Cash book payment side wrong casting is there. Cash book balance is more, passbook balance is less. Less this one. Next. Checks issued but not entered in the bank column of cash book. Check I have issued. Okay, checks issued but not entered in the bank column. Matlab check issued but not credited in the cash book. Hence cash book balance is more, passbook is less. Reduce. Subscription, that is understandable. Next. Yes, bills payable, just paid but not taken in the cash book. Now it is taken in where? In the passbook, hence passbook balance is less compared to cash book. Less this. You are having how much? Start from here. Matlab, yes, 11,12,619. Yes, 11,12,619. Here also the same answer. Here also the same answer. This problem is incorporated to tell how to adjust the cash book and all. So basic problems I covered. Now adjusted cash book problem also I covered. I hope this chapter is completed. Any doubt, please ask me, sir. Yes, sir. Moving into the next topic, depreciation. Yes, sir. Depreciation. Sir, what is this depreciation, sir? Sir, depreciation is a systematic allocation. What, sir? Depreciation is a systematic allocation. Depreciation is a systematic allocation of what? Of depreciable amount. What, sir? Depreciable amount of fixed asset over its useful life. Depreciation is a systematic allocation. It should be in a systematic manner. Systematic allocation of what? Depreciable amount of a fixed asset over its useful life. Right? Sir, what is this nonsense you are talking? No, sir. Sir, I purchased one fixed asset. In other words, I purchased one machinery. I purchased one furniture. I purchased one asset which I am using for my business. Equipment. I am using this machinery. I am using this furniture. I am using this equipment and I am generating some income. Yes, sir, I am generating some income. Now, when I am generating some income, I am getting income on the credit side. But now the corresponding cost, I incurred some 1 lakh, 2 lakhs, 3 lakhs. Now I need to debit entire 1 lakh, entire 2 lakh on furniture, entire 3 lakh on this equipment to the P&L account in the year 1, or there is some other way. Yes, sir, there is some other way. Systematic allocation of what? Depreciable amount. What is meant by depreciable amount? Sir, I purchased this asset for 1 lakh. At the end of the useful life, in the form of residual value, in the form of scrap value, I will get 10,000. This 90,000 is known as depreciable amount. Everyone, sir, I purchased it by spending how much? 1 lakh. At the end of the useful life, how much I can recoverable? 10,000. Now depreciable value how much? 9,000. Maybe the cost incurred is 1 lakh, but the end of the useful life of the asset I will get how much? 10,000. Now the depreciable value how much? 90,000. One more. Sir, this depreciable value, what is the useful life? Estimated useful life. Sir, I will use this asset for 10 years. How many? 10 years. You are generating income by using this asset over a period of 10 years. Now, don't charge entire this cost minus residual value, this 90,000 only to 1 year P&L. Use the matching principle. What is that matching principle? You have to match your expense to the income. Means in the current period low, how much you earned by spending how much? I spent 9,000 in the form of what? Depreciation. To earn what? To earn my income. That is what this is depreciation. Depreciation is a systematic allocation of systematic allocation. This depreciable value is 90,000 divided by number of years, 10 years. That is known as the systematic allocation of depreciable amount, cost minus receivable value of a fixed asset. This depreciation I am not talking for a current asset. This is a fixed asset where the asset life is more than 1 year. Over its useful life, it may be 10 years, 5 years, 6 years, 7 years. Instead of debiting entire cost of your fixed asset in the first year P&L, you are amortizing, you are in the useful life, over its useful life, you are apportioning the cost. That is what my depreciation. Are you getting, sir? Yes, sir. Now, there are two things, sir. Sir, how you got this 10 years divided by only 10? That there are so many methods. Wait, I will tell. Sir, there are two issues in this depreciation, sir. Computation of amount of depreciation. Yes, sir. Computation of amount of depreciation. Accounting for depreciation. Computation of amount of depreciation. For that compute, what is the amount of depreciation? To compute the amount of depreciation, we are having 9 methods, sir, but all the 7, 8, 9 methods are not required in the exam. The first one is straight line method. Second one is written down value method or diminishing balance method, written down value method. Third one is units of production method, units of production method. Fourth one is sum of digits method. Fifth one is depletion method. Sixth one is sinking fund method. Sir, SLM method, straight line method and WDV method is very popular in exam. And units of production method is also popular in exam. Are you getting, sir? There are some other methods like sum of digits method, depletion method, next sinking fund method. All these are not that much relevant in the exam, right? Right, sir. Next, come to the accounting for depreciation. For accounting for depreciation, I am having two methods. Charging to asset account or creation of provision or creating a provision for depreciation. Creating a provision for depreciation. Are you getting, sir? Next, in charging to asset account also, once again there are two types. With asset disposal, without asset disposal. Sir, are you getting? Sir, what nonsense you are talking? No, sir. Yeah. For computation of amount of depreciation, I am having methods. What are those methods? Straight line method, WDV method, sum of digits method, units of production method, sinking fund method, annuity method, all these are methods different for what purpose? To compute the amount. Yes, I computed the amount by using SLM, WDV, sum of digits method, units of production method. I arrived the amount of depreciation. To account for that, I am having two more methods. What is that? Charging to asset account and creating a provision. Charging to asset account, one more I can have two ways. One is with asset disposal, without asset disposal. Creating provision, once again I am having two methods. With asset disposal, without asset disposal. That's it. That is the only thing we are discussing here. That is the only thing. First, compute the amount. Second, accounting treatment. Example, sir. For computation of amount, the first method is what? Straight line method. According to this method, according to this straight line method, every year the depreciation is uniform. Are you getting? Sir, yes, sir. Formula. Cost. What is the value? What is the cost of your asset? Minus how much you are getting at the end of the useful life in the form of residual value or scrap value. Residual value or scrap value or the value what you are realizing at the end of the useful life of the asset divided by, this is my net cost, cost minus residual value or scrap value, and divided by useful life of asset. This is known as what? Depreciation per annum. Depreciation per annum. Are you getting, sir? Yes, sir. I got the depreciation per annum. What is the formula, sir? What is the cost I incurred? Cost, and how much I am getting at the end of the useful life of the asset? Residual value, scrap value, divided by useful life of the asset. For example, 10 years, 10 years useful life, 15 years, 15 years, 5 years, 5 years, 7 years, 7 years. Then you will get amount. That is what? Amount of depreciation. That is amount of depreciation. Yes, sir. I got the amount of depreciation. How much that is? Some example 10,000. Example 10,000. Once you arrived this amount of depreciation, now accounting treatment. Charging to asset account entry. Depreciation is an expense. Depreciation decreases the value of asset. Depreciation is a cost. Is a cost. Is a expense. Non-cash expense as per matching principle. This is a expense. Depreciation account debit to. The value of asset is decreasing. Asset account entry, sir. Depreciation account debit to the asset account. 10,000, 10,000, and this is a nominal account. All nominal accounts will get closed and transfers to your P&L account. Entry. Profit and loss account to debit to depreciation account. 10,000. When this is the first method. What is the first method? Charging to asset account. What, sir? Charging to asset account. Charging to asset account means reducing the value. Directly I am reducing the value of the asset. If I am charging to asset account means the value of the asset is credited. Entry depreciation account debit to asset. Profit and loss account debit to depreciation. There ends the matter. Next one, sir. This is method 1. What is that? Charging to asset account. Come to the method 2. What is this method 2, sir? Creating a provision without charging to asset account. Then depreciation account to debit. Provision for depreciation. Provision for depreciation. Depreciation account debit to provision for depreciation. The same 10,000. Depreciation is a nominal account. Transfer this to profit and loss account entry. Profit and loss account debit to depreciation. Sir, in the last method lo, what happened in the last method? I have credited the asset. In this method lo, I am not crediting the asset, sir. I am routing to one more separate account, that is provision for depreciation account. Now, earlier method lo, the depreciation is reducing from where? Asset. In this method lo, I am creating one provision. I am not touching the asset account. When it comes to the balance sheet preparation, imagine if the asset is 1 lakh, 1 lakh already I credited with the depreciation. Imagine I purchased at year 1, day 1, 1 lakh. At the end of the year, if I want to prepare balance sheet, this is I am talking about method 1. What is that method 1? Charging to asset account. The same asset will show at 90,000. What is this 90? Depreciation is 10,000. Entry, sir. When I purchase the asset, entry. Asset to cash, asset account lo 1 lakh. Depreciation entry, depreciation to asset. Asset value decreasing. Now the depreciation is there, I will transfer to P&L account. What is that? To depreciation, how much? 10,000. Method 1 done? Yes, sir, method 1 done. Come to the method 2. In method 2 lo, balance sheet lo when I purchase that asset, I will show it 1 lakh. At the end of the year in the balance sheet lo, I will show the asset at same 1 lakh less provision for depreciation. How much? 10,000. And I will show outer column lo 90,000. If you see, method 1 lo I am showing 90. Method 2 lo also I am showing 90. Method 2 lo also I am showing 90. But method 2 lo I am reducing the current period depreciation and I am showing the original cost, and the balance lo I am showing the balancing value. Balance value 90, balance value 90. Both the methods I am showing the 90 only. When it comes to the method 1, directly I am showing 90. Method 2 lo I am reducing the depreciation and I am showing the outer column lo 90. Now come to the P&L. Next, if you see that P&L account lo, it will form to depreciation. How much? 10,000. Now I am not touching the asset account to charge for depreciation. In my trail balance lo, the asset will show at the original cost of 1 lakh, but provision for depreciation will come to the tune of 10,000. Depreciation will come to the tune of 10,000. That depreciation will be transferred to the P&L account 10. This provision balance will have here, and I will remove that provision balance and I will show the balance amount. Asset will have at original cost 1 lakh. Provision will have a credit balance. Why credit balance? I wrote the entry. What is that entry? Depreciation account debit to provision for depreciation. Now this provision for depreciation account is showing credit balance. Now that credit balance I am, instead of showing on the liability side, because I am not having any outside liability, I am reducing the 10,000 from the asset to for the fair presentation purpose. Are you getting, sir? Yes, sir. Next. Now what I have covered? Yes. First I need to compute the amount of S by using SLM. I computed the amount, sir. Yes, I computed the amount. Once you computed it by using that SLM method or WDV method or sum of units of production or depletion rate, whatever the method may be, then for accounting you are having two methods. One is what? By charging to asset. One is what? By creating provision. Yes, sir. Next one. Rate of depreciation. Sir, what is this rate of depreciation, sir? Sir, what is the rate per rate means always you are talking about in terms of 100. For 100, what is the rate? For example, in our example, earlier case law, for example, once again take that values. 1 lakh is the cost. Depreciation comes to 9,000. How this 9,000, sir? Like that residual value or scrap value 10,000. Useful life 10 years. Yes, sir. Now I said cost 1 lakh, minus residual value comes to how much? 10,000 divided by useful life comes to how much? Divided by useful life 10 years. Then 9,000. What is this 9,000? This 9,000 is known as depreciation. Now I want a rate of this depreciation over the cost, means amount of depreciation divided by what is the cost? 1 lakh. Sir, I am talking cost, not the depreciable amount, into 100, which comes to 9% is rate of depreciation. When you are solving problem for method 1, means under straight line method, you are not supposed to compute depreciation for every year. First find out the rate. First compute the depreciation for first year. Find out this rate. Apply this rate on the original cost every year. You will get the amount. Use this for only first year. From second year onwards, find what? Rate. Apply this rate on what? Original cost. On every year or the useful life. If there is no changes. If there is any changes, now you have to give the effect of the changes and you need to calculate. Next, sir. Now I said what? SLM method. Now come to one more method, WDV method. Under written down value method, every year depreciation is not uniform, right? What is this every year, sir? In the main class, I spent a number of hours on this WDV, on this SLM method. So in which cases you need to follow SLM, under which cases you need to follow WDV, and what is the main objective for this SLM, and what is the main objective for this WDV. Now I need to rush up this fast. I don't want to go into that stuff. I want to go into how to compute this WDV. Sir, if the rate is 10% under WDV method, what? Rate is 10% under WDV method means cost is equal to 1 lakh. Rate is equal to 10%. Depreciation is equal to 10,000. Now, for the second year, when it comes to the straight line method, I am directly applying the rate on the original cost every year. But when it comes to the written down value method, second year low, on the written down value, what is the written down value? Cost minus depreciation for the first period. On this written down value of 90,000, I am applying the rate of depreciation, which comes to 9,000 is the second year. Means first year low depreciation is 10,000. Second year low depreciation is 9,000. Come to the third year. What is the WDV for third year? Initially I started with 90,000 and 90,000. How you got the 90? Second year low the WDV is 90. Third year ki opening is 90 less the depreciation 9,000. On this 80,000 apply 10%. For third year ki it is 8,100. Once again I am showing, wait sir. Originally I purchased at 1 lakh. Rate comes to 10%. Yes sir, rate comes to 10%. Means 10,000. Yes sir. Now for the first year, how much is the depreciation? For the first year 10,000. Come to the second year. Second year ki how to charge depreciation means original cost 1 lakh less depreciation for the first year comes to the balance value 90. This is known as the written down value. On this 90,000 apply 10%. You will get 9,000 as what? Depreciation. Right? Third year ki opening WDV how much? 90 minus 9,000 what? Depreciation. And you are having opening how much? 81,000. Apply 10% on this 81. 8,100 is what? Depreciation. Let's see one example. Cost 10 lakhs. Rate of depreciation 10%. Okay, sir. Year 1. For year 1, 10 lakhs into 10%, you will get 1 lakh is depreciation. For second year, year 2, I need to apply 10%, not on 10 lakhs. If it is a straight line method, I will apply on 10 lakhs even in the second year also. But if it is a WDV, 10 lakhs minus 1 lakh, how much? 9 lakhs into 10%, how much? 90,000. How much? 90,000. Year 1 ki opening value 10 lakhs. Year 1 ki closing value 10 lakhs minus 1 lakh. The closing WDV at year 1 is 9 lakhs. Closing WDV. Closing WDV year 1 ki 9 lakhs. Opening WDV at year 2. Opening WDV. Opening WDV for year 2, 9 lakhs. Into 10% comes to how much? 90,000. This is what? Opening WDV for year 2. Sir, closing WDV for year 2. 9 lakhs minus 90. How much? 8 lakh 10,000. Closing WDV for year 2 is 8 lakh 10,000. Opening WDV for year 3 is how much? 8 lakh 10,000 into 10%, which comes to 81,000. Now, closing WDV for year 3, 8 lakh 10 minus 81. That become opening WDV for what? Year 4. WDV means written down value. Are you getting, sir? In this case, closing WDV for year 1. Closing WDV for year 1, 90. Opening WDV for year 1. Opening WDV for year 2, 90. Minus depreciation. You will get what? 81,000. What is this? Closing WDV for year 2. Opening WDV for year 3. How much? 81,000. Are you getting, sir? In the same way, you need to apply. Closing WDV, opening WDV. Now, first year, second year, third year. In our case, opening WDV, closing WDV, 10 lakhs. Closing WDV, 9 lakhs. This 9 lakhs will become opening WDV for year 2, 9 lakhs. Now 8 lakh 10,000 will become closing. This will become year 3 opening WDV 8 lakh 10,000. 8 lakh 10,000. You need to apply depreciation 81,000 10%, and this will become fourth year. And if you want to depreciation, the difference is depreciation, which comes to how much? 1 lakh 90,000, 81,000. Depreciation is 80, and here it is how much? 81, here it is 90, and here it is how much? 1 lakh, and here it is 8 lakh 10,000 minus 81,000, which comes to some 7 lakh 31, 7 lakh 39. Yes, sir. Completed? Yes, sir. Make it fast. Which one? This one? Okay, 7 lakh 29. Yes. This become opening for next year 729. Yes, sir. I hope you got the clarity over SLM method and WDV method. In case of SLM method, directly apply the rate on the original cost. In case of WDV, apply that rate on the reducing, means reduce the depreciation and the balance only apply that rate. Example low 10 lakhs. Now depreciation how much? 10% means 1 lakh. Reduce that, closing 9 lakhs. For the second year low, On this 9 lakhs, apply depreciation. How much? 90,000. The difference between 9 lakh and 90, 8 lakh 10,000. This 8 lakh 10,000 is what? Closing WTV. Bring that to third year. Apply the rate like this. Now come to the asset disposal. What is this asset disposal? Before going into asset disposal, I think one more small method is there, like units of production method. I will complete that units of production and then I will go to this asset disposal. Units of production method. Sir, under this units of production method, sir, this asset, machinery, whatever it may be, will estimated to produce estimated production in terms of units. In terms of units is 1 lakh. Is 1 lakh units, sir. Estimation units in terms estimated production in terms of units. 1 lakh units. First year low, you have produced 2 lakhs. Second year low, 3 lakhs. Third year low, 4. Fourth year low, 1 lakh units. Now, how much you spent on this machinery? Imagine this is units you produced, units produced, units produced, units produced. You spent on this machinery 20 lakhs. You spent on this machinery 20 lakhs. Residual value, how much? Example, some 2 lakhs. How much? 2 lakhs is the residual value. 20 lakhs is what? 20 lakhs is cost. 2 lakhs is what? Residual value divided by estimated units. How many estimated units you can produce by using this? 10 lakhs, sir. How much? 10 lakhs. 10 lakhs units into year 1 lo how many units you produced? 2 lakhs. Year 3 lo same 20 lakh is the cost minus 2 lakh is the residual value, 18 lakhs divided by 10 lakhs into 2 lakhs units you have produced in the current year. Are you getting, sir? Second year ki can anyone tell the formula? Nice. Very good. Second year ki 20 lakhs is the cost less 2 lakhs is the residual value for 10,000 units. How many units you produced in the second year? 3 lakh units. Means 1 point per 8 per unit into 2 lakhs. 3 lakh 60. Right? 5 lakh 40. In the same way, you need to continue for the balance years. Are you getting, sir? Units of production method lo cost minus residual value divided by estimated number of units of production, estimated total estimated units of production into total estimated in terms of units into number of units manufactured or produced, number of units manufactured or produced in that year. Right? Right, sir. Now come to the asset disposal. Now I said 3 methods. First method is SLM, second method is WDV, third method is units of production. Right? Now come to the asset. Better solve one problem on this units of production. Then we can move on to the asset disposal. Completed? Yeah. A simple problem on units of production method. A machine was purchased. Yes, sir. A machine was purchased for how much? For 20 lakhs. It is estimated useful life is how much? 10 years. And we say residual value. What is the residual value? 2 lakhs. Means how much at the machine is purchased with a spend? How much you spend, sir? 20 lakhs on this. And it is estimated useful life is how many years? 10 years with a residual value of how much? 2 lakhs. The machine is expected to produce 1.5 lakh units in the lifetime. Estimated distribution pattern for 1 to 3 years low your production pattern is 20,000 units per annum. 15 matlab 4 to 7 low 15,000 units. 8 to 10 years low 10,000 units. Now prepare one statement, calculation of depreciation. Make it year 1 to 3, 4 to 7, 8 to 10. Production units 20, 15, 10 units per annum. Come to depreciation. What is the formula for depreciation? What I said. How much you spent? 20 lakhs I spent. What is the residual value? The residual value comes to how much? 2 lakhs. Divided by during the lifetime how many units you will manufacture? 1.5 lakhs means 1 lakh 50 means 18 lakhs. How you got 18? 20 lakhs minus 2 lakhs, 18 lakhs divided by 1 lakh 50,000. You will get 12 per unit. Right? Now depreciation, how to solve, sir? Cost minus residual value divided by number of units, estimated number of production units into units produced in that year. Units produced. Cost how much, sir? 20 lakhs. Residual value how much, sir? 2 lakhs. Number of units, estimated number of units into 1 to 3 years low 20,000 units. This comes to 12. 18 divided by 1 lakh 50. Yes, sir, 12. Into 20,000, which comes to how much? 2 lakh 40,000 is the first year depreciation. Come to second year depreciation. Same per unit comes to how much? 12 into second year how many units? 15,000. 15,000. How much? 1 lakh 80. 1 lakh 80. Come to the third year. Third year means 1 to 3 years. The depreciation per annum is 2 lakh 40. From fourth year to seventh year. From fourth year to seventh year, the depreciation per annum is 1 lakh 80. From 8, 9, 10 per unit it is 12. I think 10,000 units you are manufacturing. Now 1 lakh 20 is the depreciation. Are you getting, sir? Now year 1 to 3, 4 to 7, 8 to 10. Next. Units, estimated units, how much? 20, 15, 10. Depreciation per unit, or in other words, depreciation, give the depreciation, give that formula, cost minus residual divided estimated number of units into number of units. 20 minus 2 divided by 1 lakh 50 into 20,000. Second one, 20 lakhs minus 2 lakhs divided by estimated into 15 divided by 20 minus 2 divided 1 lakh 50 units into 10. Alternatively, some in books how it is like they will first unit calculate the rate per matlab per unit ke how much is the depreciation, like per unit ke in this case 12. You need to maintain one column for per unit. You will get 12, 12, 12. Apply with the number of units, like number of units comes to 20, 15, then you will get the answer. Fine, anything is fine, no issues in that. What I am telling, years lo 1 to 3, 4 to 7, 8 to 10. Number of units, how many number of units in this case lo 20, here 15, here 10. What I am telling, depreciation lo cost minus residual value, give formula sir, write one formula, divided by estimated 1,50,000 into number of units 20, you will get how much? 12 into 20, 2,40,000. Same way, you will get how much? 1,80,000. Per annum I am talking. Same way you are getting 1,20,000. Alternative way lo, instead of doing all this, depreciation per unit means up to this depreciation per unit, you will get how much? 12. Third column lo, depreciation amount is equal to column number 2 into column number 3. Number of units column number 2 into column number 3. You will get depreciation per annum for all these 3 years. Any method you can follow, anything you can follow in presentation. One more method, mission hour rate. This mission hour rate is also similar to units of production method only, but the only thing, this mission hour rate is unit to similar to that units of production method, but in this method lo, cost of asset less cost of asset less, reduce your cost of asset less your residual value, cost of asset less residual value divided by total mission hours, means how many mission hours you will estimate, estimated mission hours comes to how much sir? For example, estimated mission hours is 1 lakh hours sir. Cost of asset less residual value divided by estimated mission hours into, for example, 10,000 hours you have spent, 10,000 hours, then you will get the depreciation amount similar to that units of production method only, but this is mission hour rate. What is this mission hour rate sir? This mission hour rate, for example, that you estimated that machine will work for, how many hours? 1 lakh hours. During the year low, you utilized 10,000 hours. Then what is the depreciation? Second year low, you utilized 30,000 hours. Then what is the depreciation? Same like earlier only thing in place of units replace with hours. Cost less residual value divided by estimated hours into current period number of hours you have utilized this. You will get what? Depreciation. Come to one problem. Yes sir, CRT 5. The machine purchased, what is the purchase price of this machine? 3 lakhs. Estimated working hours 24. Residual value or scrap value 2 lakhs, means 30 lakhs minus 2 lakhs, 28 lakhs divided by 24 hours into 1 to 3 years low. Per year you utilized the capacity at how much? 3,000. Are you getting? Same year 1 to 3, 4 to 6, 7 to 10. Okay. 1 to 3 years, 4 to 6, 7 to 10. In hours, machine used per annum in hours, 3,000 hours, 2,600 hours, 1,800 hours. Depreciation, cost minus residual value divided by total estimated hours into machine hours used per annum. Correct. Correct. Yes, same in the same way, use one more column. No, you want to calculate per hour, calculate per hour and multiply with column number 2 and column number 3, you will get column number 4 la depreciation. Anything is fine. Completed. Make it fast. One, two, three, 4 to 6. Next. Maintain one column. Tell how many units you manufactured. 3, 2600. I mean, how many hours you utilized? 3000, 2600, 1800. Done. Calculate depreciation. Yes, cost minus residual value divided by 24,000 into 3,000. Yes, first year it is 3,50,000. Second year it is 3,03,333. Third year it is 2,10,000. I think methods to compute depreciation is done. Enough. SLM is okay. WDV okay, right? Nothing is there in WDV, sir. Take that opening value, less depreciation, you will get closing WDV. For the second year, it will become opening WDV. Apply that rate on the opening WDV of the second year, which is nothing but the closing WDV of the previous year. 1 lakh I purchased. Rate of depreciation 10%. Depreciation 10,000. Closing WDV for that year is 90. Closing WDV at the beginning of second year is 90. Closing WDV at the end of the first year 90. Opening WDV at the beginning of second year 90. Yes, 90. Depreciation, apply this 10% on that 90. You will get depreciation 9,000. But first year depreciation 10,000. Second year depreciation 9,000. Closing WDV at the end of the year how much? 81,000. Opening WDV at the beginning of third year 81,000. Depreciation for third year 8,100. Closing WDV 72,900. Yes, sir. That's how it works. Done. Now move on to the asset disposal. Once asset disposal is done, then there are small problems, nothing big complexity in first compute. Then you are having two methods, directly charging to the asset or creating provision. Then you are having how to, if you are having asset disposal, how to account for that. Sir, someone are asking like this WDV and all. Once again I am explaining. See sir, nothing is there in the WDV, sir. At what price I purchased? 1 lakh. Yes sir, 1 lakh. Now there are three things here. Year 1, 2, 3. Yes sir. Opening WDV. Depreciation. Closing WDV. Up to this okay. Opening WDV, the first year it is cost only. Apply 10% rate of depreciation. Imagine the rate of depreciation is equal to 10%. Now depreciation comes to how much? 10,000. How 10,000? 1 lakh into 10%, 10,000. Closing WDV how much? 90,000. And this closing WDV for the second year it will become opening WDV. The same closing WDV at the end of the year it will become, what is meant by WDV? Written down value. What sir? Written down value. Means after depreciation for the end of the year and before, matlab at the beginning of the year it is how much? 90,000. This is before depreciation. At the beginning of the year, opening WDV. At the rate of 10%, 90,000 into 10% comes to 9,000. Closing WDV means after depreciation, 90 minus 9, 81,000. And this 81,000 will become opening WDV for year 3. Means opening WDV means before depreciation for that year. Closing WDV means after depreciation for that year. Depreciation comes to how much? 8,100. Everyone, Yeah, entry remains the same. Entry, whether you are following directly to the asset account or you are charging to where you are creating provision, entry remains the same. Here also entry remains the same. There is no like if you are following WDV means you are supposed to create that provision. Yeah, that is not there, sir. Even you can follow what? SLM, or you can also follow what? WDV. You can also do what? Yes, sir. You can also do what? You can charge to your asset under both the methods. Or even for sum of digits method, units of production method, mission hour rate, any rate you can, any method you can follow. You got the amount. That amount how you doing? Either you are charging to asset or you are creating provision. That's what are getting done. Now this one how much? 72,900. Come to the fourth year. 72,900. Apply 10% means this 10% is applied on opening WDV. This opening WDV is computed by how? This opening WDV is nothing but last year closing DV. Last year closing DV is nothing but opening WDV minus depreciation for that year is nothing but closing WDV. Right? 7,290. Are you getting, sir? 7,290. Completed? Yes, 65,610. Take your calculators. I will tell a small shortcut. See, 1 lakh, yes sir, 1 lakh into 10% minus is equal to how much? 90,000. 10 lakhs and 1 lakh into 10%, 10,000 minus is equal to into 10%. How much depreciation? 9,000 minus is equal to 81,000 into 10% minus is equal to. Are you getting? Take your calculators. 1 lakh is what? Opening WDV into rate of depreciation 10%. You will get depreciation amount minus is equal to how much? 90 closing WDV into 10%. How much? 9,000 minus is equal to into 10%. 8,100 minus is equal to into 10%. 7,290 minus is equal to. Now for the fifth year, 65,610 is what? Opening WDV, apply 10%. How much? 6561 closing WDV minus is equal to 59,049. Done. I hope you got the clarity. Yes, sir. Moving to the next one. What is that? Asset disposal. Sir, this asset disposal is something when asset is sold. When asset is sold. Example. Sir, I purchased one asset, a small furniture or a small mobile phone, 10,000. Life, 3 years. Okay, sir. Now, residual value or scrap value at the end of the third year, 1,000. Useful life, 3 years. Depreciation per annum under SLM method. Cost minus residual value divided by useful life. Cost how much? 10,000. Residual value how much? 1,000. Useful life how much? 3 years. Per annum depreciation how much? 3,000. Yes, sir. Now, at the end of second year, when at the end of second year. This asset is sold. This asset is sold. For this asset is sold for 5,000, sold for 7,000. Right? Right. When asset disposal is not maintained, what? When asset disposal is not maintained, asset account, phone accounts. When I purchased to bank at the beginning of the year, I purchased how much? 10,000. Depreciation for first year entry, depreciation account debit to asset account by depreciation how much? 3,000 for that year. By balance carried down how much? 7,000. Second year key. 2. Balance brought down how much? 7,000. For the end of the year depreciation, by depreciation 3,000. Now what is the book value of this asset? As of now, what is the book value? 7,000 minus 3,000. The book value comes to how much at the end of the year 2? The book value 7 minus 3. How much, sir? 4,000. Now you are selling this asset worth 4,000 for how much? For 5,000. For 5,000. Entry, sir. Bank account debit to asset account. Bank account debit to asset account. Asset low by bank. How much you are getting? 5,000. Asset is there or asset is not there? Asset is not there. So this asset will have to have some balance or not required? Not required. 5 plus 3, 8 means calculation of profit or loss on sale of asset. On sale of asset. Sale value of asset 5,000. Book value of asset sold. What is the book value? 4,000. How much is the profit? 1,000. Entry. The asset book value is 4,000, but you credited with 5,000. Now debit that asset, credit P&L account or profit on sale of asset. In this account lo to profit on sale of asset how much? 1,000. If you close 8,000, 8,000, or you can also credit P&L. Are you getting, sir? Book value of the asset sold 4, sale price 5,000. Next one. At the time of sale entry, bank account debit, how much you are getting? 5,000. 2. Asset account, how much? 5,000. Now debit your asset. Asset book value 4 lakhs, but you credited with 5 lakhs. Unnecessarily you credited 1 lakh extra, 1,000 extra. Asset account debit. Profit on sale. How much? 1,000. Debit this profit on sale, credit your P&L account. How much? 1,000, 1,000. Completed? Make it faster. Completed. Second scenario, how much you sold? 7,000. Book value how much? 4,000. Profit on sale of this asset how much? 3,000. If you have asset account, I am talking only about second year. To balance brought down how much? 7,000. By depreciation for year 2, how much? 3,000. Book value how much? 4,000. But how much you got by bank? 7,000. How much is the excess profit you have? How much is the profit? 3,000. 2. Profit on sale. How much? 3,000. Or you can also take to P and L. Close this. Close this. You can also pass one more entry. Earlier, I credited this asset only to the tune of 5,000, right? Sir, I don't want to do like that. Means bank account debit. How much? 7,000. 2. Asset account. What is the book value? 4,000. 2. Profit on sale of asset. How much? 3,000. Then open one account. The account name is profit on sale of asset. By bank, how much? 3,000. Take this to where? To P and L account. How much? 3,000. Everyone? Yes. Yes, correct one. Either you can write bank asset credit with only the book value, excess amount take to what? Profit on sale of asset. Now, asset account low. Asset account low. Here it will be closed with 4,000. The profit will not be reflected in the asset account. Better follow this method only. If you follow this method, the profit will be reflected in the asset account. If you are not following this method and for accounting you are using like this, means that profit will not be reflected in the asset account. Better follow this only, this only, this only. Just because you asked I shown, otherwise I might not shown that also at this level. Right? Right. Next. If asset is sold for 2,000. If asset is sold for how much? 2,000. Come. Asset account low. To balance brought down at the end of the first year, how much? 7. By depreciation, how much? 3. And you sold for what value? By bank, how much? 2,000. The book value of the asset at the end of the second year is 7 minus 3, 4,000, and you sold for a loss of 2,000, and that loss will be taken to P and L by loss on sale. This will be taken to P and L account. How much? 2,000. Sir, entry, sir. Entry bank account to debit. How much? 2,000. Loss on sale of asset, how much? 2,000. Close this asset to asset account. 4,000. Done. Bank account debit, loss on sale account debit to asset account 4,000. Done. Next. Completed? Next. Everything I done, I made a sale of asset without using what? Asset disposal account. Now the story begins here. When you maintained asset disposal, the profit or loss on sale of asset, don't show it in the asset account, show it in where, sir? Asset disposal account. When you are selling an asset, The profit or loss in that asset, the profit or loss on the sale of asset, don't show in the asset account, show it in asset disposal account. Example. Continuing the same example, continuing with the same example. The cost of the phone, how much? 10,000. Yes. Life, 3 years. Next, residual value, 1,000. Depreciation per annum, 3,000. Now I am maintaining asset disposal. What's our asset disposal account? Asset account లో 2 cash or bank, how much? 10,000. By depreciation, how much? 3,000. By balance carried down, how much? 7,000. Close this. 10,000, 10,000. Next, 2 balance brought down, how much? 7,000. By depreciation, how much? 3,000. Now what is the closing balance? 4,000 is the closing balance, right? Right. Now when you are selling asset, what you are supposed to do? In our earlier case lo, the sale proceeds I credited in the asset account lo. When you are selling the asset, don't credit the sale proceeds in the asset account, transfer this balance of the asset to one more account known as asset disposal. By asset disposal account, how much? 4,000. Now open one more account known as asset disposal to asset account, how much? 4,000. In our earlier case lo, if I am selling the asset, entry bank account debit I am selling for 5,000 to asset account. Now the asset account is not there, asset account is went and sit in where? Asset disposal. Now entry bank account debit to, don't write asset account is not there in my books, write asset disposal account, how much? 5,000. Bank account debit to asset disposal. Now asset disposal lo by bank, how much? 5,000. Now because of this I am getting profit, how much? To either P&L or to profit on sale of asset, from then transfers to where? P&L. 5,000, 5,000. Don't record the profit or loss in the asset account. When the asset is sold, transfer from the asset account to the asset disposal account. In the asset disposal account, it will reflect how much, whether you are getting profit or you are getting loss. Sir, what nonsense you are talking? No, sir. If you are having one asset in that, so I can see whether the profit or not. Even I am having group of assets. I am having some 10 assets, 10 ACs. I am maintaining one account for all these 10 ACs, right? I sold one AC. Now I might get confused whether I get profit or loss, even how much I profit or not. Better do one thing, the moment you are selling, no, the book value, what? The book value, here the book value how much? The book value after charging depreciation, how much? 4,000. Transfer this book value from where to where? From here to asset disposal account. How much? 4,000. Are you getting? Now in that asset disposal law, you will show how much profit you are getting or not. Sir, case 2. Same asset disposal to balance brought down, how much? Same asset disposal to asset, how much? 4,000. I am selling for 7,000. By cash or bank, 7,000 to profit on sale or P&L account, how much? 3,000. Close this account. Close this account. No, sir. I am selling for how much? Asset disposal account. 2. Asset account. How much? Opening balance 4,000. I am selling for 3,000. By bank or by cash. 3,000. By P&L account or loss on sale of asset 1,000. The book value of the asset is 4,000. You are selling for 3,000. The profit or loss will be reflected in your asset disposal account. By loss on sale of asset. This loss will be taken to P&L. P&L it will be debited to loss on sale of asset. Everyone? Yes, sir. Sir, this is the concept of asset disposal when you are charging the depreciation to asset account. When you are charging depreciation to asset account. Right. Next one. Charging depreciation to asset account and how to have this, how to account this asset disposal completed. Next one. I am not charging this depreciation to asset account, sir. I am charging depreciation to provision or creating provision, sir. I am creating one provision. Same example continue, sir. Asset 10,000. Life in our example 3 years. Life 3 years. Scrap or residual value 1,000. Depreciation is equal to 3,000. But depreciation I am not charging to the asset account. I am charging to provision. First entry, sir. Year 1. I am selling this asset, sir. Same. Asset sold at end of year 2. How much? For 5,000. Remove that case of 7,000. Anyhow, that is also profit 3,000. 2 scenarios. And I am maintaining. I mean, I am not charging the depreciation to the asset account. I am creating one provision for asset, and for sale of asset I am maintaining asset disposal. Asset account. 2. Cash 10,000. Here it is. Provision for depreciation or accumulated depreciation. You can use any word, provision for depreciation or accumulated depreciation. Asset account low, asset account debit to cash how much? 10,000. At the end of the year, when I am charging the depreciation to asset account, entry depreciation to asset. But here I am not charging the depreciation to the asset account, I am charging to provision account entry, sir. Depreciation account debit to provision account. Depreciation account debit to not asset. Provision for depreciation, posting low. Provision for depreciation low. By depreciation, how much? 3,000. At the end of the year, to balance carried down 3,000. Close this. By balance brought down. How much? 3,000. Done? Yes, sir. Done. Next. Asset account low, second year. By balance carried down 10,000. To balance brought down how much? 10,000. Now, second year depreciation how much? Same 3,000. Entry, sir. Depreciation account, the depreciation account is went and sit in the P&L. For the first year, depreciation account is closed and transfers to P&L. No need of depreciation because anyhow you are not carry forwarding, that is transfers to depreciation. P&L not required. By balance brought down how much? 3,000. Yes, sir. By balance brought down 3,000. Entry for the second year, depreciation to provision by depreciation 3000. Now second year end, when the asset is sold, now what you are supposed to do, the book value of the asset sold, what? The book value of the asset sold will be transferred from asset account to asset disposal account. I don't want to show any profit or loss in the asset account when I am selling that asset. Close that asset account, transfer the book value to which account? Asset disposal account. Entry. Asset disposal to asset. Close the asset account, increase the asset disposal. How much? 10,000. Close this. Now, whatever that accumulated depreciation is there in provision for depreciation or accumulated depreciation account, transfer the entire depreciation to which account? To asset disposal account. To asset disposal account. How much? 6,000. What you are doing, sir? No, sir. How much this is? 6,000. The book value will come and sit in the asset disposal debit side. Accumulated depreciation so far will come and sit in the credit side. Open the asset disposal account. So, how much? Asset account 10,000 by provision account. How much? 6,000. When you are transferring your asset book value to the asset disposal account to debit to asset. When you are transferring your provision to the asset disposal, provision, closed provision is having credit, provision account to debit to asset disposal. Are you getting, sir? Asset disposal lo by provision. How much? 6,000. Now you are selling this asset. Entry. Earlier means bank account debit to asset account. Now the asset account itself is not there. Bank account debit to asset disposal. Asset disposal lo by bank. How much? 5,000. How much is the balance? 1,000. What is that 1,000? Profit. Profit on what? Sale of asset. To P&L account. Or you can also take to profit on sale of asset. From then profit on sale of asset to P&L. 11,000. 11,000. To profit on sale of asset. From then profit on sale of asset take to P&L. Open one more asset, profit on sale of asset. From then profit and sale of asset to take P&L. Sir, I sold this for 3,000. Asset disposal lo to asset how much? 10,000. By provision how much? 6,000. By sold asset told how much? By bank 3,000. By loss on sale of asset or P&L how much? 1,000. Close this. This is what we are supposed to do. Sir, if in the asset account there are two assets. One asset is sold. Then the book value of the asset sold you are supposed to transfer from asset account to the asset disposal. In the provision account the provision on the asset what you have sold, the depreciation on the asset what you have, only that portion you are transfer from which account to which account? From asset disposal, matlab from provision to asset disposal. Are you getting? Sir, in asset account there are 5 assets. One asset I sold. Now the book value of the asset sold. What is the book value? Yes, transfer that book value from asset account to which account? From provision account. From asset account to asset disposal account. From asset account to asset disposal. Transfer the book value of asset sold from asset account to asset disposal account. Transfer that portion of provision, that portion of depreciation relating to the asset sold from provision account to asset disposal. The balance will be transferred in the asset disposal to profit and loss account or profit on sale or loss on sale. I hope you got the clarity over this asset disposal. Now you can solve any problem, but only thing when they are asking you to maintain asset disposal, Now that asset disposal, how to account, you are supposed to be understand that. Yes. Yeah, I'll begin with the problems. Wait. Start with problem number 1, sir. Yeah. The LG Transport Company purchased 10 trucks. How many trucks? 10 trucks. And the cost of each truck comes to how much? 45 lakhs each. On which date? 1st April 2017. On which date? 1st April 2017. Yes, sir. I purchased truck. 10 trucks I purchased. Each truck costing 45 lakhs each on 1st April 2017. The cost of total 10 trucks comes to 4,50,000. Each truck cost how much? 45. 10 trucks how much? 4 crore 50 lakhs. Right. On first, okay, this is the first date. On April 1st, 2019, one of the truck is involved in an accident and is completely destroyed, and 27 lakhs is received from insurance in full settlement. Sir, I purchased how many trucks? 10 trucks on which date? 1st April 2017, and the cost of each truck comes to 45 lakhs and the cost of 10 trucks comes to 4,50,000. One of the truck is involved in an accident and is completely destroyed, and 27 lakhs is received from the settlement of insurance compensation in full settlement. Done. On the same day means what is that same day? Sir, on the same day means what is the same day? 1st October 2019. Same day means 1st October 2019. Truck is purchased, another truck is purchased by the company for the sum of 50 lakhs. One more, another truck is purchased on the same day, 50 lakhs. The company write off 20% depreciation on the original cost per annum. The company observes, the company follows the calendar year. Accounting year, the company follows calendar year as accounting year. Calendar year means 1st January to 31st December. Give the motor truck account for 2 years ended 31st December 2020. They are asking for 2 years. What are the 2 years? Give the motor truck account for 2 years ended 31st December 2020 means from 1/1/2019 to 31st 12/2019. This is the first year. Second year, from 1/1/2020 to 31st December 2020. Up to this, okay? Yes, sir. Simple problem, nothing is there. Open asset account in the books of LG Transport Company. In the books of LG Transport Company, open truck account. Open truck account. But I purchased these trucks on which date? On 1st April 2017. Means on 1st April 2017 I purchased. The value as on 1st April 2017 is different. The value as on 1st January 2019 is different. I want a value as on 1st January 2019 because I need to open the account from 1st January 2019. Now what you are supposed to do? Maintain one working note number 1. Calculation of book value of the asset as on 1st January 2019. Working note number 1. Calculation of book value of the truck as on 1st January 2019. Particulars amount. Cost of 10 trucks purchased as on. Cost of 10 trucks purchased as on 1st April 2017. How much? 45 lakhs into 10 trucks, which comes to 4 crore 50 lakhs, which comes to 4 crore 50 lakhs. Done. Next, less depreciation for the year ended 31st December 2017. For that year, depreciation I am supposed to charge for a period of 9 months. Don't get into confusion. Don't charge depreciation for 12 months. Charge depreciation only for a period of 9 months from 1/4/2017 to 31st December 2017. 4 4 crore 50 lakhs is the value into rate of depreciation 20% into 20%, you will get 90 lakhs. That 90 lakhs is for full year of 12 months. I want for a period of 9 months divided by 12 into 9. You will get 67 lakh 50,000 less the depreciation for a period of 9 months. That is nothing but as on 31st December 2017. How much? 67 lakh 50,000. Next line. Book value of trucks as on 1st January 2018. Three crore 82 lakh 50,000. If you reduce this, you will get 3 crore 82 lakh 50,000. 3 crore 82 lakh 50,000. Less depreciation. Less depreciation for full year. For full year. And they are write-offing on original cost. On original cost means they are following SLM method. When you are following SLM method, the word they are used on original cost means second year also you are not supposed to be charged depreciation on the opening WDV. You are supposed to charge the depreciation on the original cost. For the full year, second year on 4 crore 50 lakhs, which is at the rate of 20%, 90 lakhs is the depreciation. Completed? What is the value as on 31st December 2018? If you reduce 90 lakhs depreciation, 2 crore 92 lakh 50,000. That is what? The value of this trend tax as on 1st January 2019. Truck account low, to balance brought down 2 crore 92 lakh 50,000. Just check the answer. Truck account low, to balance brought down 2 crore 92 lakh 50,000. Yes. Purchase price of the 10 trucks as on 1/4/2017. Yes. Less depreciation for 2017, which is for a period of 9 months. Less WDV, matlab the book value of 10 trucks as on 1/10/20, that is 1/1/2018, that is 3 crore 82 lakh 50, and then the WDV as on 1/1/2019, the book value of the 10 trucks as on 1/1/2019, 2 crore 92 lakh 50,000. I hope you got the clarity for this. Next, what happened? Next, on 1st October 2019, one truck destroyed by fire, charge depreciation for the period of 9 months. Charge depreciation only for a period of 9 months. Only on this truck alone. Only on this truck alone. This truck is costing 45 lakhs. Apply depreciation 20% on the original cost, even on the third year, 20%. You will get 9 lakhs as depreciation, but this is for 12 months. I need for 9 months into 9 divided by 9 into divided by 12 into 9. 6 lakh 75,000. What, sir? 6 lakh 75,000. What is the 6 lakh 75,000? This is depreciation on the one truck for the third year 2019 for a period of 9 months. 6 lakh 75,000. 6 lakh 75,000. Now, bank is giving how much? 27 lakhs. Entry, sir. Bank account debit to asset account. Now, I want to know whether I got profit or loss on this truck. How much I received? 27 lakhs I received. I want to know the book value of this truck. Book value of this truck comes to 45 lakhs less depreciation for a period of 9 months. 45 lakhs, depreciation for a period of 9 months in the first year, depreciation for a period of 12 months in the second year on the original cost. If you less, I got 29 lakh 25,000. Depreciation for a period of 9 months once again in the third year, because this is destroyed as on 1st October 30th. Next, Book value comes to how much? 22 lakh 50,000. But amount received from insurance company how much? 27 lakhs. What about this 4 lakh 50? This is gain or profit. Sir, how can insurance company give you a profit of 4 lakh 50? No. It's how it works means I charge the depreciation at the rate of 20%. Maybe I charged excess depreciation. When that asset, when I'm seeing insurance company, they feel okay, it is worth giving how much? 27 lakhs. Just because of the stupid depreciation rate of 20%, that book value is decreased. Are you getting? Means all these years I charged excess depreciation in my books. Now how much I got? 4 lakh 50,000. Now when I sold the truck, I received 27 entry. Bank account debit to truck. I am getting the money bank. Truck is going out. Truck how much? 27. 27. Profit how much? 4 lakh 50,000. That profit, show it under the debit side to profit. P and L, profit on settlement of truck 4 lakh 50. Just now I shown no in the asset account earlier. Now I am having 9 trucks. Once this event is done, as on 31st December, the balance in the same day I purchased one more truck. On the same day another truck is purchased. How much is the cost of another truck? 50 lakhs. Truck account debit to bank account on the same day 1st October to bank how much? 50 lakhs. Same day truck account debit to bank, truck account lo to bank 50 lakhs. Now I need to charge depreciation at the end of the period. How many trucks I purchased? 9, 1 gone. So that each truck value 45 lakhs into 9 trucks only I am having, and the rate is 20% for full year because it is on original cost. Balance, I purchased recently one truck which 3 months expired. The cost 50,000, 50 lakhs into 20% into for 3 months. Total together your depreciation comes to 83 lakh 50,000. Now if you balance your account, by balance carried down 2 crore 29 lakh 75,000. To brought down 2 crore 29 lakh 75,000. Now for 2020 full year, for that 45, how many? 45 lakhs into 10, 4 crore 50 into 20% for the period of 12 months. On I am supposed to only on the 9 trucks. 1 truck is sold. Total how many trucks? 10. 1 is sold, matlab 1 is gone. Balance left how many? 9 trucks. Recently I purchased 1 truck. Yes. Now how to charge? 45 lakhs into 9 trucks into rate of depreciation 20% for full year plus 50 lakhs recently purchased, rate of 20% for full year 91 lakhs. If you charge depreciation, then the balance is 1 crore 38 lakh 75,000. Done. 1 crore 38 lakh 75. Sir, if I maintaining one asset disposal account, then where are the changes, sir? Sir, if asset disposal is not maintained, this is the accounting treatment. If I maintain this asset disposal, now from here, I will throw the book value. I will throw the book value. How much is the book value? To asset disposal. Here I will throw by asset disposal. Book value I will throw. What is the book value? 22 lakh 50,000 I will throw from the asset account. Done. In the asset disposal account low. To asset account or truck disposal account low. True truck. How much? 22 lakh 50,000. But how much you are receiving by bank? 27 lakhs transfers to P and L. 4 lakh 50. Done. all remains the same, nothing you will have any change except here transfer to truck disposal account. In truck disposal account lo 22,50,000 by bank claim, profit transfers to P&L. Done. Any doubts please ask me, sir. Nothing is there. Highly important area, sir. This truck disposal, chances of asking in the exam is very bright. Any doubts please ask me, sir. Rest everything same, sir. Everything same, no changes, everything same. Same problem, if WDV is there, completely changes, sir. SLM means on the original cost. WDV means on the opening WDV I need to charge 20%. Same example, same case lo, by balance drawdown how much? 2 crore 29 lakh 75,000. On the 2 crore 29 lakh 75,000 apply depreciation at the rate of 10%. Even before years also, on the opening balance only I am supposed to apply the rate. That is the difference between WDV and straight line method. Yes, sir. Moving on to the next problem. Yes. This is nothing but the simple problem. In this problem, the application of what? That WDV rate. Earlier problem, it is on straight line basis. Now it is on WDV basis. WDV rate, written down value method, right? Earlier problem, it is SLM on original cost. I applied the rate. In this problem, on WDV, matlab that is method I will apply that rate on the WDV, not on the original cost. Rest everything is same. Yes. The machinery account of a factory showed a balance of 19 lakhs, right? Machinery account, yes, of a factory, okay, showed a balance of 19 lakhs as on 1st January. When you are solving CRD 1 law, I don't know the balance as on 1st January 2019, but in this problem law, I know the balance as on 1st January 2019. So, in that factory shed law, machinery account to balance brought down 19 lakhs, super. Next, its accounts were made up on 31st December every year. What they are telling, don't take the 31st March as a closing date, take the 31st December as a closing date each year. Okay, information. Next, and depreciation was written off at 10%. Earlier problem it is 20% per annum on original cost, means on straight line method, but under this method law, under the diminishing balance method, that is nothing but WDV method, written down value method. If it is a written down value method, the way they will express is diminishing balance method, right? Right. If it is straight line method, one more way how they will express is like on the original cost. Next, on 1st June, so you write to balance brought down how much? 19 lakhs, super. On 1st June 2019, a new machinery was acquired, cost comes to 2,80,000 and installation charges incurred in erection of the machinery worked out 8,920 on the same date. This installation expenses have to be capitalized and added to the cost of new machinery. Hence, on 1st June 2019, write to bank how much? 2,89,200. 2,88,920. 2,88,920. Yes. 2,88,000. 2,88,920, including that installation charges to balance brought down. Next, on 1st June, okay, on 1st June 2019, a machine which had a cost of 4,37,400 on 1st Jan 2017 was sold for 75,000. Which date I sold? Open one working note. Calculation of profit or loss. Calculation of profit or loss on sale of asset. Calculation of profit or loss on sale of asset. particulars amount. Particulars amount. Yes. Cost of asset on 1st January 2017. Cost of asset on 1st January 2017 comes to how much? 4,37,400. Cost of asset on 1st January 2017 4,37,400 less depreciation for the period of 12 months. Depreciation less depreciation 10% on 4,37,400, which comes to 43,740 rupees. 43,740 rupees. Reduce, you will get how much? You will get 3,93,660 less depreciation 10% on this. If it is original cost means on this only I am supposed to charge. But this is on written down value method. On this method, charge the depreciation for the next period. For the 2018, matlab for 2018 full year, how much? 39,366. Now, the balance as on 1st January 2019 or 31st December 2018, how much? 3,54,294. Now, this is sold on which date? 1st July. Now, this is sold on which date? On 1st June this is sold. Which date, sir? On 1st June this is sold. Now, depreciate for a period of 5 months. 1st June means up to May you are supposed to charge depreciation at a rate of 10% for a period of 5 months on this value. 3,54,294 into 10% into 5 months divided by 12 months. Now, this is the value as on the date of sale. Value of the asset, value of machine on 1/6/2019. Book value of machine on 1/6. Book value of machine on 1/6/2019, and you are sold less 75,000 ki you are sold for 75. This is nothing but your loss. What is the entry? Bank account to debit 75,000. Loss on sale of asset, that is loss will have debit balance. Loss on sale of asset 2,64,532. 2. Mission account, bank account debit, loss on sale of asset account, 2 mission account. Bank account 75, loss on sale of asset 2,64,532, 2 mission account. By bank 75, loss on sale of asset, and this depreciation for 5 months in the current period depreciation by depreciation for current period. Next what happened? Another machinery which had a cost of 4,37,000 on 1st January 2018 was scrapped on the same day. Same means what is this same? 1st June 2019. Another machinery which is having a cost of 4,37,000 scrapped on the same day 1st June for a realized nothing, a big zero you received. Same calculation of profit or loss, obviously it is loss only. Calculation of, better write calculation of book value of asset scrapped. Cost of asset on 1st January 2018 4,37,000. Less depreciation 10% 43,700. Balance WDV as on 3 lakh, as on that 1st January 2019 3,93,300. As this is the WDV rate, apply the 10% for a period of 5 months as on this 3,93,300. This is the depreciation for the period. Immediately come to the mission account and write by depreciation on scrapped asset. Depreciation on sold asset is that Current period depreciation on sold asset is 14,762. Depreciation on asset scrapped 16,388. And this is the value. And this entire value is the loss as you have recovered nothing. This entire value is loss as you can recover nothing. Now entry. Loss on this asset to mission account. Depreciation and loss. Now calculate depreciation on the remaining assets means on 1/1/2019 ki 19 lakhs is there. Yes, 19 lakhs is there. Now two assets, one is scrapped asset, one asset that is sold. Now I want the book value of these assets as on 1/1/2019 because the book value is included in this 19 lakhs. Remove those two book values and the balance amount is nothing but is there for a period of 12 months. Sir, in this 19 lakhs low, I am having how many assets? 3 assets. One is which is continuously there for 12 months. Remaining 2 assets which you have sold on 1st June. Now I want the book value of the asset, remaining 2 assets. I want the book value of remaining 2 assets as on 1st January 2019. Yes. Yeah. Now this 3,93,300 is there or not there? Not there. Less this. 3,93,300 is not there. And as on this one 3,54,294. This is nothing but 1st Jan 2019. These two figures 3,54,294, 3,93,300. These were included in this 19 lakhs. These were included in this 19 lakhs. Please remove those two assets because on the closing date those two assets were not there. Remove the book value of the assets as the closing date. These two assets were not there. Remove these two. Then you are having 11,52,406 which is there throughout the period of 12 months. Now charge depreciation at the rate of 10% for 12 months. Charge depreciation on the newly purchased asset for a period of 7 months. Depreciation on the newly purchased asset for a period of 7 months which comes to 16,854, 1,15,250 and the depreciation is 1,32,094 on what? On total. This is 1,15,220, 16,854, 1,32,094. By depreciation 1,32,094 and these are the closing balances. By balance carried down 13,09,232. Sir, any doubt in this depreciation calculation, sir? In this opening balance of 19 lakhs low, as of now I can bifurcate it into 3 other assets and these 2 assets. These 2 assets is nothing but one is scrapped and is sold. Now I want those book values as on 1/1/2019 because those were not there as on 31st December 2019. These were sold and scrapped. Sir, what about those depreciations already computed? See, sold and scrapped, computed. Then once again no need to compute. Remove that book value as on. So how to arrive the book value? Already I arrived. This is one book value and one more key. This is the book value. Remove these two figures. Remove these two figures. Then you will get the amount. Done, sir. Nothing is there in this problem. Only application of the WDV rate. That's it. Important for exam, sir. Come to the next question. This next question is about so far we have not covered a model when provision is maintained for depreciation, not charging to asset account. Provision is maintained for depreciation and how to account for these things if you are maintaining a provision and if you are selling that asset. So far in under the both the cases you are charging the depreciation to asset. In this case low, you are not charging depreciation to the asset, you are charging that to a provision account or accumulated depreciation, right? Right. Are you getting the difference between the earlier two problems and this one? Earlier two problems low, you are charging depreciation directly to the asset account. In this problem, you are not touching the asset account, you are creating a one new account for this storing the depreciation aside, parking the depreciation amount aside, that is nothing but accumulated depreciation. Done. Entry, earlier depreciation to asset, now depreciation to accumulated depreciation. Done. On 1st October 2018, firm purchased a machinery for 2 lakhs. On 1st October in the same accounting year, a additional machinery costing 1 lakh was purchased. On 1st October 2019, a machinery purchased on 1st April 2018 having obsolescence because outdated was sold off for 90,000. And dates are very much important, sir. And on 1st October 2019, on 1st October 2020, new machinery was purchased for 2,50,000. While the machinery purchased on 1st October 2018 was sold off for 85,000 on the same day. What is the same day here? On 1st October 2020, a new machinery was purchased for 2,50,000, while the machinery purchased on 1st October 2019 was sold for 85,000 on the same day, means on 1st October 2020 here on the same day means. Next, the firm provided depreciation on machinery at 10% per annum on original cost, means what is the method? Straight line method. 10% per annum on original cost means this is a straight line method. Next, on 31st March every year. So they are talking like what we are following is the financial year, accounting year. We are following financial year as accounting year. Next, show machinery account, provision for depreciation. Yes, provision for depreciation. If they are asking provision for depreciation means that depreciation I am not charging to the asset account. I am not reducing depreciation from the asset account. I am creating a provision for the depreciation. Are you getting, sir? Yes. And depreciation account for the period 3 accounting years. How many years? 3 accounting years. First one is for the year ended 2018, matlab 31st March 2019, 31st March 2020, 31st March 2021. They are asking for 3 periods: 31st March 2019, 31st March 2020, 31st March 2021. First, when asset disposal is not maintained, even if you maintain asset disposal, it is a simple accounting treatment, sir. First, when it is not maintained in the books of, I don't think they have given any name, fine, in the books of dash 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 machinery account, open machinery account. 1st April 2018, write 1/4/2018 to bank. How much? 20 lakhs. Entry, machinery account debit to bank account, machinery low to bank 20 lakhs. Next, on 1st October in the same accounting year, what is the accounting year? 2018. Additional machinery costing 1 lakh was purchased. Additional machinery if you purchased means entry, machinery account debit to bank account, machinery low to bank. How much? 1 lakh. Next, on 1st October 2019 means year over, completed, year completed. Yes, sir, first year completed. Now, charge depreciation for this year. Now, charge depreciation for this year. Now, open entry, sir, for depreciation. Depreciation account to debit to provision for depreciation. Don't touch asset account for charging depreciation. Create one new account that is known as provision for depreciation. Entry, depreciation account debit to provision for depreciation. And what is the amount of depreciation? On this 2 lakhs, at the rate of 10%, which comes to, on this 2 lakhs at the rate of 10%, which comes to 20,000. Period of 12 months. On this 1 lakh at the rate of 10%, which comes to 10,000. But I want for a period of, everyone sir, 9 months. Completed? Yes sir, completed. Now what is the value of depreciation? 20,000 plus 7,500, 27,500. Entry depreciation account debit to provision for depreciation. They are not asking entry, they are asking accounts. Open one new account called depreciation account. Open one new account called depreciation account. Open one new account provision for depreciation. Machinery account, depreciation account, provision for depreciation account. Now, don't touch your machinery account. Depreciation account lo post on 31st March 2019. On 31st March 2019, depreciation account lo post to provision for depreciation 27,500. Now, provision for depreciation lo by depreciation 27,500. I think it is 6 months. Yes sir, this October lo we have purchased, no, this October lo we have purchased, that is 6 months. Sorry sir, I thought it is 9 months, means I was in the old scenario, I was in the hangover of that old problems, 9 months problems hangover sir. This is 6 months, matlab I computed by taking this calendar year. So this is a financial year, that is not 9 months, that is 6 months. Now sorry sir, that is 6 months. Now depreciation comes to on 10,000, I mean on 1 lakh, 10% comes to 10,000. This 10,000 is for full year, for 6 months it is 5,000. Total depreciation is not 27,500. Total depreciation is 25,000. Total depreciation is 25,000. Yes. Yeah. This is 3 lakhs. Now depreciation law 2, provision for depreciation 25. Provision for depreciation law by depreciation 25. Now at the end of the period, this is a nominal account, will be transferred to what? Profit and loss account entry. Profit and loss account debit to depreciation. Depreciation law by profit and loss 25. Close this nominal account. Will not have any balance. Provision account law to balance carried down. It will have a balance. 25,000 it will have a balance. Closing balance. To balance carried down. Credit is more, debit is less. Write to balance carried down 25. Bring by balance brought down 25,000. Close asset account. Don't touch asset account for depreciation. To balance carried down 3 lakhs. By balance carried down 3 lakhs. To balance brought down 3 lakhs. By balance carried down 3 lakhs. To balance brought down 3 lakhs. First year over sir. What is that first year? Up to 31st March 2019 over. Then what happened? On 1st October 2019, a machinery purchased on 1st April 2018 having obsolescence. So what is that machinery which is purchased? That 2 lakhs. On 1st October means exactly 1 year and 6 months. After 1 year and 6 months, it became obsolescence and sold for 90,000. Now, how much sir? For what value you sold? 90,000. For 90,000 you sold. Now charge depreciation, calculate depreciation for a period of 6 months on 2 lakhs. For 12 months it is 20,000. For 6 months it is 10,000. Entry, depreciation account debit to provision for depreciation. Provision for depreciation on the date of sale. How much? 10,000. Now the depreciation, the accumulated depreciation on the asset what you have sold, transfer from provision account to the asset account. Now by balance brought down 25, provision account, by depreciation 10,000, total 35,000, by brought down how much, sir? 10,000, right? Now 20,000 for the last year, 10,000 for the current period. Total comes to how much? Sir? 30,000. What is this 30? Current period 6 months ki 10,000, last period full year 20. Total accumulated depreciation is there here. Transfer from here to the asset account, from the machinery account. If I maintain asset disposal means from here it will touch asset disposal. If I am not maintaining asset disposal means the accumulated depreciation on the asset sold will, from here it will touch the asset account credit side. By provision for depreciation, what is this? Accumulated depreciation so far on the asset sold. By bank, what is this? Asset sold for 90. Now calculation of profit or loss on this asset sold. Calculation of profit and loss, how much? 2 lakhs K purchase, last year full 20,000 depreciation, then 1 lakh 80, current period lo how much? 10,000, 1 lakh 70, and I sold for 90, then how much? 80,000 is the loss. By profit and loss, this is loss on sale of asset. Then you will have by balance carried down, how much? 1 lakh. Are you getting? To balance brought down 1 lakh. Now come to the depreciation. Now I am having an asset which is purchased at 1 lakh. This asset is there in the year 2019 for the full year. Charge depreciation at the rate of 10%. Entry, sir, depreciation account debit to provision for depreciation. Come to depreciation account. Right, to provision for depreciation 10,000. Total by P&L transfers to P&L 20,000. Come to provision for depreciation, right, by depreciation 10,000. Are you getting? Next, what is the balance so far? 25 plus 10, 35 plus 10, 45, less 30, you are having a 15,000 balance, accumulated balance on one asset that is purchased on 1st October 2018 for 6 months ki. It is 5,000, for this current year full 15,000. Now by balance brought down how much? 15,000. Next, what happened? On 1st October 2020 means in the next year. Now bring this to balance brought by balance brought down. Next 1/4/2020, this is what? Next year. On 1st October 2020, a new machinery was purchased for 2,50,000. Right, to bank 2,50,000, to bank 2,50,000. While the machinery purchased on 1st October 2018 was sold for 85,000 on the same day. Now the accumulated depreciation on this asset. The accumulated depreciation on this asset. How much? First year low 5,000. Second year low 10,000. Third year low exactly for 6 months, which is 5,000. Total 20,000. Now this entire 20,000 from which account? From which account? From asset disposal, matlab from where? From provision account. The depreciation in the provision account will be transferred from provision to which account? To asset account. What is asset here? For machinery account. You are having provision account? Yes, sir, I am having provision account. Provision account lo by balance brought down how much? 15,000? Yes, sir, 15,000. This asset is sold. On which date this asset is sold? On 1st October. Means for 6 months you have used this. What is the depreciation for the 6 months? 5,000. Entry. Depreciation account debit to provision for depreciation. Provision account lo by depreciation 5,000. Depreciation lo to provision for depreciation 5,000. Now this total balance 20,000 which is on the asset sold, transfer from here to machinery account by provision for depreciation. How much? 20,000. Now on the same day you purchased one more asset. Yes, you passed the entry. That asset you have utilized for the full 12 months. Everyone, that asset you utilized in the current period for how many months? 6 months. You are supposed to charge depreciation only for a period of 6 months on 2,50,000. Right. Done. Nothing. What is there in this problem? Yes, you are supposed to charge depreciation on the 2,50,000 for 12 months, 12,500. Entry, depreciation to provision, 12,500. Come here and write provision low by depreciation 12,500 to balance carried down by balance brought down. Now, what about the profit or loss? For what value we have sold? I have sold for 90,000 and the value 80,000. The profit is there. Show that on the debit side. 1 lakh, to bank, 2,50,000 I purchased. By bank is sold for 85,000, sir. Is sold for 85,000. Means you will get a profit of 5,000. The book value is 80. 85,000. Yes, from provision bring the 20. You will get a profit of 5,000. Yes, by balance carried down. This is not that recently purchased asset. Yes, sir. On the asset purchased on 1st October 2018 for the 1 year depreciation 10,000, 2 years one more 10, total 20,000. The book value as on today 80, but you sold for 85. Exactly 2 years back you purchased this asset for 1 lakh. For one complete year depreciation on the original cost 10,000, 10%. One more full year 10%, total depreciation 20. Now book value as on the date of sale 80, you sold for 85. To profit on sale of asset 5,000. Provision, if you balance, you will have a balance of 2,50,000. Depreciation account low 5,000, 12,500 on the newly purchased asset. This is 5,000 on the asset sold. Entire amount transfers to P&L. Provision account low. This is on the asset sold. Transfer from here to machinery account. This is the recognition of depreciation for 6 months. This is what? Depreciation on newly purchased asset. That is the only thing what is there here. Close this. Now this 50,000 is nothing but 2,50,000 into 10% for a period of 6 months. 2,50,000 into 10% for a period of 6 months. Sir, any doubts please ask me. Nothing is there. Sir, one asset I purchased as on which date? One asset I purchased as on 1/1/2018 for 2 lakhs. Bring that into the asset. One more asset I purchased on 1st October 20 in the same accounting year 2018. Right? Right. Bring that into the books of accounts 1 lakh. Total value of the assets I am having as on 31st March 2019 is 3 lakhs. By, sir, if I am charging to asset account, then I will charge depreciation in the asset account. I am not charging depreciation in the asset account. Create a new account, that is provision for depreciation. Entry, depreciation account debit to provision for depreciation. Amount comes to on the straight line basis at 10%. 2 lakhs ki 10%, 20, 1 lakhs ki 10%, 10,000 for a period of 6 months, which is 5,000. Total depreciation comes to 25,000 for this first year. Charging this depreciation, transferring to P&L. Entry, P&L to depreciation. Provision account low by depreciation 25,000. Depreciation low to provision account 25. This depreciation account will be closed by transferring to P&L. Come to the next period. Provision account will be carried forward for the next period to balance carried down by balance brought down. Come to the next period. Next period low, I sold this asset as on 1st October 2019. Exactly after 1.5 years. How much? For what price I have sold this asset? 90,000 ki I have sold. At what price I have purchased? 2 lakhs. First year ki depreciation 20,000, 1 lakh 80. Second year ki 10,000, total 170. I sold for 80. I sold for 90. Then what is the loss? 80,000 is the loss. Come to the machinery account. How much you are getting? 80. By bank 80. What is the depreciation so far on this asset? Bring that from where to where? From provision account to here. How much? 30,000. Provision account low to machinery 30,000. Here by bank. How much? 90, 90. Then the difference is nothing but 80,000 is the loss, will be transferred to P&L account by profit and loss account. Next. One more asset you purchase in the next year by spending how much? 2,50,000, and the asset which you have purchased on 1st October 2018 for 1 lakh you sold in the current period, means on 1st October 2020, exactly after 2 years, for what price? For 90. For at what price you have sold? For 85,000 you have sold. For 85 ki you have sold. Entry sir. Bank account debit to asset account. Asset account low by bank. The accumulated depreciation on this asset comes to first 2 years means 20,000 from provision account transfers to here. First to recognize the depreciation for 6 months. Entry depreciation to provision. How much? 5,000. Bring here. Here to transfer to asset account. By bank in the asset account. How much? 85. Throw this depreciation also. How much? 20,000. By accumulate depreciation in the asset 25. Then 5,000 is the profit to P&L, profit on sale of asset. Sir, the 2,50,000 you purchased and depreciation at the rate of 10% for 6 months. 12,500. Entry depreciation to accumulated depreciation. Everything is fine, sir. Any doubt, please ask me. Only thing you need to carry the information. When you are selling an asset as on 1st October, you should get an idea that I need to charge depreciation for 6 months. Yes, charge depreciation for 6 months. Balance assets if they are having, charge depreciation for full year if there is no sale and all that stuff. Done, sir. Now if I maintain the asset disposal, simple accounting treatment, nothing is there. Book value from the date of sale transfer to where? 2 lakhs is the book value, transfer to asset disposal. Accumulate depreciation. Earlier I am transferring to machinery, now transfers to asset disposal, machinery disposal. That's it. Only difference is that. Earlier that provisional account low depreciation I am transferring from provision to machinery account. Now I am opening an asset disposal, in that asset disposal low to machinery 2 lakhs. By provision for depreciation 30,000. By bank 90,000. Then what is the balance? Is nothing but my loss on sale of asset. 90 by bank, 30, 2 lakhs is the asset value. You realize 90, 30 is depreciation, the balance 80 is profit and loss. By transfers to loss, transfers to profit and loss account. Next year account gets closed. Next year low, bring 1 year from which account? From machinery to machinery disposal. From provision account, bring to here how much? 20. And you are selling for 85. A book value of an asset which is worth 80, you are selling for 85. Profit. A book value of 2 lakhs less 30, 1 lakh 70, you sold for 90. Right? 80 is the loss. Rest everything is same, no changes. Only thing, when you are selling in the old case, asset disposal is not there. Accumulated depreciation, from accumulated depreciation you are taking to the asset account. Now don't take accumulated depreciation to asset, take to the asset disposal, here machinery disposal. The book value of the machine what you have sold, from throw that to the, throw from there to the face of the asset disposal, machinery disposal. 2 lakhs is the face value of the asset sold, 2 lakhs is the book value of the asset sold, throw from there to here. 1 lakh, throw the 1 lakh here. Depreciation from that to throw here. Yes, sir. Any doubt? Yes, sir. Last segment in depreciation, sir. Change in method of depreciation or change in rate, or change in useful life, or change in residual value, whatever it may be, sir. Effective that effect, the change effect shall be given on a prospective basis. What, sir? On a prospective basis. Sir, what nonsense you are talking? No, 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 no. Wait, sir, I will tell. Example. On 1/1/2020, when, sir, 1/1/2020, I purchased one machinery. Cost comes to 10 lakhs. I am charging depreciation on straight line basis method, straight line basis SLM method. Okay, sir. Straight line method, SLM method. Fantastic. Next. Rate is equal to 10%. Right? Right. There is no residual value. There is no scrap also. Very good, sir. Next. Yes. Rate is how much, sir? 10%. Now, depreciation is equal to 10% on 10 lakhs, which comes to how much, sir? Which comes to 1 lakh. This 1 lakh is what, sir? Depreciation per annum. Very good, sir. Now, if you see on 1/1/2023, 2020 full year, 2021 full year, 2022 full year, 3 years completed. Per annum 1 lakh. Now, written down value as on this date, how much? 7 lakhs. Now, from 1/1/2023, the method changes from SLM to WDV. I feel at the purchase of asset SLM is appropriate method, but from 1/1/2023, exactly after 3 years, I am shifting from one method to another method. Okay, first of all, it is allowed. Yes, sir, it will be allowed. As it is allowed. Right. Now, sir, one more thing. Earlier under SLM it is 10%. Under WDV it is 15%. Now, rate is also changed. Method is also changed. Now, how to apply these things? Sir, when rate is changed and method is also changed, now, sir, will I need to compute from day 1, means from 1/1/2020, or I need to compute from 1/1/2023 when it is changed, means I need to compute from 1/1/2023, that is under AS 10. Property, planting, equipment. Earlier AS 6 is to be, that is a different stand, don't go there. Under AS 10, under the new accounting standard, when the rate of depreciation is changed or method is changed, now follow from the prospective, not retrospective. Follow on a prospective. What is the prospective? From today, from 1/1/2023, follow your rate at 15% under WDV. Now, 15% on 7 lakhs comes to how much? 1,05,000. It is SLM or WDV? WDV method means balance WDV how much? 5,95,000. On this 5,95,000, apply at the rate of 15%. For the next year I am talking. This is 1 for 31st December 2023, done. Now 1/1/2024 for 31st December 2024, 15% depreciation on 5,95,000 into 15%, 89,250. 89,250. This is what? Depreciation. This is what? For the first 3 years, for 2020, 2021, 2022, for first 3 years, the depreciation is 1 lakh, 1 lakh, because it is on straight line method on original cost, 1 lakh, 1 lakh. This is for 2020, this is for 2021, this is for 2022, for 2023, 1,05,000, for 2024, 89,000 through 250. That's how it works. Are you getting or not? When method is changed, rate is changed, it should be applied on a prospective basis. Means from the date of change, you need to apply this effect. If you want to write, make it fast, make it fast, make it fast. Next, sir, let's go to one problem, sir, on this change in method. Read the problem. A firm purchased old machinery for 37,000 on 1st January 2017 and spent 3,000 on its overhauling. Overhauling means make it as a new one. Make it as a new one. Very good. A firm purchased old machinery for 37,000 on 1st January 2017 and spent 3,000 on its overhauling. Next, on 1st July 2018, this is exactly after 1.5 years, the firm on 1st July 2018, another machine was purchased for 10,000. Another machine was purchased for 10,000. Very good. On 1st July 2019, the machinery which was purchased on 1st January 2017 was sold for, similar to our CRD 1 if I am not wrong, and on the same day, new machinery costing 25. What is that on the same day? 1st July 2019 is the on the same day. Now, on 1st July 2020, the machine which was purchased on 1st July 2018 was sold. Can anyone tell how many machines are there? Machine 1, next machine 2, and new machinery 25,000 was purchased. This is machine 3. Machine 1 is I purchased for 37 as on 1st January 2017. Machine 2 I purchased as on 1st July 2018 for 10,000. Machine 3 I purchased on 1st July 2019 for 25,000. Done? Yes, sir. Now I sold 2 assets. Asset 1 is sold, asset 1, machinery 1 is sold, and asset 2, machinery 2 is also sold. Very good. Depreciation was charged at the rate of 10% per annum on straight line method. So up to this, no issues, sir. The firm changed the method adopted. The firm changed the method. They have changed the method and adopted diminishing balancing method. They are adopted diminishing balance method with effect from when? 1st Jan 2018. With effect from 1st January 2018, they have changed the method of depreciation and they have changed what? The firm changed the method and the rate was increased to 15% per annum. Means for the first year alone from 1st January 2017 to 31st December 2017, for that year alone it is a straight line method and that too at the rate of 10%. And from next year onwards, from 1st January 2018, the method they adopted is not SLM, the method they adopted is WDV and the rate which comes to is 15%. Done. Now, how to solve this problem. Yes. Open what they are asking, requirement of the problem. Prepare missionary account for 4 years from 1st January. Okay. Open missionary account. Everyone, sir. Open missionary account. Put the heading missionary account, debit, credit, particulars, date, amount, date, particular amount, give those particulars column. When the first, leave this much of space or leave that one full page, leave that page and put one working note number 1. Working note number 1. In that working note number 1 lo, put the heading calculation of depreciation. Put the heading calculation of depreciation. Yes. Give particulars column. Give date column first, particulars column then, date column first, particulars column second, and give 3 columns. One is for asset 1, one is for asset 2, one is for asset 3. One working note lo, calculation of amount of depreciation lo, working note lo, first one is date column, second one is particulars column, third one is asset 1, matlab machinery 1, machinery 2, machinery 3. There are 3 columns for 3 machineries. Right. Come to the problem. A firm purchased old machinery for 37,000 on which date? 1st January. Now come to the account, machinery account. On 1st January 1/1/2017, how much they purchased? 37, and how much they spent? 3,000. Any amount which is spent on asset before the asset is ready for the intended use. Any amount which is spent on the asset before the asset is ready for the intended use. You should have to capitalize. Now 37 plus 3 comes to how much? 40,000. Entry, machinery account debit to bank 40,000. Now on 1/1/2017 to bank in the machinery column lo, make it as 40,000. Next, right in the date column, working note is there, no? Date column 1/1/2017. Purchase of machinery. Bracket lo 37 plus 3. Machinery 1 column lo 40,000. 2 and 3, 2 and 3 columns lo dash dash. First machinery 1 column lo how much? 40,000. Yes. Less depreciation at the rate of how much? 10% on what? On what? Original cost. Then 10% on 40,000, which comes to 4,000. Less that 4,000. Right. Date 1/1/2018. When, sir? 1/1/2018. Right. WDV or opening WDV, whatever you want to call WDV or opening WDV. How much? 36,000. Depreciation how much? 4,000. What is the entry for depreciation? Depreciation account to debit to machinery account. Machinery account lo, right, by depreciation how much? 4,000. Close this account for that year. Debit side 40, credit side 40. By balance carried down 36,000. 1/1/2018 to balance brought down 36,000. Completed. Next. From this date onwards, the rate of depreciation is changed and the method of depreciation is also changed. Right. On 1st July 2018, another machinery was purchased for 10,000. Entry, sir. Machinery account debit to bank. Right. 1/7/2018. Right. To bank. How much? 10,000. To bank how much? 10,000. Completed? Yes. How much? 10,000. Come to that working note. Give the date. When? 1/7/2018. How much? Purchase of machinery. Purchase of mission. Mission 2 column low. Mission 2 column low. How much? 10,000. Mission 3 low blank. Mission 1 low blank. Less. At the end of the year. When? At the end of the year. Means when? 31st December 2018. I need to charge depreciation. Less depreciation. We are having two assets. One asset purchased on 1/1/2017. One asset purchased on 1st July 2018. Now, for the year 2018, that first asset which is purchased on 1st January is there for the full year. Depreciation at the rate of 15% on 36,000. Depreciate at the rate of 15% on 36,000. How much is the depreciation for asset 1? Less depreciation at the rate of on. It is at 15%. Change of method and change of rate. If it is an original means, I need to apply this 15% on the 40. But it is a WDV method. Right? 36,000 into, what is the percentage, sir? 15%. How much? 5,400 is on which asset? On asset 1. Come to the asset 2. This asset is there only for a period of 6 months and the rate of depreciation is 15%. 10,000 into 15% for a period of 6 months divided by 12 months, which comes to 750. Now for machinery 1, the depreciation for the year 2018 full year is 5,400. For machine 2, the depreciation which comes to 750. Now write in that machinery account low, by depreciation for in the asset account low, machinery account low, by depreciation bracket low M1 stands for machinery 1, 5,400. By depreciation bracket low M2, 750. Sir, why can't I club together? You can also write that also. By depreciation and add 5,400 plus 750. 6,150. Right. By balance carried down. How much you will have by balance carried down? 36,000 plus 10,000. 46. 36 plus 10,000. 46 minus 6,150. 39,850. 39,850. Right. Done. By balance carried down. 39,850 for 1st January. For 1st January 2019 to balance brought down. How much? 39,850. Next. Next one, sir. Next one. On 1st July 2019, go to the working note number 1. In that working note low, if you reduce depreciation for mission 1, 36,000 less 5,400. 36 less 5,400. 30,600. How much? 30,600. That is what? WDV as on 1/1/2019. Written down value as on 1/1/2019. Next one. WDV as on 1/1/2019 for mission 2. 10,000 minus 750, 9,250. Right. On 1st July 2019, the machinery which is purchased on 1st January was sold for 28,000. At what price you sold? 28,000 ki you sold. Now immediately charge depreciation for a period of 6 months on the asset sold. This asset is having a book value which date as an opening date? Go and see the first column number 1, 30,000. Yes sir, 30,000 how much? 30,400 or 600? Yes. Apply 15% depreciation on that. You will get depreciation. $30,600 into 15% depreciation. That is for 1 year. I want for 6 months. 2,295. 30,600 less, right in the working note, less depreciation. 30,600 into 15% into 6 months divided by 12 months. 2,295 is the depreciation. Immediately come and write on the credit side of that. By depreciation on mission 1. 2,295. Now. Yes sir. I have sold this asset. What price I have sold this asset? For 28,000. 30,600 is the opening value. 2,295 is the depreciation as on the date of sale. 28,305 is the value. But I have sold this asset for what? How much? For 28,000. The book value is 28,305, but I sold for 28,000. Now write the entry. By bank, how much you are getting? 28,000. By P&L, how much is the loss? 305. By bank, by P&L, by depreciation, that is already written 2,295. First by depreciation for 6 months. By bank, how much you are getting? 28,000. But what is the book value? As on the date of sale, 28,305. That is the loss. By P&L, 305. Done. On the same day, here what is that? On the same day, 1st July 2019. On the same day, 1st July 2019. On the same day, new machinery costing 25,000 was purchased. On the same day, new machinery costing 25,000 was purchased. Entry. Machinery account debit to bank. To bank. This is machinery number 3. Purchased for 25,000. Entry. Machinery account debit to bank account. Date column 1/7/2019. Now on the working note lo yes, come to the working note. Mission 1 is sold, right? Mission 1, remove that mission 1 column, come to the mission 3 column. How much you purchased? 25,000 I purchased, right? In that 25,000 in mission 3 column. Yes sir. Now put one more column, depreciation. First of all, mission 1 is there or not there? Not there. Depreciation will be applicable for mission 2 and mission 3. Mission 2 is there for throughout the year. What is the book value? 9,250 into 15% for full year, 1388 for machinery 2. For machinery 3, purchased for 25,000 into 15%, 3750. That is for full year. But this machinery is there for only for 6 months. 1875 is the depreciation for machinery 3. 1875, 1875, 1388, 3263 is the total depreciation on these two. Right, by depreciation and mission 3. Can anyone tell what is the two balance brought down? Perfect, perfect, perfect. Yes. Excellent, sir. Done. Now, two balance brought down how much? How many assets? Two assets. That two balance brought down is for how many assets? Two assets. One asset is sold on 1st July. Similarly, charge depreciation for 6 months. Charge depreciation for 6 months on this asset sold. Compare with the book value I sold for 2000. $9,250 already it is 15%. Then it is 7862 into 15%. It is 590 is the depreciation on that. Right, by depreciation 590. And take the book value and compare with this 2000, you are having loss. By bank 2000, by P&L loss. And this 25,000 machinery charge for the full year, that is there for the full year. 25,000 already, how much depreciation charged on this? On this 25,000 already 1875 depreciation is charged. Balance left how much? 23,125. On this 23,125 apply 15%. 3469. 3469 is the depreciation on this asset for the full year. 44,000. I don't think any explanation required for this. Next. Here 28,000 and this is loss on sale of asset. You have to write loss on sale of asset. This 305. Working note low, 3 columns. 1, 2, 3. You have sold for how much? Sale proceeds 28. WDV as on the date of sale how much? And 305 is what? Loss. Charge depreciation 590. WDV 7272 and 5272 is the loss by P&L. 3469 depreciation. I calculated and show also. I showed this one. And come here to balance brought down by depreciation 6150 by balance carried down. Come to here to balance brought down 39,850 to bank new asset by depreciation 2295. I shown how it got sale and this is also this is, and you are having by balance carried down 30,987 to balance brought down 30,987. Done. Yes, depreciation 590 I shown just now, that is how it came by bank. This is loss P&L and this is the depreciation and this is the closing book value of one asset. We are having 3 assets, 2 were sold. This is only for one assets, to balance brought down. I hope you got the clarity.